kind of message do I want to be setting up? This is on TradingView here. Again, it also works in Thinkorswim and some other platforms as well. So let's have a look at a few other examples. So someone before said they wanted to look at AVGO. Okay, this is on the daily chart, I think, right? So let's look at AVGO. So we had AVGO is right here. So we just received a new buy signal. It hasn't reached the free profit target yet. We just received it a few days ago. And so far the stock is up about 5-6%, right? So the profit, the free profit target for this stock is much higher because it's more volatile. Christina said she wants to look up Microsoft. So let's look up Microsoft. Show you that here. Sorry guys, but I have a screen resolution situation here. Yeah, we'll look at intraday as well. We'll look at the Nasdaq futures as well. I think there's a bit of a data feed issue because of the Nasdaq situation. They have the futures, so I'm going to quickly just change something here. Just give me 1 second. I apologize, but I do want to show you just quickly so you can see this on the other charts as well. So let me show you this here first. I'm going to quickly bring this down so you can see this. You can just keep looking at this while I change my charts back to a proper time frame so you guys can see this also on the daily charts. Again, I apologize for that. It's typical kind of stuff when you have a half a trading day and stuff is a bit delayed. But here is Microsoft. Here we go. Okay, finally got this right. Here we go. Okay. Here we are. Okay. Here we go. Okay. So someone was asking for Microsoft before. So this is Microsoft. This is the daily chart. So you can see, whoever asked, was it Jeff, I think? So we received a new sell signal on Microsoft. And again, we got alert in real time on the 5th of November. And you can see the trailing stop in place. And ultimately, the stock ended up going down to the free profit target. Now, you guys all know what to do at the free profit target, right? We close half the position. So if I would have bought 2 put options, I'm going to close half of it down there. So I will buy 1 put option. I'll sell 1 of them down here, right? Now, you can see how the trade is evolving. Now, Microsoft has bounced a little bit since then. But if I would have, let's say, even just if I would have just shorted the stock, I'm now already up on 5% of gains. You see? So it's going to be very difficult, if not impossible, for me to lose money in this trade. Because guess what? Look, the entry level was right there where I'm drawing this blue line. So even if the stock right now were to go all the way up here, right? You can see the trailing stop is actually below. So I can't lose money anymore in this trade. Yeah, so we'll look at futures. So someone wants to look at Nasdaq futures. Of course, I will tell you, that's probably the biggest thing that I trade is Nasdaq futures and S&P futures. So I'm happy to show this to you guys if you want to quickly right now, if anyone wants to look at that intraday. Yeah. So, I mean, obviously we had a futures issue earlier today, so it's probably a bit difficult to show you this with the overnight futures today. But this was just on Wednesday when we had an actual full trading day. Do you see, this is the Nasdaq futures. So everyone was asking for Nasdaq futures. This is Gerald and a whole bunch of other people were asking. So you can see we have a buy signal that came at on Wednesday, right? Wednesday morning. And then at the same time, we reached the free profit target. So once I have the buy signal, I also get the free profit target automatically on my chart. And when that buy signal comes, I can get an alert either by email or by text message or by a pop-up trade alert or anything like that on all the different platforms. And you can see, if, let's say I would have bought two futures contracts. I reached the profit target here. At the very least, I'm going to close half of it here. And again, notice that once the free profit target is reached, notice where the trailing stop is. So once I reach the free profit target, look at where the trailing stop is. It's the purple line. It's now here, right? So on this level. But we bought, or the buy signal, I should say, came here. Right there. Does that make sense? Can you all see this? So this was the buy signal. This is the free profit target. And this here is the break even. So the reason why this is so important, remember we talked about risk management before? The reason why it's so important is that we want to make sure that we are keeping our profits when we have them. Okay? No, nothing stopped that. Look at the red dotted line. Absolutely nothing stopped that. The red dotted line kept, right? Nothing closed below the trailing stop on a closing bar basis. We don't. This is a 5-minute chart. So the S&P at that point rallied about 60 basis points. This is just a futures contract, right? But it happens in all the time frames at the same time. So we have both a day trading and a swing trading mode that basically is made for different volatility of intraday versus daily. All right, so that's how these free profit targets and trailing stops are determined. Okay, before I want to just quickly show you one more example, because in the interest of time, I know we're running a little bit behind time here, but I want to make sure we get Jeanette back on time here in just a second. But I want to just quickly show you, for example, Oracle. Right, so Oracle was one of those stocks that, of course, everyone was very, very bullish on. And then we received a sell signal. Again, whether it's buy or sell signal, it gives you equal amounts of opportunity. It's not like this only gives you buy signals. It also gives you sell signals for those people that want to. So again, you can see we get a sell signal. And then again, there's a trailing stop and the free profit target. And it tells us this in real time. So this would have been the time to maybe buy 2 put options. Or if this was a buy signal to buy 2 call options or 2 shares of stock or whatever, or inverse ETF, whatever you want to do. And then ultimately you can see it reached a free profit target, and then we had an opportunity to keep the rest of the position on. So since that entry signal, by the way, just so you know, Oracle is now down 26% or more. A put option would have made probably about 100% on this. And again, it's impossible to lose money anymore, because look at this. Look at where the entry point is. The entry point was there. Okay? But look at where the trailing stop is. The trailing stop is here. So even if I get stopped out in the rest of the position, the worst I could do right now on this is make about 17, 18% on the stock. So that's probably about 80% or 60 or 70% on the options. That's pretty cool, right? Okay, so now let me just quickly talk about this before we take on more questions. And again, I want to make sure we keep Jeanette on time here. Otherwise, that wouldn't be good. So if you, as I promised, everyone that wants to can have access to the indicator, and you can use it on multiple different platforms. We are running one hell of a deal today for Black Friday, as you'd imagine, 50% off. It pains me to say it, but hey, here it is. So it's a 50% off deal of the indicator for a full 12 months for just $397. Now you can use the credit cards, you can use the PayPal, and you have any questions, you can also call the phone number. Now you can get a full 12 months for this. What you're also going to get is access to a what we call a browser-based version of this indicator, which essentially is one that if you don't want to install the indicator, you can pull up on our website. You get a full 3 months access to that as well. We're not taking anything away from you in that sense. We're just also giving you the option to have it on $397. It's Black Friday. It's only today, 50% off. So here's how it works, right? So we're going to send you our favorite trade, throughout the week. And again, it's all $397 for a full year. So if you want to use the indicator on any of these platforms here, right, we can give you access or install it depending on what the indicator or what the platform is. So for example, on TradingView and Wealth Charts and Metastock, it's just a matter of giving you access. On Thinkorswim and NinjaTrader, you can install it. It's super crazy simple. We can help you do it. It takes like a minute. So that's there. Now, if you want to day trade, you will have to install it on one of these platforms, right? And you get a full 12 months access to the indicator for that. You can also swing trade, of course, on the installed version. If you only want to swing trade, you can use the browser-based version. And the browser-based version is this one here. So there's nothing to install. It's literally just another tab on your browser. So, and you can see every single day the scanner gives us brand new sell signals. So this has a built-in scanner. We're also going to teach you exactly how to scan for this and how to use the process in our upcoming members session. So you get a full 12 months to the indicator itself for $397. For those people that only want to swing trade, so you also get 90 days to the browser-based version. So basically a whole quarter in addition to that. And we send you trade alerts as well, just so you know. So our favorite trade gets emailed out to you guys. So here's your Black Friday deal, right? Just to repeat this, you're getting the trender indicator for a full 12 months. That's normally $9.95, and today it's just $3.97. So as a bonus, you're going to get 90 days of the Swing Trader Pro free, and that's basically a program of $1,295 included there at no extra charge. So it's a hell of a deal. It's actually more than 50% off, but again, we don't want to exaggerate, so you kind of know what the numbers are there. Now, I would say really critical right now is that you have an opportunity to actually upgrade to a full year of the browser-based version as well for an 85% discount once you purchase this, in case you want to do that as well. So we'll go through that here in a minute. I do think it's critical that you guys all join our next member session. We have a bunch of bonuses as well. One of the bonuses you're getting 3 additional strategies in our members area. One of them is a shorter term trade strategy. One of them is a swing trading strategy, and one of them is a longer strategy as well. Joel, it's just like I said, it's just another $199 for the full year afterwards for the scanner based version. So you can upgrade for just another $199 for the full year to the scanner based version if you don't want to install it, right? Otherwise, you don't even need that version. But the browser based scanner version is really nice because it doesn't you don't have to install anything, and it has the scanner built in. And of course, again, with the whole thing, we send you guys trade alerts as well and our favorite ideas. The next member session, this is pretty critical. Our next member session is coming in early December. So look out for that. We're looking forward to having you guys on board for that, because in these member sessions, we're going to teach you exactly how to use the indicator, how to scan for it, how to even how to build watch lists, right? And of course, exactly how to use the indicator in general, right? So that's what this is all about. Let's see. I'm going to quickly, I know we only have a couple minutes left, so I want to make sure we take a couple more tickers that people seem to be putting in. One ticker was, oh, silver. Sure. We promised you we would look at silver, right? So let's have a look at silver. I'm going to quickly just go up to this so you guys can see how this works. So it's one hell of a deal, folks. If you want to get a deal, you know Black Friday doesn't get any better than Black Friday deals. So we would encourage you to take advantage of this. Okay, let's have a look at silver. So we talked about silver before, right? We didn't actually look at the chart. We can look at the SLV chart. So here is, for example, the silver signal that we just received here. So this is a daily chart of the SLV ETF. You can see it right here, SLV, right? So we received a buy signal. And then let's say it would have bought 2 call options or two shares of stock or multiples of course, and it reached the free profit target, right? Now notice that the trailing stop never got hit because we never closed below the purple line. So the silver trade is still on. And so far, silver today, of course, is up another nice chunk. So far, this trade is up 10%. So imagine if you would have received this trade idea, right, with the trend momentum indicator. Again, it can send you an alert on any ticker that you like. Every single time there is a new alert, a new trade to do, whether it's on an intraday basis, on a 5-minute chart, or on the daily chart, or weekly chart, whatever you want to use. And so that's how it works. So again, we would have bought 2 shares of stock or 2 call options and reached the free profit target there. And again, so far, again, silver today is up 4.3% almost on the day. So anyone that took that signal should be in a pretty good position. Palantir, sure. Let's have a look at Palantir. This is for Stephen. So, Stephen, we received a sell or short signal in Palantir, and you can see it became valid right there. It then reached the free profit target, right? And so that made about 6% in this case. An put option would have made about 3, 4, 5 times that. And now we have a trailing stop, and the trailing stop is right here. Now notice this. This is for Stephen. Notice that the entry point was there. Let me draw this in. So this is the entry point, right? Where we would have bought the put options, let's say, or shorted the stock or whatever. Notice that the entry point is there, but notice that the trailing stop, the purple line, is here, which means that I cannot lose money in it. I think the worst I can do in the stock is make about maybe 3-4%. Okay. Yes, empty field. Yes, he's asking if he doesn't use Thinkorswim or TradingView. If I use the scanner-based version, can I later switch to the down. Yeah, you get both, right? You get both. So when you start with this, you're going to get access to both. So you're going to get a full year of the quote unquote install version, which is what I've been showing here for 60 minutes. And I'm going to switch back to Jeanette here because I don't want to let us fall behind the schedule here. But you're going to get a full 12 months of this deal of the indicator. If you want to use the browser-based version, you also get a quarter of that, so 3 months, right? And we're not taking anything away from you. We're just giving you the option to have that. Does that make sense? But yes, empty field on your question, that is exactly correct. So you get both is the point. A full 12 months. If you want to upgrade to a full year also of the scanner-based version, it's just another $199, which you can upgrade to once you purchase the 397. So it's a hell of a deal. Again, it's way more than 50% off. Actually, I think our math or my math there was a bit off. So anyway, Jeanette, I don't want to let you fall behind. I'm going to pass it back to you. I don't know if you have anything to add, but I wanted to just at least make sure that I keep you on track here.
No, that's perfect. Thank you, Serge. I'm going to go ahead and take the power back from you. And appreciate you being here with us today. And I hope you have a great rest of the afternoon. And I'll talk to you later.
Thank you, guys, and happy Thanksgiving again.
Yo, yo. All right, everybody. Y'all give it up for Serge Berger. I'm going to put my screen back up. And this is a little housekeeping. What we do at the end of each speaker is we go and we rank them. So Serge's link is steadytradersecrets.com/early. I have put it in the questions box and in the chat box for you. It's hyperlinked in the chat box, so you can go grab it there. All right, so we're going to rank him as a guest today from 1 to 10, 10 being the best, 1 being he should never be invited back ever again. And I've never received a low ranking like that on him. So I'm hoping I already know the answer to the question, right? And if you have feedback for Serge, I'd love for you to pop it in there. Anything you want me to tell him about what he could have shared different, better, or questions that you have directly for him, I'll grab them and send them his way. All right, 8s, 9s, 10s. We have a 6 on the board, and that's okay. Same person came back in with an 8. So maybe you changed your mind, Johnny. I don't know. Maybe you changed your mind. 10s, 9s, 8s. All right, this is all great news. That tells me that we did our job today. All right, so it's steadytradersecrets.com/early. I see what you're doing over there. I got you. All right. So we have Price Headley up next, but before we do that, it is, of course, quiz time. And for those of you who just now signing in, we are also streaming live on YouTube. I think I finally got that up and running. So if you want to go check it out on YouTube, if you go to webinar, we urge you to go to our Trade Thirsty channel on YouTube. So the rest of the day, we have Price, then we have Silas, then we have Raul, and rounding it out with my crazy Aussie, Johnny Seville. So hopefully you guys will stay in your seats and be here for all the great presentations today. This next quiz is going to be for another $50 from all of us here at Trade Thirsty. You can do it by Amazon or PayPal. It's up to you. Those are the 2 ways I can pay. And a little later today, we are going to be giving away a travel screen. And there's a picture of it that I got off Amazon to show you the travel screen. It's an 18.5-inch travel screen. That's going to be a grand prize we're giving away. So it's only for attendees. You got to be here to play. All right, so there's your quiz question. Which president resigned in 1974 over Watergate? This is for $50. Bulls and Bears. All right. Empty field. Steven. Steven. I don't see your last name, but I can marry up your email address if you give it to me. You are our winner. And the answer, of course, is the old Nixon. That old goose. Nixon it is. Steven, send me I see you. Okay, I just got your email address. Thank you very much. Let me know if you would prefer PayPal or if you would prefer Amazon gift card. All right. So here we go. There's my guy, Price Headley. Been great friends for a very long time. I broke bread with him a mini up near his home in Lexington, Kentucky. Trade shows, parties. Price, I think I have pictures dating back to us 15, 20 years ago. Crazy talk.
Love it. Great to be with you, Jeanette.
All right, buddy. I'm going to go ahead and turn off, give you the power so that you can take over the screen. Just give me 1 second here.
Beautiful.
Where's she at? Attendee. I always, take a little treat or something to his sister-in-law, and I took her some flowers, and so she's in the kitchen trying to prepare the meal, and she throws the flowers in a vase and realizes I've tied them off, and she gets a knife out instead of scissors and starts cutting on the string tie and slices her pointer finger wide open. Like, this is like 20 minutes before lunch is supposed to be served. And so
Yikes.
all hands on deck to try to stop the bleeding. I was like, please, Lord, don't make her need stitches, but she didn't, so it worked out.
I think of the Julia Child, Dan Aykroyd, Julia Child on Saturday Night Live. You got to watch that, folks, if you haven't seen that.
Is there blood spewing everywhere in that clip?
They had a lot of fun back in the 70s with it going everywhere. Yeah, Saturday Night Live.
I'm totally gonna go watch it. I can visually see it now. And I love that you put TradeGiving and you have your nice turkey spread there on your screenshot there. Thank you. Thank you for recognizing us at TradeGiving. I try to tell all the people here today that we all make the sacrifice to be here today, and we know that they did as well. It's a price. I'm going to give you a full hour at 6 after, so you can take it to 6 after if you like, or you can end it at the top of the hour, whatever works for you.
Well, thank you, Jeanette, and good day, everybody. Day after Thanksgiving. I hope we're recovering from all the blessings that we've all been given, and that's really what it's about. Is right, thinking of what you're grateful for and who you're grateful for. Right, the loved ones and those who've impacted our lives. I'm grateful for you being here today. Like Jeanette said, taking your time, because really, when you're trading and investing, when you're looking at the journey, it's a constant education process, right? So you've got to get yourself aware of a lot of possibilities of things you can be out there, but then you have to come back around and you have to get yourself focused on what you're going to do about it, right? You can have all the knowledge in the world, but if you don't apply it, if you don't put it into action, the knowledge itself is not worth anything until you apply it. So we're going to show how we apply it with just a really laser focused way to trade NVIDIA and NVIDIA only. So I'm not going to be going through a bunch of other charts of a bunch of other securities. I know that's always a temptation, but my results have dramatically improved when I just say, this is what I'm going to trade and only what I'm going to trade on a variety of key systems that we have at Big Trend. So let's get into it. And again, our TradeGiving event, thanks Jeanette for including us in such a wonderful lineup of speakers and fellow traders. As we get started, just a quick reminder, the information provided in today's presentation is based on our proprietary research, and it is intended for illustrative purposes only. What we're talking about here should not be considered specific advisory recommendations. Remember, stock and options trading have large potential rewards, but guess what? They've also got large potential risk. We're going to talk about how we manage both risk and reward in a couple of key ways. We like to trade NVIDIA here. Remember, the past performance of any trading system or method is not necessarily indicative of its future results. Future results will vary. A big part of trading success in my 36 years of trading is to make sure that you keep implementing things on a small but steady and consistent scale. I think that'll keep you in the game for the longer haul and build your confidence as well as your consistency. See our terms of use on our bigtrends.com homepage. Quick overview on me. I've been trading stocks and options for 36 years. Like Jeanette said, she and I have known each other for a good part of those. And blessed to launch Big Trends just over 26 years ago, November of '99. Just had our full 26-year anniversary, and a lot of y'all to thank for supporting Big Trends over the years. So if you're new to Big Trends, welcome. It's all about education first, right? Laying a foundation. It's also about a systematic way to do things. You cannot be emotional, you cannot be subjective, and you cannot be haphazard in how you go about implementing your trading and investing process, right? You've got to have it clear and precise, and knowing what you're going to do when it works. Guess what? Also knowing what you're going to do if it doesn't. Like never getting in a hope mode, never letting yourself get into that slope of hope can be very costly, right? So like I said, as part of the TradeGiving event today, I'm actually going to say, instead of taking it broad and trying to cover a jillion different things, I actually think it's much more effective to get laser focused, in this case, on the largest stock on the board, NVDA. And, NVDA, of course, has been such a big name stock winner when it comes to, of course, the AI revolution, right? They're at the forefront of artificial intelligence chips. And of course, now recently, of course, there's been all this talk about an AI bubble and all this talk about Google taking over NVIDIA with their Google's chips and all this stuff. So there's a lot of back and forth, right? But the reality is that it's still become the biggest stock out there because of its success. And so, a big part of this is then saying, okay, what that means is a couple of key benefits to you. One, of course, you want to trade the leaders, right? As I say, the AI stocks here, just since OpenAI debuted back in late 22, They say that the AI stocks have driven something like 75% of the overall market's gains, 80% of the capital expenditures, and basically like I think it's maybe it's 80% of the revenue gains, and then maybe 100% of the capital expenditures going into this economy, right? So if trading AI, or if you're believing that it's a bubble, well, guess what? Then you would have missed out on most all the market gains over the past 3 years. And the question is, where are we going next, right? Sure, all bubbles can eventually pop, but the reality is you've got to trade what's in front of you right now. And right now it's become really the dominant force in the markets today. So NVIDIA to me is the ultimate way to play it. We call our system NVIDIA Options Master, NVDA Options Master, because it's about learning how to trade it across a couple of different time frames. So we're going to share with you the multiple approaches that we like to use, both on a bigger picture and on a shorter term swing trader standpoint. So let's go ahead and kick off today's event with a winning trade example. Then I'll go into more details about how this NVDA Options Master strategy works. Now, this is our daily chart bullish setup system. Okay, so for the daily candles here, of course, you know what candles are about, right? The red candles we close below where we open on the day. The white candle with the green surrounding there, we close above where we open on the day. That's not what we're trading. We're not trading candles in and of themselves. What we're trading is tied in this daily chart view back to what have the recent highs and the recent lows been in NVIDIA, right? So a lot of people will hand draw their support lines and spend a lot of time on a lot of manual effort. And what we like to do is rather say, let's let the system draw it for us, right? So what we have here is a Donchian channels high and low tracking. So what those high and low blue bands are, I'll show you. The recent highs on NVIDIA are being marked by the upper blue line, and then the recent lows are being marked by the lower blue line. Now, if you get a close outside of there, in our view, historically, that's kind of an area where you can expect some reversals back in. This has got a 1-day lag. This is how we are able to close outside of there, because when we closed below the recent lows back here, that was on September 17th, we called out to our subscribers to say that should bounce back. That's it. And by the way, we're not using the other side to buy puts. We're just saying this is a bullish setup only. We'll show us our bearish setup in a little bit later. It's a little different. A lot of times you want to trade bearish setups differently than bullish setups, because stocks can take the escalator up, it can take the elevator down, right? The character of bull and bear moves can be quite different. We'll get into that later. But the bull moves is like when you get that kind of quick violation of recent support. A lot of people would say, oh, well, that's a breakdown of the recent lows. You can see looking back here that those lows are violated. And then what we have here is that we say, look, we think it's going to snap back. So what we call out for subscribers, typically on our daily system, we call it out for NVIDIA Options Master subscribers via real-time email alert and real-time text on all these trade alerts that we send out to our subscribers here. We'll send it out in the final about hour of the trading day, final 30 to 60 minutes of the trading day. So we'll send out through a real-time email. We'll also send it as a text alert if you get signed up for that after you get the email sign up. We send you all the instructions on how to set up text alerts. I recommend getting the text alerts as well as the emails. You never miss a trade getting in or getting out. So what we do at the end of that day there is we say, look, go buy these October 2nd expiration. It's the first Friday in October, of course, long expired now, a couple of months later. But point being that, look, we're saying we don't want you buying something that was just recently closed out and then getting confused. It's like, no, you shouldn't be buying anything off of what I'm talking about here. But we'll tell you when our next signal happens in real time when you become a subscriber. Point being, we cut off our subscribers in the NVIDIA Option Master system by this October 2nd, 185 strike calls. Now notice where the stock is trading when we say that purchase. The stock's trading just a hair over 170, right? You draw it across here. It's just over 170 there, maybe 170 and a half near the end of the day. You go, hold on, it's at 170 and you're buying a almost 15-point out of the money call option. What are you guys thinking? That's a high risk option. Well, guess what? Yes, these are not widows and orphan strategies, right? These are strategies that we say, okay, they involve risk. And so we remind subscribers that any new subscriber coming in, I will always tell you, start small, start super small. Start making your first objective when you become a new subscriber here at Big Trends to any of our programs as learning the system and executing the system consistently on a small scale. When you do that regularly and consistently, then you can build your size up after you've let the system prove it to you and after you've gotten comfortable with how winners look and how losers look. And we're going to talk about both sides here today. But the point being is that, yes, it's a growth-oriented strategy, aggressive growth. right? And you'll see how we've done because of that aggressive growth, but also reminding you that yes, it involves risk. We're recommending in all these slides, we're saying, what if you put $1,000 into each trade? You could put less, put a lot less, and you might want to start with a lot less. But if you put $1,000 into each trade, that means in this example, you could buy 6 option contracts, call option contracts, that would cost you $150 a piece, right? They're quoted at 1.50. Remember, on every option contract, you got to multiply times 100 because each contract controls 100 shares. Oh, by the way, what would it be if you were buying 600 shares of NVIDIA that we're controlling on this trade? 600 shares of NVIDIA would have cost you just over 100 grand at 17 grand a piece on 100 shares. So we're controlling over 100 grand of stock for just $900 in this example, 150 times 6 contracts. Okay, so we buy those October 2nd calls when it's September 17th. Right now, so we have typical in the daily system about 3 expiration weeks out is what we usually like to purchase. Now, since I've marked up my charts here, let me clean it up for a second here and kind of just say, okay, so what happened after we bought it there, right? You see our circle there. We're buying there. Well, it gaps up the next morning. In this strategy, what we say with our daily systems is that we're targeting triples. So anytime you can triple your investment on the daily system on both the call purchases and later when I show you the put purchases, we're just going for triples on the whole thing because we're saying that we are willing to take up to what we invested as our risk here. And a lot of times people will remind you, oh, well, why don't you use a tighter stop? Well, if you use a tight stop, even a moderate stop with NVIDIA, you can get whipsawed out very easily. You know, these tech stocks can swing very wildly from day to day. As you've seen with this market here in 2025, it's been a year of anything that comes out of Washington, D.C., from our president, anything that comes out from across what's happening in the Middle East, what's happening in Russia, what's happening in China. There's loads of things that are happening on a day-to-day basis. Your objective is to not get whipsawed by that noise. Your objective is to hang in there for the bigger opportunity. What we typically like to set up in just about every system I got at Big Trends is that generally I like to get about twice my reward or more for the risk that we're taking. So if we're taking a $900 risk here, I'd like to make $1,800 or more on this trade, right? And so that's what happens 3 trading days later here. You see that we cash it out 3 days later as it ripped up to almost the strike price. Now, here's a key lesson for those who are new to options trading. And by the way, I love to get you involved here. I don't see how many are on there, but maybe Jeanette, if you can share with me the presenter box, I can actually see this. But how long have you traded options? You know, because if you've never traded an option before, you probably will not understand this as well as those who have traded options for a while. That, you know, if you're new to options, the idea here is that, look, if I buy a 185 call, that means it's got to get over 185 for me to make options, folks. Wow, 0 for never trade an option in your whole life, and you're right place to start learning right here. Or I put a 36 from our 36 years of options experience. We've got a 5-year trader, a 1-year trader, 7-year trader, 4-year trader, 10-year, 6-year, pretty experienced group with not seeing any zeros right off the back, 15, 5. So, you know, I don't name names but I applaud you for putting it. 30-year trader, okay? I don't name other names because I don't want to put anybody on the spot. If you're a new trader, worrying about that, don't worry about it. If you're new, sometimes that's a benefit. You don't have bad habits to break, right? You can learn fresh. But if you've been around 30 years, yeah, you probably have made enough of those early mistakes. 1 year, but blew out a count. Okay, that's a frowny face. I get it. But that's why we're here to help teach you how not to do that. 5-year trader. Okay, so yeah, and that happens. The School of Hard Knocks happens. I had the School of Hard Knocks in options trading when I got started. I graduated from Duke University. I've been blessed with a great trading education, thanks to my parents for all the money they invested in a whole lot of great education for me. And guess what that taught me? It taught me that the harder I work, the better my grades were, right? But then when I get into trading and then I figure, well, the harder I work in trading, the more I dig in, the more I'll eventually be proven right. If I just keep working harder, it'll work out, right? Not always the case in trading, right? If you're in a losing position, you don't want to dig in and throw good capital after bad. I had to go through the School of Hard Knocks and get out of this perfectionist mindset that I've been in from having great grades in school and doing really well in school because of it, and saying, actually, I had to shift my thinking and say, you know, when I'm wrong, I need to admit it and be willing to move on and not lose as much on my losers, and then learn how to ride my winners longer. So I had to retrain myself from that earlier mentality here. And thanks, Johnny, for the kind words here. But basically, the idea here is that, look, okay, what we're looking at is okay, we're saying, okay, we want to put ourselves in a position to keep our risk capital manageable, to let this thing run to a twice our reward relative to our maximum risk. And then when we get it, we book it. We don't try to sell a partial in this daily system. I'll show you where we do sell partials on a shorter term approach in a bit. But the idea here is that take the triple and book them, Dano. Take the money and run. So if you bought 6 contracts for 150 a piece, it cost you $900. Now you're basically cashing them out at 450 times 6, $2,700, and you're making $1,800 just 3 trading days later, right? We bought it on the September 17th. The next Monday, September 22nd, we're selling it. But the point I was coming back to is that we sold it out when it's about 183, 184. We've got a 185 strike, right? So you say, well, how is it that it's not above 185 and you're making a triple? Because we bought it 10% almost out of the money, and now it's gone to just 1% of the money. That 9% move in NVIDIA has pushed our time premium up very quickly. The biggest time premium options that are out there, when you think of out of the money options that are above the stock price, the at the money that are near the stock price, or they're in the money that are now way below the stock price when it's a call. The idea is that the at the money, near the 185, those are going to hold the most time premium. So when you buy 3 weeks out and you've only been 3 days into the trade here, you're not losing much time, but you're getting a big inflation in your near the money time premium. Your 185 calls are zooming up in their values to go from 170 to up to 183, right? They're really picking up a lot of time value. You're not losing time value. You're actually gaining time premium. This is the inflation that we like, the inflation in your time premium. The other inflation is for the birds, right? We don't like inflation in the economy. That's for you gold and silver bugs out there. But bottom line is that, look, we're taking advantage of that inflation in your time premium in a relatively short period of time and not having to get it on past our strike price in a number of these cases I'm going to show you today. So, but we're out. We take that inflation and then we say, thanks very much, Mr. Market. We'll take the triple and run. We're going to show you a bunch of examples. Remember, all of them, past performance never guarantees future results. We're going to have winners. We're going to have losers. We watch also, we've got our ADX line on the bottom panel there. It's just, we like to see that also still going up when we buy. And that tells us that we're still in the broader uptrend. Now, some of the overview strategy guidelines here. We've got a couple different systems that work for the bulls. The daily system for the bears is a little different than what I just showed you for the bulls. We're going to show you all that here. So there's like 3 different things going on here. 2 of them are bullish, 1 of them is bearish. And we'll get into that, the 3 different strategies on the 2 different time frames. By the way, when I looked at the daily charts just now, when we look at 30-minute charts, that doesn't mean we're in and out in 30 minutes. That just means that it shortens up our action points to get in a little quicker and out a little quicker over about a 5-day hold for the 30-minute system. We'll get into that in a little bit. Well, which options are we trading? We keep it simple with big trends. We're just buying calls when we're bullish, buying puts when we're bearish, and then using these specific expiration dates depending on how long we think we're going to hold the trade. And so we'll get into the shorter term system in just a little bit too. Why do we like this multiple time frame approach on NVIDIA? Because it gives us a couple of different windows of opportunity, which will give us enough trades. If you're just focusing on one security like NVIDIA, we're going to probably get about maybe 7 trades, I think, a month, 6 or 7 trades a month across both systems combined, right? There's a couple times where we might overlay the daily system and the intraday 30-minute system, which holds multiple days, could overlap, or we could have 2 NVIDIA trades held at once at most. Okay, so you could have kind of double the exposure if both of our systems are firing bullishly. If they're both firing bearishly, we'd only have 1 for the daily system. So we try to limit our risk, but also try to maximize when it's working across both the daily and the intraday timeframes to maximize opportunity to load double the exposure if appropriate, but not often. So the idea here is that that's going to allow us to get plenty of trades and still have plenty of profit opportunities while still managing risk in a reasonable way here. So it's all about bang for your buck when you're an options trader, right? You're looking at a lot of leverage potential. And of course, remember that leverage is a double-edged sword. Leverage can cut both ways. It can be great when you're on the right side. It's not so great when you're on the wrong side, right? It can magnify your downside if you're on the wrong side. So we've got to keep that in mind. And that's why I always tell people, like, if you were going to invest $10,000 in NVIDIA stock, that does not mean you should go invest the same amount in NVIDIA call options, right? It's like, remember that you're oftentimes, like, you might see a leverage ratio that it could approach 20 to 1, 30 to 1, sometimes 50 to 1 with some of these strategies, right? I mean, that move we just showed you on NVIDIA before, it was about 20 to 1, right? The stock went up about 8 or 9%. We made 200%. So, we're in that 20, 22 to 1 area. But point being that, okay, that leverage will vary a little bit. The daily chart signals, we're going to give ourselves a little more time. We're going to go out 3 weeks from the entry day with the daily chart systems. The 30-minute signals, which we haven't talked about yet, that's the following week's weekly expirations. NVIDIA is like a lot of major stocks. It has every single week, every single Friday expirations. Those are called weekly options. When I got started in options trading back in the early 90s, we just had monthly options that expired the third Friday of every month. And I remember saying to the exchanges, like, it'd be great if I had weekly or eventually even daily options. And they were like, yeah, right. That's not going to happen. And then weeklies came around for stocks many years ago. And then now dailies are out there with some of the big indexes, right? So it's been a pretty amazing evolution as you watch the option space continue to grow. And the exchanges keep adapting to what people want, right? So why would we buy more time than we need, right? We don't want to buy too much time. Some people like to do that because they say, well, it gives me a little more cushion if I'm wrong. My view is if I'm wrong, I want to define my risk. When we're wrong, we admit it, we move on, but basically get more leverage with a little shorter term bang for our buck. Definitely a higher growth, more aggressive growth strategy because of that. Okay, so let's get into why you should care, looking at not me just handpicking 1 or 2 charts, but actually if you looked at every trade that we called out on our NVIDIA Options Master system, going back since NVIDIA last had its last stock split, which was early June 7th of 2024 last year. So we're right about coming up on about the 1.5 year mark since that happened, about 18 months look back. And over 18 months look back, you can see the portfolio, just on a starter $5,000 model portfolio, just putting in $1,000 a trade, never growing the amount you invest per trade, keeping it a maximum risk of $1,000. But this is with both the daily systems and the 30-minute system all implemented, would have generated more than 20 grand in gross profits. And this is gross before commissions and before subscription investment. But still, commissions have come down so dramatically in my 36 years of options trading. There's no ticket charges anymore. I'm talking about $1 a contract per side at most. See a number of brokers now not even charging closing commissions. So it's a really great time to be an options trader. Best time I've seen in my 3.5 decades in the game. So up 417% gross, $5,000 model portfolio growing to 25,853. Remember though that past performance does not guarantee the future. Future results will vary. So the idea is that you've got to make sure that you understand that, and that your goal, like I said, first goal is not maximizing your profits on the very next trade we call out when you become a subscriber. It's saying your first goal is get consistent in your execution and let the system prove it to you. Understand how winners work, understand how losers work, and get comfortable with it as you then decide how you're going to scale up your portfolio across after having some experience with a system at a smaller scale. Like I said, the daily chart, we're using Donchian channel. So Donchian is named after Richard Donchian, who developed this. I've seen a lot of people talk about Donchians where they say, like, what's in between there is the noise, and the breakouts outside of there is where some meaningful stuff can happen. And you'll see where we like sometimes some upside breakouts above the upward channel as a potential bull strategy as well. I'll show you too as part of that daily system bullishly. We're using ADX, that's the average directional movement. That is a trend following indicator. So a lot of times I use ADX to say, okay, do we still have life left in the trend? If ADX is turning up, that's usually a good sign that it's just getting going as a trending measure. If ADX is just going down, that often can be a reversal signal, okay, after a long period up. We'll show you some examples of that. 30-minute chart's going to use a combination, but ADX is actually our driving factor more than Donchian channels. 30-minute chart says follow fresh new ADX trends. We'll show you the directional movement lines. The positive DMI plus directional movement means the net new highs that NVIDIA is making. We'll track that against the net new lows, the DMI minus that it's making. And then we're looking at average true range. You don't need to know all these things right here, but you learn them as you become a follower of the system. We give all of our subscribers all the rules, all the settings, everything you would want to know to understand it, but you don't have to know that to execute the trades. We call out real-time email alerts and we say, buy this NVIDIA option right now, up to this price. Then when it's time to get out, we say, if you haven't gotten out already, get out of this thing at this price. We never leave you hanging. And then the setup for short signals uses a daily chart, similar indicators with different parameters. We'll get into that in a little bit. Let's go into the shorter term 30-minute at a time chart, remembering that these are not designed to be day trades. They're designed to be potentially up to 5-day holds. Now, and Serge just talked about it right before me, is that, getting to the free trade idea. The free trade idea is one that I have also valued for a long time as an options trader. And the free trade idea is to say, okay, you know, when I started out doing the free trade in the mid to late 90s, when I was trading my own capital, it actually is what helped me to trade a lot of the internet stocks. When everybody called them a bubble, I actually grew my account so much that it allowed me to launch bigtrends.com in November '99. And it also allowed us to get out when the bubble started to pop in early 2000. We told people that and actually got featured in a Barron's interview in September of 2000 saying, watch out below, because then it did it again in early 2002. I said, we're not done yet. We had more downside as that bubble popped, right? So you can trade those bubbles up. You can also see them when they break down and trade them to the downside too. It allows you to be flexible. But the point is that, okay, look at our strategy here. We're saying, okay, if we sell half of the double as we did here or more than a double, that's one way to do it. But what I've learned over even recent times is that we can change our target to less than a double. We might have to sell 2/3 of our position, say at a 50% gain, and that can still get you to a risk-free position on the remainder of your position. So we'll get into some of those examples too. Now, what are we looking at before we get into the double plus that we got in the first part of the move here? The blue line on the bottom panel, that's your ADX. I'll just call it an A there, okay? Okay, so the ADX, the blue line, is just turning up here late on a Tuesday. This is 30 minutes at a time charts, right? So we can pick up a signal at the end of any 30-minute close. That signal hit at 3:30 p.m. Eastern time, Wall Street time, half hour before the market close. Boom, we're firing out, buy these calls, because the ADX is turning up freshly off a really low level. And how do we know whether to buy calls or puts as ADX turns up? Because that's the criticism of ADX, is it's not showing you what direction. I've always said, overlay the positive and negative directional movement lines. The positive line shown in green here, the negative directional movement line shown in red. Guess what's happening here? You can see it very clearly here, right? More and more new highs. The positive directional movement line in green is going to be going up. How many new lows are you getting through those recent periods, even as you look it back a little further? How many new lows are you getting? Not many, right? So less and less new lows. What's the definition of higher highs and higher lows called? It's called an uptrend, right? You see the uptrend forming here. But the ADX is a way to show it to you really clearly that when you get the divergence between those positive and minus directional movement lines, there's the spread of those is widening out. That's where ADX goes, the spread of those DMI lines is widening out. This must be a trend. So let's start turning up as we get the wider and wider readings. That's where ADX will start basically following along with that to try to catch up. Guess what that shows you? It shows you that you're not too late as you get the breakout late on a Tuesday. A lot of people say, oh man, earlier in the day, stock was trading near 166 and change. And now here it is at 169.5. And now you're telling me to buy calls? You're late. Well, no, we're not late. You know, that's a big difference in philosophy, right? A lot of people want to be perfectionists and call exact lows and exact highs. If they can't get it exactly right, then they're kind of left on the sidelines waiting and watching. That perfectionism cost me a lot of not just money sitting on losers I should have been sitting on when I was first getting started trading 3.5 decades ago, but it also cost me waiting out and missing a lot of fresh opportunity, right? That's an important mindset shift. And that's what I'm asking you to kind of consider, is that look at your trading mindset. Look at how you've done this year. Let me ask you a question. I'm gonna put you on the spot. Give yourself a grade on how well you've taken advantage of this year's markets, both on the upside and the recent downside. Give yourself a grade A through F. I'm not going to name any names. I'm just going to call out what people are grading themselves. You'd think in a bull market, everybody's a genius. Okay, everybody's going to probably give themselves high scores because it's been a kind of an easy market. Guess what? It hasn't necessarily been an easy market. We got somebody giving himself a B and an 8, I assume, out of 10. A 60 out of 100, I assume. We've got an F, we've got a C, we've got a B minus. Okay, so and I even sometimes will say B plus, like, you know, like I think we could have even done better. Like I won't necessarily give myself an A or an A plus, even if I should, because I want to keep me and my team stretching. B plus, I call myself an A minus probably this year. We've done pretty well, right? But there's probably a few spots we could do better on. Like maybe we could do better figuring out how to get out of the second half of this position, right? Because we sold the first half of this position at a triple. Right? This was bought on September 9th. The very next morning, right? We're selling it out at from 116 we paid per freight contracts. We got in $116 a piece. We like relative cheap options because you get a lot of bang for your buck when you're right. When it gaps in our favor, we were thinking we'd sell half of the double or maybe even 50%, 2/3 of 50% gain. it opens at a triple almost, 197%. We ring the register on half of our position and say, we've already got a guaranteed profit now, selling 4 contracts at $345 a piece, right? We're getting out for something near almost what, 1,400 bucks, 1,380. We're out when we just invested about 924 bucks in it, right? We're already guaranteed a profit, even if the other half goes to zilch, right? But what we tend to do from there is we say, give the other part of the trade, whether it's a half or a third, give it a chance to keep running for the next 5 days. Now, in this case, we gave it a chance to keep running for the next 5 days. And you see it got one little marginal new high up to 180 up here, but then it drifted sideways, then it backed off, then it came back up. You're going, well, we still got one more day left. And then basically we're about flat from where we got out. And then we end up down a little bit from where we got out. We're well up from where we got in the first place, but we only make about 19% on the second half of our position. You go, man, you went from a triple to 19%. Well, this is why I like selling part on the front end to get to a risk-free position, because some of those trades will go on to much bigger gains, which I'll show you here, but some will not. Some will fail to fire, some will reverse, some will chop around, some will go up a little bit more. But the point is that you got to take yourself out of black or white thinking, all or nothing thinking. There's never an all-in moment. There's not the poker, Texas Hold'em, I'm going all in on a trade. You never want that, right? You want to be risk managed on every trade you do and know that sometimes they'll keep going and sometimes they won't. And the idea is that you give yourself a chance for more upside. You guarantee yourself you cannot lose when you sell half at a double or 2/3 at 50%. So the idea here is that, okay, yeah, we want to focus ourselves on how can they keep going, but also how can we go ahead and hop out with some time left if it doesn't keep going. We sold this on a Tuesday afternoon. It was going to expire that Friday. So we still have some time value left, right? We got out for 138 when the thing's back to 175, and we got the 177.5 strike call. So those are now out of the money again with only about 3 trading days left. That's why they're only worth 138. We say we're not going to hold in hope to the end of the expiration period. We're just going to say, okay, go ahead and take down that 19%, add up the 2 pieces, and you still made $1,000, $1,004 gross before your $8 in, $8 out, $16 maximum round trip commission. Okay, keep the vast majority of what you earn. But the point of all this is that that's why selling partials and then trying to ride the rest for 5 days, we think is a really good strategy on this 30-minute at a time systems. You see, it's not designed to be a day trade, but yeah, we did get out the next morning. And if we get our risk capital out on the first day, we'll take it. But generally that doesn't happen. In this case, it's another one where it took the next day to do so. So, but here's the case where we did now say we got the gap up and we're thinking, okay, let's go ahead and take a partial and keep part of our trade on for the 5-day runner goal to let the rest of the trade run. And you see why we do this, because and remember, what's our driving factor? The ADX is just turning up off a relatively low level. So when that first price action breakout happens that Tuesday morning, we're not thinking that it's too late. We're actually thinking it's the start of something rather than the end of something. Again, mindset shift. I'm having trouble saying that today. Mindset shift. Say it right. But basically, the idea is that, look, that's our first catalyst. You can see by the end of the first day, we're up a little bit, right? It's kind of having that slow grinding uptrend, right? You're making higher lows, a little bit higher highs, but kind of a little slower higher highs, right? But so we're not making a ton yet. But then the next day, somewhere soon after this gap, we're saying, okay, we want to get out of our risk capital piece, right? We bought 14 contracts for 71 bucks a piece. These are pretty cheap options, right? Buying it on a Tuesday for the next Friday's expiration. The stock was trading about 159 and we're buying 167.5 calls. You're seeing a lot of these examples. We're about 5 to maybe even 7% out of the money. So the idea is that, okay, about what is that, 5% out of the money or so here, we're 6% maybe, we're buying a 71-cent option, right? You say, man, that's a cheapie. Well, that's where you can get a lot of leverage, right? But when you do that, you say, I'd like to get my risk capital back and breathe a lot easier on my remainder position, not having any risk, right? The free trade. So in this case, we sell 10 of those contracts that we bought for 71 bucks a piece. We were saying, okay, if you sell 10 of them out at 50% gain or better, you're going to get your risk capital back. We get out better than 50%. We get out 128. That's an 80% gain, right? So now we've assured ourselves a winner. 10 times 128 bucks a piece. That's 1,280 bucks back in your pocket when you invested just under 1,000, a few bucks less than 1,000. So you made over 250 bucks already. And now you have 4 contracts left as your free trade. And even if you had 1 contract left, it's amazing what one final contract can do compared to your first exit, right? You're feeling pretty good about being up 80%. And you see, we're also feeling pretty good because after we get out, look what happens over the next day and a half. It does drift back down a bit. And you say, oh man, I wish I'd sold it all. No, you don't. You see, and even here, when it goes back up, you know, you get another run up and then it drifts back down here. You go, man, I wish I'd sold that other piece. Well, we're still on only day 4 in the trade on that Monday. Don't panic. Look what happens on day 5. Big gap up. Day 5 in the afternoon is our rule to get out of the second part of our position. The final 4 contracts are sold out. Notice how high the stock is now. It's up, got up to 172.4. We got out close to 171. We've got a 167.5 strike call. That's about $3.50 in the money, but it's on a Tuesday. We still has 3 more days of time. So we get out 425 on that Tuesday afternoon. Remember, sold the first piece at 128. You know, we made $57 a contract or 80% on the first piece. Look at what the last 4 contracts do. 498%. They're making a total of, you can see, some $354 a piece times 4 contracts. You're making over $1,400 on the final 4 contracts profit. $1,400 out of your almost $2,000 gain is pushing you up into the neighborhood of about 70% of your total profit off the trade is off the final minority, the final 4 of your original 14 contracts, right? So it's the 80-20 rule a lot of times. In this case, the 70-30 rule, right? 30% of our contracts generate 70% of our profit, right? So that's why you keep the runner piece, right? That's why you see that overall you made about a triple on your total investment, right? You got almost $1,000 in, you made $1,986 minus your $28 round trip commission. So it's a beautiful position to put yourself in to create a free trade, to create a runner, and still have a plan on how you're going to get out, win, lose, or draw in the second part of your position. Here's an even bigger example, right? These are kind of the outliers, right? They're a lot of them, you know, are going to be higher than our first piece, but not necessarily these big of gains. Other ones may be lower than our first exit, right? So the point is that there's a variety of scenarios, but this shows you why a lot of times people don't have the staying power. That's a phrase I use a lot, staying power in options, especially as an options buyer, right? You're figuring out, how can I have confidence to stick with this thing? A lot of people will get antsy and they will say, okay, we get in here on our ADX signal on a midday on a Friday, right? Just about the middle of the trading day, about 12:30 there. Okay, we get an initial pop in our favor, then it drifts back against us into the close. You see, by the close, we're barely up above where we got in. And then you say, do I really want to hold this in the weekend? All these questions run through your mind. And we're saying, yeah, just give it a chance. These options cost a little bit more. They were $178 a piece. We usually like to pay $200 or less a piece per contract, right? So it gets you like at least 5 contracts. You get 5 contracts here for just under $900. So 5 of those contracts, how do we get 50% profit? How many do we have to sell to get our risk money back? We can't sell 3 up 50%. It doesn't get all our risk capital back. So we sell 4 contracts up 50%. And we get $270 a piece on those 4 of our 5 contracts. Again, you think, well, gee, I make a little bit of money overall. The last contract's a free trade. As we exit out here, when the stock pops up here, we bought the 109 calls. It went from 104 to about 108. As we're not even quite to the strike price, and we're selling out for 51% gain on 4 of the 5. What's the last contract do? How much can one contract do for you? Well, look at this. You say, okay, 5-day rule. We got in on Friday. We're going to get out the next Friday. You've got a free trade, so we're willing to ride it into that Friday expiration in this case. Sell it out Friday about 1 o'clock, 2 o'clock, just about another couple hours to go before the close. And you see the stock's at 124. You've got a right to own it at 109. That's what the 109 call gives you, a right to own the stock at 109. It's at 24. That means the option has to be worth at least $15. We get out for 15.5, 15.55 versus the 178 we paid. So that final contract, you do the math here, just the final, and we only had, this is the final 20% of our position, 1 out of a total of 5 contracts bought on the front end. The final 20% of our trade generates almost $1,000. I'm sorry, excuse me, almost $1,500 of profit. About what is that, 1,400? You paid almost 200, right? And I'm 1375, right? We're making about $1,370 on the final piece. Look at what we made on the total trade. 1745. So you do the math and you think, well, then you make almost $1,400. Again, that's almost 80% of my profit on the last 20% of our position. Perfect 80-20 rule, Pareto's principle. Look it up, read the 80-20 books. and all kinds of other 80-20 principle stuff. I'm a big believer in that. It applies in so many aspects of our life, but when we get into trading, especially options buying, you'll see the 80-20 rule play out again and again. Your top 20% of your ideas will generate 80% of your profits. And you say, well, that means the other 80% must not be very good. And that's not how you want to think about it. You know, some of those other 80% of your trades will be moderate winners. Some will be, you know, break evens, small losses, some medium, and some bigger losses, right? If you don't proactively manage it, right? So it's 80-20 rule works both ways. Probably the worst 20% of your trades will probably generate 80% of your total losses, right? So we've got to have a plan to manage those, right? So, but you see here, 773% gain on just one contract generates a whopping $1,370 of profit on just that last contract. So, and that's for 5 days held, a full week held. Can you hold a trade for a week? I sure hope so, because I talked to a lot of traders and I've coached a lot of traders where as you traded for a number of you traded options for plenty of years. And what happens, the longer you trade, potentially the more scar tissue you develop of like some things that blew up on you, and you kind of we seem to remember our the pain points even more than we remember the success points. And so sometimes that scar tissue will hold you back, and it'll make you take your profits too quickly. You say, I'm not going to let another profit slip away. Well, then you cost yourself a whole lot of more upside even on that last solitary contract. So just give yourself a chance to let the runner run. But let's face it, not all winning trades are going to hit these kind of massive winners. Here's one that was a little slower and ended up where the second piece didn't do much, right? So we bought there on the breakout on a Wednesday morning. We don't necessarily get in right off the gap up, right? We wait for our ADX to cross that declining directional movement line, not just when ADX starts to turn up back here. That's not the signal. The signal is when ADX starts to cross up enough to cross that diminishing, in this case, negative directional movement line in red. It says that we're making enough upside progress and less new low progress to say that the trend should now be officially in motion. You will see times where you get in, starts to work, and then you have to endure a little give back. This is why I don't just trade pure price action, right? Get that little give back there. A lot of people will bail when it's slightly under where we got in at the worst of it a few hours later. You see ADX is actually hardly bent at all, right? It's just slowed down going up. It actually hasn't rolled over. But we're saying give it a chance to get to the 50% target on 2/3 of your position. In this case, we got 7 contracts in for $137 a piece. Bought the 132 calls, so stock's about 123, 9 points out of the money. Something like what, about 7.5% out of the money. But when it gaps up the next morning, opens up here about 127, it's only about 4 points in our favor. About 3% rally in the stock gives us a chance to make 51.8%. So you see it's pushing about 17-to-1 leverage ratio, not huge leverage, and yet still now you're in a risk-free position. You saw 5 of your 7 original contracts, 5 out at $208 a piece, get $1,040 back. You guarantee yourself a small winner. Even the last 2 contracts go to nothing. In this case, look, you saw up here it rallied to 135. So we were sitting on a bigger gain at some point in this trade than what we ended up with, right? Because it didn't follow through. After that initial attempt, it settled back down, finished about 131. In this case, you see this is what happens to near the money options. The 132 calls are sitting there around the strike price for several days, and they are getting bled somewhat by the fact that we're getting closer and closer to expiration. This is why we love selling part and not worrying about if it does stall out on us, we still can't lose, right? We sold the second piece of the trade for just a 27% gain. There, you're kind of glad you sold the 2/3 of your position or more for a better gain, right? So then you're kind of like, to me, I don't know, some people say I'm just an eternal optimist to say that I must see the glass as half full, not half empty, because I feel like it's a win either way. If you sell half or sell 2/3 and then it keeps going, you're glad you kept on part of your trade. If you sell 2/3 and it doesn't keep going, you're glad you sold 2/3 of your trade, right? To me, it's a real kind of, it's just freeing up feeling, giving you that staying power, but not sweating it. $431, nothing to scream about, but still pleased with the overall result. So our NVIDIA Options Master strategy will find an average of about 7 new option trades a month across the multiple systems. Let's look at a couple more daily chart system signals. Remember, the buy signal for calls is when it flips under that lower short-term Donchian channel line. That was the only signal we had back in June and July to buy NVIDIA calls. And you say, man, I wish you'd bought it a bunch more times. And I'm saying, you know what? I'm not complaining to make it triple in a month, okay? In this case, you know, make $1,799 over about a 6-day hold on NVIDIA, right? We got our signal there July 22nd on the slam down the stock. It'll always be something that slams it down, whether it's DeepSeek, whether it's Google causing fear in NVIDIA, whether it's you know, some other AI bubble fear, you know, in the latest short seller talk, whatever. But the point is that when we get a signal, whatever the reason, we don't use a reason to hold us back from firing on the trade. This is what you have to do as a technical analyst, to say that noise is out there. It's going to be out there. This is helping you take advantage of the noise. This is letting you not be flushed, but waiting patiently. Didn't quite get it back before. A couple pullbacks didn't quite get there. Okay, so guess what? Yeah, we miss a few because it's not the right setup. We're looking for the right risk reward setup. We buy those calls for just 128 bucks a piece. Can't quite get 8 calls, get 7 of them in for something like 909 and a quarter, 920 some odd dollars, whatever. So the point being that a little over 900 bucks in, and then when we triple it 6 days later, look at where we bought. We near 167.5, bought 15 points out of the money. So again, we're back to pushing towards about an 8% out of the money option. And look, it pops up here to just under 180. Doesn't get to the strike price of 182.5. Remember, that was several weeks out expiration too, right? Not the next week's. On the daily system, you give yourself a little more time so that when it only goes 6 days by, if it hasn't fired, you won't experience a total wipeout in a few days, right? You've got some time to give it, to let it run. Now, here's one of the upside breakout opportunities too. So even when it breaks outside of an upper band, if other signals confirm it, we will take that signal too for a call. It's rare, but the key here is that we got to see that ADX is continuing to work its way higher. And you see, in this case, we buy 172.5 calls and the stock's just below 160, just pay 106 bucks a piece. And it took about, what, 7 trading days, maybe 8 trading days to pop on up near the strike price. You see it did hit up near 172 at the highs. We're out at just over a triple right off the open on that day 8 when it gaps up 234%. Sometimes you get those windfalls above your triple target, in at 106, out at 355. That's the whole position, right? So that made $2,200 plus on a full position there. Now, not every trade's going to be a winner. Here's an example of one where we can take bigger than even a 50% loss, right? We typically like to give it a week. So you were in on a Monday. You see, we got that initial pop up, but did not get to our 50% target, unfortunately. Might have been up a third, maybe 40%. Didn't get to 50. We were going to try to sell 5 contracts up 50%. Never happened. Then it starts drifting back off. Then we get the nastiness on a Friday back down. Then it pops back up. By Monday, it's back up about where we got in, maybe even a hair above where we got in. You say, man, this is what some people hate about options buying, is they say, hey, I can be right in the stock and still lose on the options. True. That's the nature of playing, especially out of the money options, is that you hold it for a week, it ends up chopping around. We lost 75%. We lost $100 a contract times 7. We lost $700. Guess what? If that's out of your comfort level, cut your risk down. Start trading half sizes. Start trading $500 of risk at a time, or trade less. Even if you just trade 1 contract at a time and get comfortable, that's fine too. But the key is, what's the risk is acceptable to you to take, and then basically know that we've got a system to manage both the rewards and the occasional givebacks, right? They're going to happen. So daily chart trades can hit their target profit even more quickly from time to time. This is why we trade the upside Donchian breakouts. We got that one back in late June as it started to pop. 157.5 call bought when the stock's about 147, 10 points out of the money, paid just 132 bucks a contract. The very next day, the stock rips, goes from 147 to 154, up 7 points, is good for a triple in the options, making 1,800 plus in just 24 hours, right? We like to get in before the close when we get those daily chart buy signals. When we get bear signals, they're a little different. Here's a put trade, okay? So put trade's like a breakout failure, okay? So the breakout turns out it was a fake out for the bulls. Those fake outs for the bulls can be costly, right? If you know a lot of people are getting bullish on something, that everybody sees the same thing on the chart, and then the stock says, we ain't going. We're going the other way. A lot of times those bulls are going to have more pain to keep unwinding. And so we take advantage of that unwinding on the failed breakouts too. That's basically the philosophy. You see, it was trying to break out to the upside. Then you see, here's what the setup bar looks like. We get in the next morning after this daily big candle reversal. So you got a higher high here. You got a lower low and a lower close. In this case, closing near the lows. It doesn't have to close at the lows, but it has to close below the prior day's close to get that's called a bearish engulfing pattern if you're a candle follower. but you see it on the Daunting as well. We really tried to break out, then it failed back deeply back in. So at that next morning's open is where we like to buy. Why do we wait for the next morning's open? We notice with a lot of these failed breakouts that you will get an attempt to bounce the next morning, the dead cat bounce, as it were, right? It tries to bounce. We buy on that attempted bounce put, right? So we say, thanks very much. We think that it's going to keep failing. And so we buy, in this case, the 128 puts when the stock is about 142, about 10 or about 10% out of the money, 14 points out of the money, right? 10% out of the money, or you guys lost your mind. Well, 172 bucks a contract. We bought 5 of those. They turn into $520 just another couple of days later, right? The stock on that gap down here, we're getting the register wrong. Stock's about 130. So there's again that premium inflation, right? We haven't even gotten to the strike price. We're a couple percent away from the strike price still, but it's getting close to it. And now that time premium is inflating because we haven't lost much time on a 3-week option. We're only a couple days later, and now it's gone from 172 bucks to now, as it gets near the money, 520 bucks a contract, right? And so now that's a triple. Now that's $1,740 gain on the initial investment of just under 900 bucks. So another example of that, here's one where we had to kind of gut it out for a day and a half, where you see, okay, it had the reversal, right? So there's the signal at the end of the day. We get in the next morning right here on that open, right there. Put the O on it for the open. It's about 128. We're buying 15 points out of the money. Now we're more than 10% of the money. We're like 12% out of the money. But again, we're working on that premium inflation angle. Guess what? While we're waiting, the stock is rallying against us that first day. It goes from 128 to 132. Next day, it's still testing up near 131, but starting to reverse by the end of the next day. We don't put a stop on these. We say, look, just give it a chance to go and look for that triple. And you see in this case, another 3 trading days later, it's popped down to 116. We're not quite at our strike price here, but we're, again, getting the premium inflation. Just paid 123 bucks. It got us 8 contracts in for just under $1,000, and now we're ringing the register at 200%, making 1,976 bucks minus your $16 commission, 1,960 net dollar profit on that particular example if you're putting in up to $1,000 a trade. But the other thing I didn't mention is our ADX is a little different too. Our ADX says we've been upturned. When we see the reversal, ADX should start turning back the other way to say that the reversal is indeed happening, right? We don't want ADX to still be trending. So ADX should be reversing and coming back down. So ADX should be dropping as we catch that reversal. So obviously it's not a widows and orphans strategy. NVIDIA is a big name growth stock, and trading out of the money options on it is definitely on the aggressive growth end of the spectrum. That's why I tell new subscribers coming in, start small, keep your capital allocation low, and your first goal should be prove to yourself that you can take each and every trade on the way in, and you can take each and every trade on the way out, and let winners and losers stack up over time to show you that the system can work for you too. So the idea is, okay, there's very unique trade management styles, kind of different from some of the masses, but that's how I've gotten a lot of unconventional wisdom and kind of an extra edge against the market. Like we said, if you came in late, even if you're just putting in $1,000 a trade, $5,000 portfolio grew to $25,853. So the gross profit was $20,853 just in the last year and a half, right? Just about 18 months. So that'd be averaging more than $1,000 a month if you thought of it that way for the last 18 months. But remember, that's gross before commissions, before subscription investment. But again, those things are very manageable. Remember too, when we look backwards, past performance does not guarantee future results. Future results will vary. There's the gross gain. And that was using the fixed allocation of no more than $1,000 a trade, even as it grew from 5,000 to 25,000 plus. So we're not growing our dollar risk per trade. We're actually reducing our dollar risk per trade as the portfolio grows with a fixed capital allocation, not trying to scale capital up. So again, past performance not guarantee future results. So what have I done as a super special? Jeanette's been good to me over these many, many years, and I appreciate you including me in today's trade giving offer. So I've got a special one that I think you'll be thankful for as well, just to try out this NVIDIA Options Master trading system here for the next 90 days. Why the next 90 days? I think that's a more appropriate tryout period than just a 1 month period. If you bought 1 month off our website, actually you'd pay even more than this 3 month offer I'm going to give you. So it's a super special discount and value, but also I'm doing it because I want to build you into a long-term subscriber. Once you see how it works over 3 months at this great starter price point I'm going to give you, I think you'll want to stay with it for a lot longer, and we'll give you some great value as an existing subscriber to buy longer term subscriptions as well. But you got to get started somewhere. right? And I don't believe in free trials. If anybody I've ever talked to on free trials, you invest mentally about what you invest in it and monetarily, right? If you get a bunch of free trials coming at you, like, I don't really have any skin in the game, put a little skin in the game. Now all of a sudden you're going to follow it and say, can you start really dedicating yourself to a more laser focused approach? Quit jumping around across hundreds of different stocks, hundreds of what you think are tons of opportunities. That's going to not really get you tuned into any one stock's movement like this will. So basically, focus on just the leading stock out there, NVIDIA, with the NVDA Options Master system here. And you also get the Options Master settings and rule sheet, and I do weekly video training for all subscribers, and you can reach me and my analyst team directly via dedicated separate email that we give you. If you're buying off the website, $297 a month times 3 would be $891 you'd be in. I've slashed it today to just $177. That's right. I'm taking $700 off the 891, more than, you can see some 80% off, 80-20 rule, right? You're getting the best 20% here, just $177 of that original 891 value to try it out for the next 90 days. That's also gets your costs down if you think of it that way. Next 90 days, cost per day, less than $2 a day, less than half a buck a Starbucks, the way that maybe even less than that half of a cup of Starbucks, I should say, with all these creme brulee lattes and whatever out there that are so tempting for me. So bottom line is that, look, bigtrends.com/TradeGiving is a special one and only link for this group here today. We just set up to try it out for the next 90 days. That'll take you through, of course, the end of the year push, but also January is historically a really great month to trade, and it'll even take you on in to the end of February, right? So basically, you'll cover it through these next several months, and basically, as a result, I think really get a focus on how it can work for you on the upside, and the occasional downside pops too, right? NVIDIA, you've seen it; it moves a lot, even with it being the biggest stock out there, right? At one point, it hit a $5 trillion market capitalization value, and it's just some tremendous movement. Obviously, it's come down a bit off of that, and you shouldn't think that, oh, the AI bubble has popped. I don't think that's the case. I think we still have more upside to go, but regardless of upside or downside, there's going to be tons of opportunities. So the key is you cannot get locked into any one view. You've got to stay maximum flexibility, right? That's one of the earliest lessons I made, is that if I get locked into thinking I'm right, thinking that I only want to trade something one way, I might be missing a whole nother set of opportunities, right? So you don't want to be locked in thinking the bubble's popped and everything's going down. You don't want to be locked in thinking it's going up forever either, right? You want to be maximum flexibility. We give you that maximum flexibility. Whenever we get a bull or a bear signal, you'll get it in real time from us on our emails and stuff. So Mark, after trial, we make existing subscribers an even better longer term offer for a year, or even longer term subscriptions. And even you'll get potentially get a lifetime subscription for a super value too, if you want, once you check it out for 3 months. Basically, I want you to kind of get comfortable with it first, right? So that's why I'm not trying to max you out at some big number. I'm saying, look, I'd rather you see the value, see how good it can do for you. Obviously, one trade can easily pay for this. I know Jeanette's posting that in the chat box, bigtrends.com/TradeGiving. I've got just a couple more minutes. Let me quickly answer the frequently asked questions. So we got started a few minutes after 11. So basically, let me just take 2 more minutes to just remind you what we're doing. Just simple buying of a call or a put. No spreads, no options selling on the front end. The only time we ever sell options when we're closing down an existing purchase that we made. There's real-time email alerts, and you can get the text alerts through WhatsApp. I do recommend getting set up for that once you get your email order in. We'll send you an email welcome letter with how to get set up for texting at no additional charge as well. The new trades are sent out at any point during trading day on the 30-minute system, every 30-minute close. The daily chart system trades can come out right near the end of the day or at the start of the next day's open. Averaging about 7 trades a month across both of those systems, and then less than $2 a contract on any new option that we purchase. That means if you're putting in $1,000 per trade, that gets you at least 5 contracts on each new trade, and then we'll guide you on each and every trade to the very end. We'll never leave you hanging. Weekly video training, strategy session I recorded for existing subscribers, kind of walks you through the rule sheet, which you get. But when you sign up, we do ask you to sign a terms of service that says you're not going to share these system settings with anybody else, right? It's for you and your family's benefit. And that way I keep our edge strong for our existing subscribers that I've invested decades in these types of systematic edges being developed here. So you also get dedicated email to my analyst team and I. So give you a ton of support. Remember, for the $177 you're paying today, just one of those trades could give you a massive ROI in a matter of days, right? This trade generated a profit of $1,800 right? For the 177 you're paying today, that's like a 10 bagger in ROI. If we hit another triple on $1,000 investment, right, make you up to 2,000 bucks on one of these daily system trades. I'm not saying it's going to happen on the very next one, but I'm saying that, you know what, there's lots of opportunity here. Our goal is to make sure we get you the signals in real time to get in and get out, so you're never left hanging, right? So what you're getting today is 3 months, next 90 days, try it out. But these next 3 months, take it to the end of February, and you're getting it today for the one-time $700 plus off, $891, take it down to only $177. All those discounts have been taken, by the way. When you go to that order page, you'll see that it's really clean, really simple. We don't throw a lot of text, a lot of hype on there. It's like, look, by this point you get to here, you know, you already know the value, you know what you need to do. You can either put all your information in there, review your terms and conditions there, box, click off on that. You got your information in there, all the major credit cards, hit the green button. You want to save a lot of typing, hit the orange PayPal button. And we've already taken there's no promo codes to apply. We've already taken it all the way down to 177. So you just hit the PayPal button with the review the terms and conditions, check box, hit the PayPal, it takes you to your PayPal, boom, boom, boom. A few clicks later, just locked in the next 90 days for just 177 bucks. By the way, if you got any questions, call us at our 800 Big Trends number. It's up there on the top right, or email us clientcare@bigtrends.com. Jenna, I'm gonna hand it back over to you so we can get back on our time schedule there. Thank you for having me, and happy Thanksgiving and happy holidays now to everybody.
Thank you, Price. We appreciate you being here today with all of us, giving us that 1 hour of your time. I'm going to go ahead and take the screen back and share my screen so we can get through a little bit of housekeeping and then bring our next presenter out. So let's see what we got here. All right, everybody, I'm releasing Price as a presenter. And so I would love for you to go ahead and rank him right now, 1 to 10, on how you liked what he had to say. And there's his link, bigtrends.com/trade-giving. I have put it for you in the box, in the chat, as well as the questions. And remember, all of your correspondence with us today should be handled in the questions box. If you'll stay in the questions box for us, we'll be able to see the questions and make sure that we get them answered before we shift to each new speaker. Okay, just getting this around a little bit. All right, we're about to go and do our next quiz. And remember, this quiz right now is going to be worth $50, and we are getting close to the big final giveaway, which is going to be a travel monitor from all of us here at Trade Thirsty. Silas Peters is on deck. I see that he is logged in. I'm going to give him the mic in just a second, but before we do that, let's go ahead and get our quiz fingers ready. This is for $50, and I put this question up in honor of our next speaker. What is the famous 2-word spirit shout that Alabama Crimson Tide fans say? It's 2 words. We all say it. If you've been anywhere near me ever, 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 then you know what those words are. They're coming in. They're coming in. They're coming in. Let me see. Phil Henderson. Phil Henderson, you were the first one to get it right. The answer is Roll Tide. And my good friend Silas, he hails from the University of Alabama. Tomorrow is our big rivalry game with Auburn, so I know that's big on his brain. I'm going to make Silas the presenter now so that he can take over the screen. And our winner, Phil Henderson, if you'll drop me your email address, and if you prefer PayPal or Amazon, that would help me get you paid. All right, Silas, I'm trying to make you presenter. I don't know why it's not letting me. There it is. Okay.
Hey,
Nope.
can you hear me?
Hey, yeah, dude. It's not letting me make you presenter. Can you make yourself the presenter?
Let me try.
Just gotta stop sharing over here. I don't know why I muted everybody earlier on accident. Maybe that's.
Yeah, I'm able to do that. So I'll take over if that's okay.
Yeah, you've got way more power than me, apparently. Have at it. Everybody give it up for Silas Peters.
All right, guys. Thank you so much to Jeanette and the Trade Thirsty team. I guess you guys said Roll Tide. I was saying, where's saving? Where's saving? But Either one. I don't think there's a wrong answer there. Watching the Egg Bowl in the background. Happy Friday, everybody. Appreciate, again, Jeanette and the Trade Thirsty team for having me on. Always a pleasure. It's been a while since I've been on one of these. Always a great crowd, a great day of learning and soaking up some good trading knowledge off of Thanksgiving. Hope everybody had a great holiday. If you're celebrating, I know we're a few minutes behind, so I'll go ahead and do my best to try to get us back in line here. Again, my name is Silas Peters with T2 Markets, and you are in the right place. If you're sick and tired of losing money, you're tired of confusing strategies, and just want something real, something that works. And by the end of this lesson today, you're going to see a way to trade with confidence, mechanical rules, and high probability setups. That means no guesswork. We must quickly cover the risk disclaimer. I'm sure you guys are familiar with this. It's extremely important. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading securities, options, futures, currencies, etc. Only risk capital should be used to trade. So always consult your tax or financial advisor before applying real risk capital in the markets. Take that very seriously. Now, let's talk about what we're going to learn today. We're talking about why price action patterns beat indicators. We're going to talk about this special 3-point setup. We're going to explain that in details with step-by-step entry and exit rules, real trade examples, and then how to apply this literally starting today. So I don't know if anybody's trading today. Hopefully you've just been long on this Thanksgiving drift higher. It's what we've been taught. It happens time and time again. And really my goal for you is this, is that I'm going to prove to you that this works in any market or time frame. But this is the real benefit of listening to this workshop today, is that we're going to eliminate chasing hot stock tips. We're going to eliminate the need for dozens of indicators, cluttering your charts. And you're going to leave here with the exact rules for entry, exit, and targets. Okay, so who here would like to walk away with a mechanical set of rules? Who here is letting maybe discretion creep in? It's human nature. It happens, right? It happens. We're all guilty of it. But when you can mechanicize your process, your trading, it just makes things a lot easier. It takes that stress off. And that's what we're going to learn today. So we're going to walk away here learning how to identify these types of patterns right here. And this is 10%, 8%, 12% moves on a stock like Halliburton. Here we have 3.5%, 6%, 9% moves on Bristol Myers. This equates to 400, 800, 900 dollars per 100 shares. These wins start to add up. Here we have 5%, 6% moves on Lockheed Martin, LMT. Again, I'll show you how you can do this, not just with the underlying, but also with derivatives like options. Okay, here we are on a 30-minute chart of gold futures. This is $800 a contract, followed by $450 a contract. Day traders is a 5-minute chart of the E-mini S&P here. You've got 3 points, you've got 8 points, you have 6 points, 10 points. It's over $1,300 a contract in a single session. And all these wins, again, they start to add up. They start to compound regardless of whatever it is you're trading. This is a 610 tick chart on the 30-year bonds. And for those that like to scalp, we love this particular setup that I'm about to teach you on 610 tick charts, 233 tick charts. And the pattern that I'm going to be teaching you today is responsible for identifying every single one of these moves before they happen. And it also lets you know exactly where to get out for your risk as well as for your targets. Now, you are in the right place here if you want simplicity and consistency. If you've tested, dozens of indicators, subscription services, you've been frustrated by emotion-driven trades, you want something simple and mechanical, you're most definitely right.
Hey, Silas, we're getting a lot of breakup here.
if you are a retail trader or even a pro who's fed up with overcomplicated systems and the endless cycle chasing hot stock picks and just, really overcomplicating the process from, Greeks and robot trading and EAs and black box systems and just, complex strategies that I thought, this has to be it. And, the drill of, hey, we need more damn indicators on our charts. I've been in so many of my students and clients' computers, and you can't even see price. And I mean, this is a reality. And it just, it led to emotional decision making, hesitation, entering too late, exiting too early, risking more than I should. And I got burned. I got burned again and again. I lost money, lost confidence. I felt trapped in a cycle of hoping and second guessing. So does that resonate with anybody here? Does that resonate with anybody in here? Yeah, I mean, of course it does. So that kind of led me to something that I discovered that was very, very powerful. The 3-point reversal pattern we're going to be discussing shortly. It's been around forever, but most traders ignore it or complicate it. And I thought, what if I could build something completely mechanical around it? Exact rules, precise targets, no emotional guessing. You start with that, back it up with tests. I mean, I was already doing this manually. I knew the power of it, and I knew it already worked. Now, I've already given you the hint. It consists of only 3 steps. So let me walk you through what these 3 steps are. 1 is we're going to spot the reversal structure. 2 is define the exact entry and exit target. And 3, trade only when the rules align. Let me ask you, can you follow 3 steps? Let me ask you here, can everybody here follow 3 simple steps? Now, if you do, if you can commit to that, then your trading is going to become much cleaner. And if you skip them, then you're back to the noise. And because we are trading price action, we have a strategy that produces repeatable setups, works across all markets, and it's easy to spot in real time, okay? And these charts right here will start to appear to you every single day. This is a 55-point trade in the NASDAQ on a 15-minute chart. This is a daily chart of silver SLV, 7% gain here. This is a daily chart of DIX. DIX Sport Good, $10, $12, $15 a share on a short, on a long, and then a long here. Coca-Cola, a 4.2% move here, a 6% move here. These are clean, crystal clear charts with an exact set of rules that you're about to learn. The euro US dollar, for those that trade Forex, 125, 110 pips on 2 trades on a 4-hour chart. Weekly chart of Baidu, 51% gain here, 56% gain here. E-mini S&P on a 1-minute chart. Done the calculations here. This is 11 points. It's over $1,000 or over $500 on a single contract on a 1 minute chart. Now, would you prefer simplicity? I know that simplicity beats complexity because, as I've said, I've tried it all. How smooth, how clean were those setups that I just shared with you? So let's get right to the rules here. This 1, 2, 3 strategy is a widely used trading trick that helps traders identify trend reversals and continuation patterns in trading with high accuracy. We're going to identify the trend shift. We're going to spot the pullback, and then we're going to confirm the breakout trigger. So whether you are a day trader, a swing trader, or a position trader, understanding this pattern will significantly enhance your ability to spot profitable setups in the markets. So let's start with point 1, as this is the baseline starting point for the pattern. Okay, step 1 is all about spotting a potential reversal. Okay, so point 1 is what we call the trend peak or the bottom of the move. Highest point in an uptrend or lowest low in a downtrend within the current price movement. Let me show you a quick example. So in an uptrend here, we are looking for that highest high or that highest point as our number 1 baseline starting point. Okay, and a downtrend, we are looking for that last lowest low or last low swing point as our baseline here for a potential reversal. Point 2 is we're now looking for a small retracement. Okay, it's the first retracement from point 1, forming a higher high in a downtrend or a lower low in an uptrend. Okay, so let me show you an example of this. So in an uptrend, here was our highest high or our number 1 point. As we get that first retracement and pull back, that is our number 2 point. Okay, in a downtrend, it's just the opposite. Here's our lowest low. We get a retracement higher and a pullback. That becomes our number 2 point. Okay, now we are waiting for step number 3, which, as the name applies, is our third leg. Okay, it's either the second low point, a higher low for a long or bullish confirmation or formation, or the second high point or lower high for a bearish formation. Okay, so now we have our 1 and our 2. Here is our lower high in an uptrend, which is our number 3 point. In a downtrend, here is our higher low in a downtrend. We have our 1, we have our 2, and then we have our 3. This is the higher low or number 3 point. Okay, that is our complete 1, 2, 3 setup. So now what? Well, that's your 3-point profit pattern. So wait, say, what are we missing here? Yeah, I mean, well, how do we enter? Anyone take a wild guess on where or how we enter? We simply wait for a break above or below the number 2 point. So in our bullish example, meaning we're looking to go long or expecting this market to go higher, we are simply waiting for the market to do what? Yes, trade above and through the number 2 point. We have our 1, our 2, and our 3 pattern. We're waiting for a break above the number 2 point. So as you can see here in this example, price traded through and above the number 2 point. We can all agree on that, correct? All right, great. So now flipping to the short side, we are bearish. We're looking to go short, sell that market. We're expecting it to go lower. What are we looking for? We're waiting for price to trade below the number 2 point. And that's exactly what we get here on the next bar, which is what we can all agree on. So do you see how this is damn near, if not 100%, a mechanical process? Let me see in the chat here. Type a 1 in the chat. Do we agree that this is a mechanical process up to this point? Type a 1 in the chat. We're all seeing the exact same thing, which is rules-based. That means it's mechanical, okay? That means it's mechanical and removes your emotion from the decision process. So once price breaks through point 2, after that final free point, that signals a trade entry for our 3-point pattern. So very, very straightforward, okay? Very straightforward. So what about stop losses? every trade placed or put into the market needs a stop loss to manage risk. Never trade without a stop loss. Well, what about profit targets? We also need a profit target or limit orders to take profits. This is why we're in the market to begin with. And then what about overall trade management? Okay, once we're actually in the trade, what in the heck do we do? Well, these are all great questions and all extremely important. It's part of the entire trade. We must always use a stop loss to protect our capital, and we always need to know where we should look to take profit. Again, that is why we are in the market to begin with. So let's cover stop losses, okay? This simply means that sometimes Mr. Market does not do what we want it to do and goes in the opposite direction. And that's okay. We're not going to be right 100% of the time. Every trade system or strategy will incur losses, okay? So we put a stop order in to protect our capital in case we are wrong. So let's talk about what a bullish setup looks like. Our stop loss for a bullish 3-point pattern is going to be below the number 1 point. So here's our 1, here's our 2, and here's our 3. We're going to put our risk below the low of the number 1. For a bearish setup, it's going to be inverse, which is above the number 1 point. So here's our 1, here's our 2, here's our 3. We're going to put our risk above the number 1 point, okay? So our entry criteria, again, we're looking to get short on breaks or closes below the number 2, which is what we get right here. Our risk or a stop is going to be above the number 1 here, okay? We put the stop orders in to manage risk and protect ourselves against any adverse price movements. Now, let's cover the fun part, which is profit taking, okay? As we know, we must always use a stop loss to protect our capital. We must always know where we're looking to get out or take profit when the market does move our way. It's very simple. Another mechanical process here. We're going to measure the distance between the low of the 1 to the high of the 2. Okay, we're going to measure the low of the 1 to the high of the 2, and then we're going to take whatever that value is and measure up. Of course, this is a bullish example. So the range here between the low of the 1 to the high of the 2 is $1.98. Okay, so we're going to go $1.98 and we're going to measure up. That's our profit target. Okay, so we're going to take that $1.98, we're going to measure up. That's where we're looking to take our target. Very simple, very mechanical. Okay, we must cover the bearish setup. Again, same scenario, just flipped upside down. It's going to be the distance between the 1 and 2 point, this time measured down. Okay, so we're going to measure from the high of the 1 to the low of the 2. This example, that's $3.68. Okay, everybody following? So we're going to measure, we're going to take that $3.68 range, and then we're going to measure down to find our target objective. Okay, type a 7 in the chat if you're following me. Okay, type a 7 in the chat if you're following me. We're going to measure from the high of the 1 to the low of the 2. That's $3.68. We're going to subtract 368 from that low of the 2 and measure down. That gives us our profit target. Okay, awesome. So to recap, for a bullish 3-point strategy, we're going to locate that trend. Okay, price heading lower. In this case, we're looking for a bullish setup. Price retraces higher, which gives us our number 2. Price makes a higher low, which is our number 3 point. And then we're going to enter above a break or close above that number 2 for a bullish reversal pattern. 3-point strategy for bearish or short positions. We have the trend established, price is heading higher. Price retraces lower, which gives us the number 2. Price makes a lower high, which gives us the number 3. And our entry is going to be below the number 2, a break or close below the number 2 for a short position. Okay, so let's walk through some additional examples here because it's just about repetition. Here we are on a monthly chart. It doesn't matter if this is Caterpillar or Bitcoin or the NASDAQ. A monthly chart, it's the exact same process every single time. So we've identified our new high, which is our number 1 point. We measure down because it's our 0.2. Retracement is our number 3. Do you see how we have and know all of our key criteria in advance before we even consider entering the trade? If we've identified our 1, 2, 3 pattern, we already know that where we're looking to get short. We know our risk is going to be above the high of the 1, and we know our distance is going to be between the high of the 1 measured to the low of the 2 measured down and equals this distance. And that's what it looks like there on this particular chart. There's the breakout entry, there's our risk, and then there is target 1. This is a weekly chart. Again, does not matter what symbol or instrument or asset that we are looking at here. We have a 1, 2, 3. We know all of the criteria in advance, so there's no panic, button pushing, no white knuckle stress. We know exactly all the criteria we need before we even get into the trade. Here we break above the number 2. Targets are already plotted onto our chart with our risk and our entry criteria, okay? Daily chart here, again, as you start to move to lower time frames, the more setups and opportunities you're going to get. The higher time frames you are, the less opportunities you're going to get, okay? So this is perfect for day traders, scalpers, swing traders, position traders, and it's perfect to trade not just the underlying, but options on these as well. Here's an example on the hourly chart. You'll notice the lower I get time frame wise, the more setups we're going to have. Here's a short, there's a long, a short, currently in a short triggered setup. Here we are again on that hourly chart. 13 points here on the E-mini S&P, followed by a 43-point or $2,100 contract there on the S&P. Here we are on another chart, short, and then there is that short setup being printed. Now we are looking at a 1-minute chart all the way down lower time frames. You know, I know people doing this on 15-second charts, 15-second charts. And so you can see these opportunities being provided each and every single day, giving you all of the key criteria that you need to make an educated decision. Okay. So do you see how we only trade when the rules are met? That means no forcing entries, no guessing. We're simply waiting for our 3-step criteria to be met. Okay, this here, all this here is what separates hobby traders, emotional traders that are second guessing, that are chart hopping, chasing entries, to those that follow a systematic process, a mechanical plan. It's either there or it's not. Just like these here, it's either there or it's not. We have our 1, 2, 3 pattern printing, entry, target, our 1, 2, 3 pattern printing, entry, target 1, target 2. This is in gold. You can trade gold futures. You can trade minis, micros, GLD options. This is a stock, Delta Airlines. Here we are, trading a simple 3-point pattern that repeats itself over and over and over again because the markets are fractal. The markets, all we're doing is trading the ebbs and flows of daily market movement, regardless if you're trading Delta or S&P or gold or oil or Alibaba or Cardinal Health in this example. You see how systematic and mechanical this is? Buying the stock, selling the stock, maybe buying put options, selling bear call spreads, maybe buying the stock, maybe selling put spreads, buying bull call spreads. Google, maybe selling bear call spreads here, buying put spreads. So let's kind of talk about again, what we've learned so far. A simple step 1, step 2, step 3 pattern. Does everyone here up to this point feel confident in what I've just shown you? Something that you can say, yeah, yes, I can follow this. I can do this. I know you can. I know you can. Step 1 is we're going to spot the pattern. The market is heading south. I'm waiting for that last low to form to start my number one count. I get that retracement, which gives me my number two. And then as we pull back from that retracement, I get my number three. Once I have those three steps in place, we immediately can have the ability to identify our entry, our stop loss, and our target. Okay, we put the order in, we put our bracket order in, and we let the market, we let the trade do its thing. Okay, so here we are. We have our 1, our 2, and our 3. We know everything, all the key criteria before the trade even triggers. Our stop loss is going to go below the number 1, and we know our target is a distance between the high of the 2 measured to the low of the 1 measured up. All done in a very mechanical process. The cool thing is that this can be done or placed with what we call an OSO order, or order since order. It means once we get triggered into the trade, we can have bracket OCO orders automatically go in that put your limit order in and your stop. That way, if you walk away, go to the bathroom, you go to the golf course, whatever it is you're doing, you're going to be taken care of on that trade. And so you just execute. You believe in the process. You believe in the process and the trade plan, and you execute. Okay, here we are. We finally break above the number 2. Once we break above that number 2, targets go in, stop losses go in. Now, if we are looking at or considering a bullish trade, here's what we can do. We could buy the stock. We could buy futures. We could buy call options, could be called debits, outrights, debit spreads, or we could sell bull put credit spreads. Okay, multiple ways to play that scenario. Here's where the trade triggered. Again, whether this is a stock, a future, currency, crypto, whatever it is, there's our entry, there's our target, there's our stop. Okay, this completely removes all of the emotions from your decision making. There's no fudging any criteria because you feel like the market should move. If we're bearish, what are our options? Well, we could sell the stock or underlying derivative. We could sell futures. We could buy put options. We could sell bear call options. Okay, sell bear call options. Whatever your flavor or style may be. Okay, whatever flavor or style you may be. Now, you're probably wondering, how do I do all of this by myself? How do I find these patterns on my own? Well, at this point, you know what it takes. You see the steps, but you may be thinking, well, great. I've got to learn charts. I've got to learn multiple indicators, spend hours back testing, maybe buy expensive tools. No, that's exactly what this strategy is built to do. It's built to eliminate all of those items. You get a system that does the pattern spotting, the plotting of entries, exits, targets, scans, daily setups across multiple markets and timeframes, so you can trade with clarity. You trade with clarity and you trade with confidence. Now, what if you had a tool that locates these patterns for you? It automatically plots your entries and exits for you, and it could scan multiple markets and timeframes for you. Would that help you find high probability trades on a daily basis? Guys, I used to do all of this by hand. All of this by hand drawing, getting out the calculator, say, okay, this is the range. Now let me measure up, measure down. Well, good news. That's exactly what we did, is build a tool that does just that. You remember our examples earlier. What if we could replace the need to hunt and manually hand draw these patterns? All of these are done on your behalf. Find a 1, 2, 3 pattern that plots all the criteria that you need so you can execute the trade. Remember, we first had to spot a pattern that was forming. Then we had to map out the 1, 2, 3 points. And then lastly, we had to get our calculator out and define the range for our targets. Now, that might make sense if you're doing this on a daily or monthly or weekly chart. Doesn't make sense if we're trying to do all of this on a 5-minute chart or a 1-minute chart or maybe a tick chart, because time is of the essence. But with the powers of technology, all of the heavy lifting is done for you. All of the heavy lifting is done for you, where the 1, 2, 3 pattern is plotted automatically on your chart. And once we get a break or confirmation of entry, your stop, target 1 and target 2 are all plotted onto the chart exactly for you. That identified this trade here in the NASDAQ, that identified this trade here in silver, that identified this trade or these 3 trades in DIX, and identified these 2 trades in Coca-Cola. We now have clean, clear charts that gives us our entry, target 1, target 2, and risk all mapped out. Now, what you're looking at here is a chart or a set of charts on TradingView, okay? Now, we've also built this out for Thinkorswim. We've also built this out for TradeStation. We've also built this out for NinjaTrader 8. TradingView, as we've just been covering, MetaTrader 4, and Wealth Charts. I don't even know how many platforms that is. What is that, 7 or so? 6, 7? Now, why is all this different? Why is all this different? Because it eliminates the need to have dozens of indicators on your chart. No more chart hopping. Well, should I trade this? Should I trade that? Kramer just said I should buy this. No, we're letting price action tell us what we should be trading. No second guessing. I know you've tried it all. 20 indicators on your charts, 10 plus subscriptions, loads of strategy, experts that clutter your mind, they drain you mentally and financially, and still leave you lost. Well, this is different. Simple mechanical rules that you just stick to and you follow, okay? Benefits of everything we showed here, mechanical consistency. You know exactly what to do next. No stress, no emotional trades, high probability setups every day. When you implement what you've learned today, this is what your new trading day looks like. Confident. You wake up, you glance at your scanner, you see the setups, you know exactly your entry, your exit, your target is. No more emotional guessing, less stress, which means better decision making and less margin for error. Now, I'm going to tell you that results matter, right? I wouldn't be talking to you today, sharing this strategy, sharing this incredible tool with you if it's not something that I'm doing myself. I've been using this strategy for over 15 years. You think that we'd be still talking about this if it didn't work? This is one of my primary entry method techniques. We use it every single day in our live Telegram training rooms, every single day, and the results speak for themselves. Our students know that this is one of our primary go-to bread and butter entry confirmation tools. I would not continue to be using nor talking about this nearly 20 years later if I did not use it and it did not work, plain and simple. This is why we use this every single day. It's simple, repeatable, it's pattern-based, no lagging, and it works across all markets and timeframes, which means I can go from a 5-minute chart of the S&P to a daily chart of 30-year bonds, to a weekly chart of Johnson & Johnson, to a monthly chart of Coinbase. whatever markets that we like to trade or follow. And now it's all automated. I built a step-by-step program to help you master this strategy. To automate, execute, repeat. Automate, execute, and repeat. And we do it with what we call the 3S code. What is the 3S code? The 3S code, it is our full on-demand trading. Watch it whenever you want at your speed. A full indicator and scanner suite, the tools that you'll use daily. Access to our members only Telegram room, ongoing support, community, you're not alone. And access to weekly live training sessions where we walk through real trades, real setups, all together, our entire community. And now you can join us. You can start profiting from these predictable patterns with the 3S code. Now, let me ask you this. Let's do some math. How many losing trades have you taken because your system was unclear? How many indicator subscriptions cost you $50 to $200 a month? How many, quote unquote, hot tip newsletters promised the moon and delivered scraps? If you added up the time, stress, mistakes, pain, you've already paid way more in losses and wasted effort than what this will cost you today. Now, if you try to build what I'm giving you here, the scanner, indicator, rules, training, live sessions, community, and years of experience in the markets, you spend thousands of dollars. You lose time figuring out what works. Mistakes costing you money, the stress. But here, it's packaged, it's proven, it's ready. We're not going to charge $3,000. I'm not going to charge $2,000, not even $1,000. Not even near that. As part of this live trade giving event here on Black Friday, with this package, I want you to get started on the right foot with confidence, okay? So that's why you're going to get the 3S code indicator, the 3S code scanner, access to our weekly strategy and scan sessions, access to our private Telegram room. And not only that, we're going to include our 25 top option strategy guide, chart pattern principles trading guide, and all of our bonus quick start guides, okay? Imagine being able to spot high probability setups every single day without hesitation. Imagine having mechanical clarity. You know exactly where to enter, exactly where to exit, and where your targets are. Imagine trading both swing and day without the chaos, without worrying if that newsletter or indicator you just saw will suck you in. 3S code eliminates all this. So as part of this special Black Friday today, you can get started with this complete package, indicator suite, training guides, 24/7 support, all for a one-time lifetime payment of $397. You can go to thirsty.t2markets.com, thirsty.t2markets.com, and I'm going to put that into the chat there for you in a second. Now, what I want to do here as we wrap up is make sure it's crystal clear on everything that you're getting. You're going to have access to the indicator suite for MetaStock, Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4, and Wealth Charts. So it's not about a single license to this or single license to that. If you use all these, then you can plug and play into each and every one of these. You're also going to get access to our weekly strategy and scan sessions. These are held every Tuesday at 11 a.m. Eastern. We scan and discuss top setups, day and swing trading using the 3S code, using options, trading minis, micros, ETFs, and much more. This is your best chance of accessing this package, accessing these trade setups live in a real market environment. You get to ask me questions in a live market environment. Now, I want to talk quickly here about what the indicator and scanner includes. Again, a visual plot of the 1, 2, 3 top and bottom reversal areas that include the entry, exit, stop, and target levels, all color-coded for easy reference. Customizable settings, multiple look-back periods. You can scan for setups only, trigger only, or both. You can scan for tops, bottoms, or both. Scan for day setups, swing setups, position setups across multiple time frames, across any instrument, any asset class, any time frame. Now, I'm also going to include additional bonuses with the 3S code package. Okay. Bonus 1 is my chart pattern principal trading manual and guide. It's a 90+ page PDF to help you jumpstart by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade this pattern, and so much more. Bonus 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are an extremely powerful trading instrument if you know how to use them properly. So it's important to me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S code strategy. And then bonus 3 is access to our private Telegram room. Okay, every single day you are getting hand-fed multiple ideas and analysis across multiple markets and time frames, stocks, ETFs, indices, futures, currencies, intraday setups, swing setups, and more. Only the best of our best, our highest conviction setups. Guys, look, it's not just me having success. Students come to me all the time. You know, I've tried indicators before. They didn't work. This one is mechanical, it's proven. Or I'm too new, I don't have time. Well, this works in all time frames with all the training you need. Well, markets might change with strategies based on price action, which means it's timeless. So let me tackle what's probably on your mind. You know, you bought indicators and got burned. Well, I get it. This is why this isn't some secret sauce indicator. I've taught you the rules. You can literally start using this in the next trading session. It's mechanical. You follow the rules. You don't guess. Some folks will say, I'm not experienced. I don't have hours. You don't need to stare at charts all day. Works across multiple time frames. Again, what if the market changes? That's why we use price action. Markets are fractal, constantly moving. It's timeless. So when emotions start to flare, mega indicators start to lag, price action speaks clearly to you. Now we've opened this slot up here for this special session today. You're going to get the 3S code indicator, the scanner, access to our weekly strategy and scan sessions, access to your private Telegram room, plus all of our bonuses and unlimited support, guys. We have a motto here, leave no trader behind. Should you have any questions, need help whatsoever, we have a dedicated team on standby to help you. We've got training guides, manuals on how to install this. If you could turn on your computer, it's going to take you less than 90 seconds to get started. And it is our go-to bread and butter entry strategy. All right, so there is your offer, guys. Go to thirsty.t2markets.com. That was put there into the chat. And what I'm going to do is I got a couple minutes here. I'm going to answer some questions here. So if I go here, this is mechanical, but market reversals are hard to spot. Not anymore. Not anymore, my friend. That is what the indicator is designed to do, is spot these for you on autopilot. Does he still do the same stop loss for stock and option trading experience? Telling market makers play games and take out stops. The stop loss is still the same. It's going to be on the underlying. I personally don't use stops on options. So we're using the underlying price action on the market of choice, and then we'll determine to get out based on that price action. Please show the scanner again. I don't have any scanners pull up. We do have a scanner available for, let me see if I can write this out. TradeStation, Thinkorswim, Ninja Trader 8, Wealth Charts, and Metastock, as well as MT4. TradingView is the only one that doesn't have a scanner. Okay, so we've been working with programmers, and we did come up with something similar. It's just not very good. They don't have it built out yet, but when and once it does, that will be included at no charge. What is the Telegram room called? It's called our price action Telegram room. Got hundreds of students in there. Do I consider earnings reports in your setups? I personally don't trade earnings, so I will wait for earnings to pass, then go back to a market, or I would trade up to earnings and exit before I typically don't trade earnings setups. Does it work for cryptocurrency as well? Yes, it works for crypto, tulips, tea leaves, anything that moves on a chart. All we're doing, guys, is trading price action. So yes, indeed, it does. What does a setup and trigger mean? So the scans can set up for trigger or setup only. So if you come down to, actually, let me go to this page here. So here's what I'm gonna draw two separate scenarios before I wrap up here. All right, so this is the difference. So this is one that is called in a setup, right? So we have a 1, 2, 3. This would appear on our scanner because we're waiting for it to set up. We're waiting for it to trigger through the number 2. Our 1, 2, 3 pattern here is called trigger because its price is already triggered through the number 2. So that's an option for you to run one or both. You're welcome. Absolutely. Yeah, the offer is thirsty.t2markets.com. I want to make sure I get the team back on track here. So I'm going to turn it back over to Jeanette and the Trade Thirsty team. Thank you so much for having me back on. Thank you so much for your attention here on Black Friday. This is a much better place to be than getting trampled at Walmart for some TV. So I appreciate your time. Welcome to all the new students and look forward to seeing you guys in the market. Thanks so much, Team Trade Thirsty. Have a great day, and we'll see you on the flip side.
All right, all right, all right. You guys know what the drill is? The next stop is to give us a ranking. We need a 1 through 10 of Silas, how you felt about it today, any feedback, 10 being the best, 1 being the big We don't like the but if we get them, we take them seriously over here in my house. All right, let's see. I'm trying to get my screen back to take over. And then we'll roll through our quiz, and then we'll give it up to our next speaker. Sharing is caring. Let me try to share my screen. Dun, 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 dun. All right, I'm getting there now. Trust this. Okay, there he is, Silas. Silas Peters. Biggest Bama fan I know. Thirsty.t2markets.com. I put that in the questions box and in the chat box for you. All your correspondence today should be through the questions box. So anytime you have questions or comments, responses to me, it all goes there in the questions box. So there's Silas, and we're going to go back through real quick on where we are for the day. We've had a very busy morning coming into the lunch. It's now time to grab whatever your specialty drink is for the afternoon. It's officially afternoon somewhere on this special TradeGiving event. And our next speaker is Mr. Ron Haight. If you were here with me this morning, he gave a bonus away. Such a nice guy, such a great friend and colleague of mine in this industry. And he's going to be our next speaker. Before we do that, of course, it's time to give away some stuff. So first person to answer the question correctly in the questions box. So locate the questions box. Let's make sure everybody's ready. Throw a Q in the questions box for me. Oh, I see you, Phil. There you are. Okay, Amazon. Okay. All right. So the Q's are coming in. I'm getting you. Now, this is the swag bag. This is going to have t-shirts, mouse pad, notebook, hat, fun stuff from a lot of the presenters, the sponsors, the people that we do business with over here at Trade Thirsty. This is only for U.S. residents. So if you win and you're in Europe or wherever else you are, we'll figure something virtual and give it to you. But I can trust me when I say I'm not sending you a swag bag to Italy. It's just not going to happen. In the 90s sitcom Friends, what was Ross's girlfriend's name? And Jennifer Aniston was the, oh, they're coming in so quick. Okay, Lefty. Lefty, you have, I don't have your last name, but whoever is signed in as Lefty, I'm assuming that's, you're a lefty. You got it right. And everybody knows the old Rachel. Rachel, right? Jennifer Aniston. She's in the morning show now. It's really good on Apple if you like that kind of thing. All right. So Lefty, if you'll give me your email address and tell me what, if you give me your email address, and then we'll get your physical address and we'll send you a swag bag from right here from my house in Alabama. All right. So our next speaker is Ron Haight, and he is over there patiently waiting. He was here this morning with me. He helped me get my shiz together, helped me make sure my sound and all my stuff was working. And that's the kind of guy he is. He's the kind of guy I want on my team. You there, Ron?
I am. Can you hear me okay?
Roll Tide, man. I hear you.
Oh, fantastic.
Yo. All right. Well, we're right on time. Sal's got us back on time. So
Oh, that's
you
awesome.
can share your screen.
Can you see it?
Okay. I got it. I see your screen and I can hear you just great.
Oh,
And
cool.
thank you for coming back, for being here this morning for me and helping me through my muddle and then coming back. Appreciate you so much.
Oh, thank you so much. Yep, you're very, very welcome. Thanks for having me. All right, and I will make sure I am handing it over to you before the top of the hour as well. All right. Hey guys, can you guys hear and see me okay? So Jeanette said yes. Can you guys just give me a couple yeses in the Q&A box? And we are going to get started. This is going to be a lot of fun. I appreciate you guys being here today on Black Friday. I agree with what Silas said. It is so much better to be here at home than going through all that crazy shopping, especially in my area. We have a couple malls and it's nuts. It is absolutely nuts. All right, cool beans. Hey, everybody. I see some friendly faces. Very nice to be here. All right, guys. So we're going to talk about the top 10 stocks for now and right into year end. That's correct. You guys should see my screen. I am going to bring up Thinkorswim. Now you're going to see Thinkorswim live. So you guys are correct. Okay, just really quickly. So I normally I talk a lot, and it's I'll go on for an hour, hour and a half, sometimes 2 hours, and I do this presentation. I take lots of questions. In order to keep everybody on time, I'm going to talk a little faster. I'm going to still give you the guts of a presentation, but I can't go over. We have to stay on time. If you have questions, you may ask as we go through this. Please feel free. I can talk and I can peek over here at the question box as well. I will try to answer every single person's question at the very end, but really important. As always, everything in this presentation is for educational purposes only, not advice to buy or sell. Everything is always in a virtual paper trading account. Past performance, no guarantee of future performance. Just because something happened 2 times or 1,000,000 times in a row, no one can guarantee the future. Quick question I always get asked. Well, if you say virtual paper trading account, do you trade? I do. I do trade with real money. If I specifically talk about a stock that we're looking at, I'll tell you for disclosure purposes. The difference is I'm not licensed and I do not want to be. I don't want the government in my life. Therefore, I cannot tell you what to do with real money. So it is a real disclaimer that needs to be said. Now, what I'm going to share with you today is data, and it is facts. So if you're an engineer, you're someone who loves data and says, you know what, we all might have a favorite guess as who's going to win the football game later today. Or in the case of Jeanette, she always loves Auburn so much. That's one thing. But when it comes to trading, I want to share with you fact-based data sets. And if you've never seen this presentation before, as it starts out, you literally might say, I don't believe it. It sounds like a whole bunch of hoop, or whatever, but it's real. It's 1 + 1 gets us to 2. Some of you guys might love trading futures with some of these other awesome presenters today, and that's fine. Some of you guys might just trade stock. That's fine. Trade options. That's fine. This can be for everybody. So if you don't know options, cool. If you don't know Spread trades, cool. If you just know stock, cool. You can add this to your toolbox. And it really, when you understand what I'm sharing with you in 2 clicks of a mouse, I won't be taking up your weekends. I won't be taking up your evenings and all that stuff. This is 2 clicks of a mouse. And you guys see the hottest trading ideas for every week of the year from today forward. Whether you're a 1-week trader using maybe weekly options to somebody who says, hey, if that stock wants to go up for 3 straight months, who am I to stop it? I'm like, exactly. So let's go ahead and jump in and do this. So when you come to financial and you log in as a member, and that's what you're seeing today. So what I'm doing is I'm giving you access to a financial.com paid account. This is my real account. And when you see this, this is what member looks at. And I'm giving you comp access. So this is me pulling back the curtain and letting you see everything. You're going to see your name in the upper right-hand corner. That's me. Now, to get access, 2 clicks of a mouse in under, 30 seconds, 20 seconds, you take your mouse, come over here, you click seasonality, and then you click screen. And we are done. What will immediately appear will be a list of stocks that have incredible track records of soaring or crashing. We're going to do both. The market is back in a bullish posture. We can do both for whatever time interval you want. And we go by weeks, 1 week, 2 week, 3 week, 4 week, 5 weeks. I'm not here to tell you these are amazing trading ideas. This is the best part. These are the stocks telling your own track records before you ever consider putting a dime into them. So I'm going to say this probably 1 or 2 more times. If I get run over by a reindeer this holiday season with hoof prints on my forehead, you all will be fine. As long as you have access to the financial data, you know exactly which stocks get pushed when and for how long, up or down. And it's nuts, but it's real. So what are we looking at here? Well, we're screening the data, and I'll talk about each one of these columns here in a moment. We are screening the entire U.S. markets. You'll see it over here, stocks and ETFs. By the way, if we have any folks from Canada, you can just go up here and click the Canadian data set, and we'll bring Canadian data, or just stick with the U.S. data. I trade U.S. markets. I mean, I'm from the U.S. I'm from Pennsylvania, and even though love our Canadian friends, their market is thinner. The Australian market, thinner. This is the most liquid market in the world. That's what I want to be doing. That's why I trade it. So stocks and ETFs that have gone up, we can make this number whatever we want. 5% or more, 10% or more, whatever we want. I stick with 5. And then over the next 5 weeks, it's like, let me just stop. Oh, by the way, and I'll go down one more. Hold on. And historical accuracy of 70% or more. What I just said might sound insane, but it's real. We just asked our software at Financial to go data mine the US market and show me anything that goes up 5% or more historically over the next 5 weeks, 70% of the time track record. Boom. And there it is. And every time we move one of these sliders, our data will instantly repopulate. And we're not saying these stocks will. And I want you to listen to the tense of the words that I use. I can't say will. I'll use words like have, because this is fact. These things have happened. This is a list of stocks over the next 5 weeks that are entering their rock star window of time. These are the MVPs for the holiday season. Okay, let's keep going. Now, I have something called advanced filters. Stock score, we will come back to this. This is a proprietary algorithm that my business partner and I wrote. I have it set to both. Optionable stocks, yes. Even if you don't trade options, just leave it to yes. It's a liquidity thing. If stocks get options traded against them, they're typically more liquid. It's just a helper. Share price, we don't go under 5. There's a reason. Certain funds out there, mutual funds, etc., if a stock falls under $5, they won't even allow it in their fund, and they go and sell it. They have to sell it. It's in their bylaws. If you think back to when Citigroup, back in the financial crisis, they ended up going through a reverse stock split. That company was so widely held throughout the institutional community that they would have been basically, they're done. So companies will actually reverse stock split in order to get their share price above that $5 threshold in order for it to keep trading. It's a dirty little trick, but it's a legal one. 50-day moving average, it's set to all. That's a personal thing. 30-day average volume. We go about 500,000 shares per day just for liquidity. If you said 550 or 600, who cares? But we just go around 500,000. 365 average volume is a personal thing. This is the big one. Minimum number of years of trading history. We do not want broken clocks right twice a day, blind squirrels bumping into a nut, or to use football season. We don't want a quarterback coming off the bench and their first pass is a touchdown. Heck, maybe their second pass is a touchdown. These are not MVPs. They are not MVPs. They've thrown 1 or 2 touchdown passes. It was their only pass. If someone does that year after year after year, game after game after game, that's different. That's pedigree. That's what this 7 represents. Now, if you pick 6 or 8, who cares? Don't go below 7 if you follow me, because I've seen too much data. 7 is the ballpark number where I think this stuff really starts to help us. We don't want 2 or 3. Go to 7. We have some crossovers in here. Market cap, you can also cut out really little companies if you want to. Just move that up to 1, 2, 3, 4 billion or something. And if you guys are in like the financial sector, healthcare, real estate, you can actually search just by sectors. Now, I told you this was easy, didn't I? And I'm talking pretty fast. Once you have all these picked, you do this one time. You come up here and hit the floppy disk, and you can just give it a name. And we can call it, here today, we'll call it Black Friday, 5-week bullish, whatever you want to call it, hit save. Every time you guys log back in, this is always saved. You never have to do it again. How cool is that? No remembering, you do it once. And by the way, if you hit this little play button here, I will appear doing a voiceover telling you exactly what my favorite settings are, and then you can have your settings match my settings, and you're done. So we do have how-to videos showing you how to use the website right there. This is not rocket science. I love having a company. I love helping traders try to do better, but I am not here to take all your time. You can be day trading all day and use this to help in the evening. You can just do longer term trading, shorter, whatever you want. It's all fine. 2 clicks, you get the data and you're out of my site. It's all we really need as a trader, to show me what has been historically pushed and show me when. Before it happens, that's what this data set is. Okay, so I've gone through all these settings with you. Now let's go ahead and zoom in here. Just move this down a little bit. Perfect. I'm going to get the little GoToWebinar pencil thingy out. I'm going to pick my color. There it is. This. I'm going to circle these. 1 4-letter, and it's a clean word. It's data. I'm a Star Trek fan, so I say data. Data. We buy our data from CBOE, Morningstar, Y Charts, and others. We compress this data. Guys, this data is not cheap. We compress it. We will do over 1B with 1 billion, over 1 billion calculations every night. So we use end-of-day data on purpose. If we were to use live data in our website, every time you blinked, nothing would be the same, because stocks are trading in fractions of seconds, fractions of pennies. There's never going to be something on here that you'd ever say, well, oh yeah, it said that, and then you go look and you come back and it's gone. This is not day trading. This is end of day trading. So we wait till the data comes over and it's ready for you by 6 a.m. Eastern the next day. Now today's Friday, markets are closing. You're going to see this be updated tomorrow morning, which would be Saturday at 6 a.m. If today was Tuesday, well, Wednesday morning at 6 a.m. Eastern, all the data is uploaded. Sometimes it's uploaded sooner. We just have to wait till they send us the data and then we do our calcs. Okay, now let's talk about what we see. We know we're looking at data. Now we can pick any one of these. Let's just take the one at the very top. Oh, let's do Liquidia. It's easy to say. Let's do this one, LQDA, for an example. Remember, we're ignoring stock score right now, and I'll come back to that. 2 of you guys already asked about it. Ignore that stock score column. I'll come back to you. Liquidia is showing a 19.61% gain. In fact, the top 3 are all bullish trading ideas. You know, I was talking with Jeanette. She said, hey, what's your topic going to be this year? I'm like, same thing it always is. She goes, but that's what it always is. I'm like, and we joke around a lot. We horse around. I'm like, well, if it's not broke, you don't fix it. So it doesn't matter. What the difference is the time of year. So my topic will typically be the top 10 stocks set to soar and crash next, depending, are we in a bullish or are we in a bearish market? We're in a bullish market. We're also at the holiday rally. So my topic's going to be top 10 stocks for the holiday rally, for year end. I even threw a bonus on for the new year, which I'll show you those as well, just for being here today. By the way, you're getting more than 10. I'm going to overload you with tons of great ideas. But the top three have 100% track records over the next 5 weeks. Well, that's really easy to understand if we say, well, 100%, we can't go higher than that as a track record. So this column right here is what we call PTR, proven track record. They've never lost. Now let's pretend the market's open and we all want to go buy these things right now. And we buy it today. And then today's what, Friday? You come back to me on Tuesday and you send me an email and say, Ron, I bought all three of those. Oh my gosh, Becky, they are all up. This is the greatest thing I've ever seen ever. I'll write back to you and say, thank you. So glad it's working for you. But it doesn't mean a hill of beans. So well, why would that be? This, guys, is a 5-week trade. This is right to the end of the year. 5 weeks takes us into December 31st week, January 1st week, right into the end of the year. Now, if you buy all three of those in your virtual paper trading account, and then you write back to me on Tuesday, let's say the market's down Monday, Tuesday, Ron, this is the dumbest thing ever. Oh my God, this stuff is terrible. I'm like, hold on. Sorry that they're down. I can't control the market, but guess what? It's a 5-week trade. So regardless what happens on Monday, Tuesday of next week, or heck, even in a week or two, irrelevant. It's a 5-week trade. Are you guys with me? For the next 5 weeks, these things have never lost. I would say to you, well, what would be a better trading idea than that? Like, I agree. It's just data. You see how you don't need me? I mean, I'm here to help you, but really, if I do get run over by a reindeer, y'all are fine. You got the data. Okay, now let's go to the next one below it. And I'm going to change my color here. We're going to change it to, let's do green. We're going to do Orla mining. Now this one, 34%, 34.46, 87% of the time. Holy crap. Guys, this is in 5 weeks. These are very unusual. When you think about the entire stock market, you don't typically see moves like this. This one, yeah, it's a $13 stock, but hey, 30% is 30%, whether it's a $1,000 stock or a $10 stock. It's amazing. But 85% PTR, 1 year or more, it has lost. Here's what we don't do. We don't put any lipstick on the pig. We don't massage these numbers. We don't go back just over 5 or 10 years or whatever it is and do a sample set when we show you this data. There's nothing wrong with going back only 5 or 10 years. I want you to know we won't do it. We're going to show you everything, and the choice is then yours if you try to shorten it. We are saying that this is warts and all. You take all the wins, you take all the losses, you add them up, and just show me what you got. And in this case with Orla, yes, it has lost, but even with the losers, oh my Lord, you are still coming up smelling like roses. This is nuts. Now the question becomes, well, now which one do you pick? Do you take stocks that literally have never lost and they have gone up 10%, 17, and 19? Or are you willing to roll the dice a little bit and say, well, in theory, you roll the dice and say, 87%, that's not bad, but holy crap, does it blow away the others? I'm like, exactly. And this is always the battle traders would have in their heads, and they sort of like, oh, what do we do? Do we go 100% track record, or do we just pick ones that, man, they just blow up to the upside when they run? And that is your decision. We're going to do Orla as an example today just because it has a big move and it's a cheaper stock that a lot more folks can follow. Okay, so we understand we're looking at stocks and it's all data. I am not manipulating this in any way. This is fact of what has happened. Now I get the question, okay, you keep saying the F word, the clean one, the fact word. It is. I could have AI reading this. It doesn't matter, a robot. It is. It truly is. Now the question is, well, what and why could this possibly happen? This just does not compute. It does not make sense. Something's weird got to be going on here. And there is nothing weird about it. It's 2 words. It's big money. Big money moves markets. You've heard that before. It's the same thing applies here. Now I'm going to assume, Jeanette puts on an amazing Black Friday event. There are a ton of you here. This is awesome. I'm going to make an assumption that there are none of us who are institutional traders. We're not trading $1 billion. We're what would be considered a retail trader. If we are a retail trader, even if we all go out and buy 100 or 1,000 shares, We can't make the market move. We're nobody. We're a guppy in the ocean. Hey, whether you have 10 million or 10,000, it's a lot of money to us, but it's nothing to the market. So imagine we all go in and buy one of these stocks. We might make one block trade on the CNBS ticker. And then what about the rest of the day? The week? I mean, holy smokes, the next 5 weeks. Now you realize we can't, you and I can't do this. This is big money that's contributing. Now you might say, but. Big money is supposed to be the smartest money. Guys, hedge funds blow up all the time. They send back money, they lose money. They are not immune to this either. Not all funds make money. But why would they do the same thing at the same time? You know what? I don't really know. What I can tell you, the data says it happens, period. Now you might say, what about product cycles? What? It does not matter. This is the result of what has happened. And in fact, my business partner went to work at a hedge fund for a brief period of time. We had to sign a non-disclosure agreement. I'm not here to, I'm not fibbing. It was real. My wife says, hey, why aren't you talking to so-and-so? Like, I can't. She's looking, she's like, are you guys fighting? I'm like, no, he's doing something. So I said, listen, he's at a hedge fund. I can't tell you the name of the fund. It's real. Here's the point. He goes to the fund. They know this. They have this. They don't have our product. They built their own. My point is this. If you are trading billions of dollars, hundreds of millions of dollars, you're going to know about this because big money moves markets. So we have spent 7 digits of our money to build financial. So a retail trader, if you will, can have access to the same information, that literally the same software the institutions have. Now, they can't stop us from showing it because it's just data. 1 + 1 is 2 here. This is not rocket science. The issue is, how do you do thousands of stocks in the US, Canadian markets? How do you do calculations every time a day passes, chop off the past day and add a next day on, and then do a recalc for all the years they're publicly traded? 7, 10, 20, 30, 40, 50 plus years. And the answer is, even if you have no life, even if you have, all you do is data on the weekend, you can't do it. But we can. And so do the institutions. Institutions know other institutions cause these, quote, anomalies or phenomenons. You may call them that. I'm just calling them their data sets. This list that I share with you is the hot stock list for the next 5 weeks. If we had an event next week, the list is going to change. In fact, if we had it in 2 or 3 days, the list can change. It could change day to day slightly. And then as more time goes by, the list just keeps moving. Now, what's neat is when the big money comes in, they create like a wave in the ocean. They're going to start buying and accumulating their shares because they're trading such massive size. I mean, if you were a Mr. or Mrs. hedge fund, you're not going to go in there and say, I would like to plop down my 10 million share order of Boeing today. Like, yeah, you're probably not going to do that. Otherwise, the market makers are going to know. They can front run. You're going to have your brokers sending you alerts, massive volume. They don't want this. They want to buy on down days. They want to start building their position over days and weeks, creates the push, and then they stay in. Because if they go plop down their huge order, and then 3 days later they change their mind, they'll cause the stock to crash. Can't do that. So guess what? They're going to exit over days, maybe even weeks. Creates this wave. This sounds like a crazy story. I'm going to prove it to you in about 2 minutes. It's real. I'm going to share it. I'm going to show you on a stock chart. It's going to blow your mind if you've never seen it before. So I'm going to show you where they start to build their positions, because that's going to cause the stock to go up. I'm going to show you where they've sold their positions. This is going to cause a stock to top out or even go down. And then you and me, boop, boop, boop. We're going to be the happy face in the middle. If we want to follow seasonality, I will show you where they have started to buy your stock. I will show you where they have started to sell your stock, because that's what makes stocks go up and down. And since we know this, we can literally get in, position ourselves at the same time or even ahead of the window that they typically start buying. Yeah, chew on that one for a bit. It's no joke. Guys, this is all data. It's why if you Google me on the internet or you'll ask around, I'm an old bull. I'm just here to tell you this does exist. This is not fantasy. This is real. And it's super confident building. Now, we understand we're looking at data. We understand big money moves markets. I get this question, which is what some of you guys, I can't see your names. It just says empty field, but A couple of you have already asked, what about that stock score? What the heck's going on there? Okay, that's this right here. And you'll notice that if you come down to these two down here, it says sell, but the others say buy. So what's going on here? Guys, everything that I circled in blue is 1 + 1 is 2. If you're an engineer, you're someone who loves facts, you are in hog heaven. You love this. Like, I don't have to listen to anybody, no systems, no anything. You are correct. Now, I can't guarantee it's going to play out again. Life doesn't work that way. But what I can tell you is this is what's happened over its history, losers and winners combined, etc. And it's really, really powerful information. But here's what we did. I got into the markets around 2000, so did my business partner. He has MBA background, Wharton finished near the top of his class, etc. I have the background of the opposite. Never going to college, having to learn the markets. Literally, I was the guy saying, what is an option and how do I buy a stock? I had no background. So I came up completely different. We ended up meeting, we became friends, and we built a company. Well, we started realizing that we both were aware of seasonality, but no one ever told us it was, quote, this good. I'm like, oh my God. And like, there was other stuff out there. And sometimes it just seems confusing, or maybe it just doesn't, I don't want to say work, but it doesn't quite, it just does, it's just not easy to use. And it's not explained maybe the best it could be. We ended up building financial back in 2016 and we never looked back. So we are completely aware. We are on board. We've seen the data. It's why we share it with you. It's why it's so popular. But here comes the but. How can we make it better? It's like, is there anything we can do to try to make life better? So here's the deal, guys. If you are an engineer and you are a scientist, stay in your lane. Stay with those blue circled headers. But give me a chance here. Stock score is the algorithm that is literally arguing against the seasonality effect in the market. No bull. Wait, we just spent the last half hour talking about how amazing seasonality is. Yep. And I created something that's going to tell you if it's looking really, really good this year, or maybe this is that year it may not live up to its historical track record. We take into account 4 metrics: fundamental analysis, technical analysis, sentiment, and seasonality. We roll all 4 into one. We give it a score. So when you come down here and you look at ESTA, SIBN, LQDA, ORLA, LOMA, GDYN, not only do these things have great track records right into year end, we can't find anything wrong under the hood. Does that make sense? Therefore, we rated a buy. However, the bottom two, CNH and James Hardie, even though these guys have 80+% track records, really solid data, there's something wrong. We're rating these a sell. So here's what I would say to all those scientists, engineers, people who love facts, which I do. I'm a Virgo. My business partner says to me, you know, you're a Virgo and you're like an engineer. I'm like, no, I'm not. He goes, yeah, you are. He goes, you like data way too much. Well, of course, he's an engineer. So here's what I would say to you. Are you really going to be able to trade all these ideas? Maybe, maybe not. Wouldn't you love to have fact-based, data-driven trading ideas? And then all the weaker ones removed. So now you're only looking at the absolute shiniest apples on the tray, the MVPs of that tray. I think the answer is yes. So here's what we do. Watch this. I'm going to erase all these drawings. Get my pencil back. You come down here on the right. You take that stock score and you move it over to a buy. All of the cells are now gone. Now when I show you this list, hey guys, these are 100% data-driven, fact-based trading ideas. And we removed anything rated as sell. So we are only showing you the best of the best. Are you guys with me? Could you give me a couple yeses? Because if I can get by this, I want to go look at some trade ideas. Let me know if you're doing good. Hopefully I'm doing good by explaining this to you. So with stock score, you get the best of both. You still get data, but we took anything out that looked a little wonky. Okay, cool. Now, question for you. Who here wants to trade stocks that have beautiful 100% track records of never losing? Or do you want to come over here and do a little oinking? We'll hit percent increase. And when we do this, we can sort by, not only do these have really great track records, but these are the ones that have moved the most into year end. And people usually smile. I wish I had cameras on everybody. There'd be like this little cheek turn up. It's like, yeah, it's me. That's me. Me too. This is what I do. So what I'm going to do is I have a couple prepared for you today. Orla's going to be one of them. And we'll talk about the track record. I'm going to put this data on a chart. Now here in Pennsylvania, the kids are off today. I heard of the whole week they've been off in Florida, etc. with the holiday. You could literally bring your 8-year-old in. I think my 5-year-old, she's 5.5. She could probably do this. I will take you back to when we were kids. I will plot these little dotted lines on a chart, and I will show you how the big money has pushed them up, pushed them down, and just let them go sideways for months at a time. And you're going to start thinking about being so surgical with your capital. You're thinking, why am I holding stocks for a year or 6 months? Why am I not just holding them for the 8-week window when they do really well? I'm like, bingo. My goal here today is try to make you think about being more surgical with how you apply your money. Stop wondering why stocks aren't moving. Start using their own data as your secret weapon too. Anyway, so percent increase, 34, 19, 17, 17. This is the next 5 weeks. Now, when you click on this chart, we are going to go and look at a stock chart, this treasure map of that stock. But before we go there, I want to take you to the spiders. So this is the chart you're going to see for Orla here in a minute. I want to start out with this one. We will tell you how much data we are getting. So the data providers are giving it to us. 32 years of data on the S&P 500 ETF, the spiders. This solid line, it is a visual representation of what the S&P has done. That's all. It's just to give you some idea. Now the treasure map takes us back to when we were kids. You move this 1 week at a time, and you come down here, and we will share with you what that data set is. So watch when we move out here. And you, by the way, can see how quickly our data changes. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. So guys, right into the week of December 31st, wherever the 31st falls, the S&P, and this is still the holiday rally. This is the nuts part. It's 1%. I have a question for you. Would you have attended my webinar if I told you that my webinar topic was going to be, I would like to show you a stock that goes up 1% by year end, 68.75% of the time. I'm like, I don't even know if my mother would show up. It's pretty awful, but this is what they talk about from this point forward yet. There still is an upward bias in the market. Now, here is the value of financial. Would you like to look at a stock that goes up 1%? Or would you like to look at a stock where I've just shown you that goes up 34 times that figure? This is what the big institutions are aware of. This is what they've built out for themselves, and they don't share it. This is their own stuff because they know they cause it. They're like politicians in a way. Don't listen to what they say, watch what they do. Do you remember back a few years ago when Jamie Dimon was constantly poo-pooing on crypto, and then magically the bank has a position and all of a sudden he's bullish? And he's not the only one. The same thing in the markets. The same thing happens here. They'll be talking about these other things, but this is the do list. This is who they push. This is not the S&P going out 5 weeks and saying, oh, so that's like the holiday rally, 1%, 68% of the time the markets go up, 34, 32% of the time they go down. Yeah. Well, you come ahead by 1%. That's not bad, guys. Here's this holiday rally. Meanwhile, behind the curtain, this is the stuff they have pushed. Notice the word I used, have. This is what's happening. This is no bull. Question. When's the last time you turned on the TV and watched a financial news network and they actually talked about the stocks, the list of stocks before they actually moved? Wouldn't that be valuable? Why don't they? You'll never hear it. I've never heard it. I didn't invent seasonality. We just realized there was a need for it because everybody that's doing it, you hear these crazy price points or they don't even sell it. The big funds just keep it for themselves. This is what they know this, but it's not proprietary, so they cannot stop us from sharing it with you. Seriously, CNBS, why don't they do this? They certainly have the capital. It's turned into more of a political show anymore, it seems, than anything. Like, wouldn't it be great to bring like someone in and say, hey, these are the stocks that take off for the next couple of weeks, guys. We want to help you do better into year end. That would be providing a service. But instead, they'll bring on people, 3, 4 very nice people, be very polite, and I can tell you right now, the interviewer is going to say, hey, you know, AI stocks, they are up like 40% for the end of the year here. The banks are up 20%. Do you have anything left in the tank? Like, what value is that to you and me as a trader, as a retail trader? Like, we want a refund of our time back. To me, it's insulting. That's why I can't watch these news programs anymore. So we do it, and we do it for you. We will show you what they won't. This is that list. So let's go look at some. I got to watch my time here. I got to stop talking here in about 12 minutes or so. We're going to click this, and it's going to take us right to that stock. You see, one click, we're here. So here is Orla. Now 8 years. A common comment I will get, well, that's why it does so good. It's only 8 years. I'm going to share a stock with you in a bit, 50 years of data. It does not matter. I just ask you put a number 7 as the minimum basis, minimum 7 years. Whatever the data is, the data is. This is Orla based on 8 years of data. This is the treasure map. Look how jagged this thing is. You would not think that, okay, 8 years, so it's 8 weeks of data total, 8 yearly weeks of data. How is it going? But it does. I don't know if someone is algo trading this thing. This is sort of unusual to see, but hey, here is where we are. Look at that peak. Over the next 4 weeks, this just 4 weeks, 33.46%. I want you to know something really quick here. As a stock trader, you're going to love 1% a week, I think, right? Stock goes up 10%, or in 10 weeks, you'd be happy. This thing is 33% in 4 weeks. As an options trader, this is where stuff gets crazy. If you have a stock that moves 1% a week, the options have the ability to potentially double. The stock goes up 1.5% a week, the options have the potential to triple. The stock goes up more than 2% a week, the options, it just gets stupid. 4, 5, 6, 8x is the potential. When we come in here and we look at 4 weeks or we look at 5 weeks and we see 34% in 5 weeks, this is insanity from an options perspective, if options were available. And if not, do you really care? It's a $13 stock with a 34% move. Holy crap. So let's go look. Let's go take a look. We're going to go to Thinkorswim. Going to type in ORLA. Oh, magically it's up another 4.5% today. Awesome. This is a 1-year daily chart using Thinkorswim. You can see we are live. This isn't like a recorded thing. Here's what we did so far today. This is last year, same time. What a lot of folks will like to do, and I totally understand it, it's human nature. They go back to the left and they say, did it work last year? I already know that 1 year it didn't. 1 out of these 8 years, it did not. Did it work last year? Yes. Stock was around 470. By the time you get into the end of the year, it was 5 something, about a 20% gain. And then it peaked in February before it paused. Look what's happening now. Just a couple days ago, this stock was around 11. I mean, you can see it. It was around 1160. Then it's at 1260, 1360. You just got shot out of a cannon again today. I was hoping the markets would sort of just be like muted today, maybe a little bit of back and forth, but gold is just running. Gold typically starts getting bullish right around the week before Christmas. It's running now. So now the miners are running. So I brought this one out to some of our folks a couple days ago already. And obviously it's working nicely. The line is up, but this is a window. By the way, it just took out these highs. It's now what I call free range chicken territory. All the overhead supply is gone. This thing can run. If we look at max weekly data, it's everything. This stock is now at all-time highs. There's nobody above it left to sell. So if the bullish momentum is there, there's nothing now to stop it until those buys sell. This is still a really good one. Would have been even better just 2-3 days ago, but we had to wait till Black Friday. So the question is the move gone? Well, so far this week, the stock's from 12 to 14. What is that, 10 or 15%? The data set at Financial still says, I mean, holy crap, 34%. Guys, this is a really great trading idea. Really great trading idea, right into your end. And this is when you overlay 8 years of data, the line drops. Well, then, again, if you came in late, this is going to literally sound like fantasy. It is not. That dotted line is not a prediction. It's not hopefulness. It's nothing but reality. This is what they've done to Orla collectively for 8 years. You get into the end of the year, and I do not know why. Other miners stay bullish, not Orla. This thing goes boop, and then it comes back. So, question. If you had the stock telling you what it's done historically before you do anything, wouldn't you want to know that? It's like, oh, so if I buy Orla now, the line goes up. Yep, they typically have pushed it. We get to make those claims because that is what's happened. The stock has gone up. It's not a claim, it's a fact. And then they sell it. I'd like to ask you a question. Guys, if I own this stock, which I don't, I purposely don't own this one because I want to bring it to you. If I did own it, where do you think I'm going to sell it? Oh, the week of the 31st. Now, if I have a lot of gains, maybe I'll wait till like January 2nd and so I don't have to worry about taxes this year. But you can get the idea. This is when you dump it. Now, how easy is this to follow? You can see when they've pushed it higher and when they've peaked it and they've dropped it. Quick question. How many times have you bought a stock, thought everything looked great, technically, fundamentally, it all looked beautiful? You buy it, and then a day or two later, it goes down or it goes nowhere. And then we say to ourselves, because I've been there too, before I knew about this and seasonality, man, I'm like the worst trader in the world. I just can't do better. Whenever I just do the opposite. If I think about buying, I should sell it. Okay. Did you check to see what the big money does? Are you fighting the big money? Are you the fish at the poker table? Or are you going with the big money? We need to be going with the big money, is my opinion. Stop fighting them. Go with them, and you know when they leave. Let's do another one. So what I did for you guys today is I did a 5-week search, and I did something else fun. I came in here and I did a 13-week search. Oh, sorry, a 12-week search. It says 13, but I moved it to 12. We can do 13 too. See, boop and boop. Change the data. Everything happens very quickly. U.S. Foods, 100% track record. Pretty amazing. Or do you want to see stocks that just go up the most? It's like, oh boy. And you start looking at this list. We can do this for whatever time window we want. Now we're actually talking about going into Q1 of next year. So you can do this either way. So I have stuff lined up for you. We already just did Orla. I'm going to get rid of that. Now let's go do something else. Let's do Pulte Homes. For anybody that thought that the reason seasonality has these really great biases, bullish and bearish, is because stocks aren't traded very long. What do you do when you have a stock traded 53 years? Guys, that's the stock market's history. Check this out. Pulte Homes. This dotted line, look at it go. And then just look down here. You'll see the track record. This is the track record. Watch as we go. 66, 67, 75, 77, 71, 67. And you can keep going. And you're like, now it gets in the 50s. We actually know that into that next earnings report, which is what it seems like, this stock has around a 77% track record. So for 5 decades, real estate crisis, wars, attacks, we said financial crisis, interest rates, COVID, all this stuff, all put together. And you still have, wait, a 13% rise in 9 weeks, 77% of the time. Like, are you kidding me? Guess what the home builders started doing right now, or the past week, about the last week or so. They've bottomed, they're sniffing out. We could say, well, maybe the rate cuts are coming. Guys, there have been rate cuts, different things, yes and no's, raising of rates, falling of rates, it doesn't matter. And yet this is what they do. It separates the opinion from reality. No bull. This is the window. Let's go take a look at Pulte. Come in here, type in PHM. Stock is starting to rally. Now let's go back 1 year from now and take a look. This is where Pulte was last year. Uh-oh, it didn't work last year. Look at that thing. That was death. We're talking 135 to 108. Ouch, 30% drop. That's going to hurt. Yeah. There's one thing I want to share with you. I'm going to put it in the chat box. I'm going to send it to everybody. No matter what charting platform you are on, I'm going to share this with you. 50-day SMA. This is an institutional moving average. Institutions move stocks, not you and me, not unless we're, a whale. We can't do it. I'm going to share this little tidbit with you. If a stock is below the 50-day, which is the orange line, the institutions are bearish. That is their technical view. If you go to become a chartered market technician, a CMT, they will teach you this. This is not something I'm making up. It's real. Stocks that are below it, like over here, the institutions are viewing this bearish. No touchy. It's above the orange line. It's touchy. It's go long. So if you said to me, well, last year it didn't work, what happened? I was giving this trading idea away to you last year at this time. This thing fell out of bed. And what did I say? If it's below the orange, don't touch it. Did I nail it or what? It's funny how this works. Oh, it's above the orange. It's go time. Guys, this is a fantastic trading idea based off 53 years of data and has nothing to do with me. You have a choice. You come back over here and say, Ron, you might sound like a nice guy. That's fine. But you're a human being and you are faulty. This is correct. Then all you got to do is say, I'm going to follow the data. I'm going to buy this here and I'm going to sell it right there. 77% track record. Thank you very much. And by the way, as an options trader, a 1.5% about week average, these options would have the opportunity, the potential to triple, double, triple, quadruple when you start going 1.5% a week. And you can use Thinkorswim back testing to prove it. It's nuts. So if you say to me, what's a great trading idea? This one. They're already starting to get in here. And by the way, Buffett at Berkshire, they started scooping up some home builders in their portfolio as well. Now watch what happens if I take you back. Max Daily. Okay. All right, here we go. I'm going to take you back to 2022. And this very bottom down here, I'm going to do this fast because I have to keep everybody on time. I can't go super deep into this. You're going to listen to me and watch my mouse. If we come back over here, where was today's 11/28? Where's 11/28? Right here. 11/28. This is 2022, 2021. Remember, interest rates were still going up. They were going up and it was supposed to kill home building stocks. It goes from 51 and then into what? January, you're at 57. It goes up about 12, 15%. Now come over here. What are we at? 11/28. We go from 43. Guys, in 2022, interest rates were going higher. Inflation is still out of control. This is just 3 years ago. Remember inflation? Remember COVID? It's like, it's nuts. Inflation still is bad. And they said, well, that's going to take money away from the consumer. With interest rates rising, there's no way housing stocks could ever do well. You can see the chart. The stock goes from 43 to 60, and obviously it just kept going, right? Okay, 43 to 60, 50%. Now come over here. Let's do 11/28. Right here, 87. This is 2023. Again, interest rates are still higher. 87, 108. What is that, another 25, 30% move? Notice each time above the orange, above the orange, above the orange, above orange, above orange, above orange. Now you come over here to last year, 11/28. I'm going to zoom in. 11/28 is right here. Are you above the orange? Actually, you're just below the orange. You are not taking this trade. As me as your helper, my job is to try to help you do as best as you possibly can with you understanding the data. Are you above or below the orange? Wrong, or below it. Don't touch this dang thing. And down it goes. Guys, 11/28, we're above the orange. Green light, it's go time. The only year in the last 4 that I showed you, you would have lost was the year it was below the orange and you wouldn't even have been in it. Do you follow me? Guys, this is brain dead simple. Just put that on your screen, color it whatever color you want. This is it. This is what the institutions know and they are aware of. How about Cognizant? We'll do this one and I'll have you out of here. 27 years of data on Cognizant. From this point forward, this stock goes up 88% of the time, nearly 90%. We are talking almost 3 decades, 27 years, and this stock starts running right through February. You are even being told the peak before they drop it back down. This is nuts. Guess when a good time to buy it is? To consider buying it. It's now. You want to see the best period for trading that stock? I didn't have time to go into this. We will actually show you when the most money's been made trading that stock. Look at the green. CTSH has gone up an average of 16% in that 11-week window, 88.89% of the time. Not only are we getting a very high track record, the green line is the money line. This is when you would have made the most money. By the way, do you want to see when this stock does well? And you can see here, when we get into October, it starts running and it keeps running through February. Why would you hold this stock past February? They drop it back down. Let's go take a look at a chart and type in CTSH, and I'll bring you over here. Here's October. There's the low. Wait, isn't that exactly what the data at Financial said? Remember, the data at Financial is just a representation of what the stock HAS has done. It's launch time, and it keeps going into February. Okay, where's October? Oh, you mean here? So the stock went from 66 to 71 already. Oh, I mean, surely it's not going to do the same thing last year. Where was October last year? Oh, you mean over here? It was around 75, went up to 82, back down, back up, back down. And where's the peak? Oh, you mean at 90? So we're talking about going from 70 something to 90, nearly a 30% gain. And then the stock falls off a cliff, which by the way was the tariffs. So what about over here in February of 2024? You mean when it also fell off a cliff? There's the down move. There's the down move. This is tariffs. This is not tariffs. Did I tell you like an 8-year-old should be able to do this if they want to follow seasonality? And down we go. Guys, this is not rocket science. And when it comes to Netflix, Netflix is entering a time where if you take a 13-week period, post earnings, 95% track record when we get into earnings in January. No joke. Guys, the stock's publicly traded 23 years, 95% track record. Are you kidding me? Yeah, go back and look at that one. This is launch time. So here's what I'm going to do. I'm going to have you out of here. I get testimonials all the time. You're going to have about 6 to 10 minutes to do this. There's a limit of 50 packages. Reagan's already saying welcome to you. She is posting the link. I get testimonials like, hey, my trading accuracy has skyrocketed. I'm no longer wondering why the stock I picked didn't move. Seasonality is like finding a metal detector at the beach. Done taking guru trade alerts. Jan recommends it to her friends. Who does that? Most people don't tell everybody what they buy. So here is the deal. This is a Trade Thirsty Black Friday special. There are 50 packages. They will be gone. You're going to get 3 bonuses. I do want you to know this package will not exist after Black Friday. My website price is $2,000. Yours is not even half. It's not even 7. It's not even $497. This is the mother of all holiday deals for you guys. It is $397 a year. I would say this, go get them. It's $397 for a year. There's no catches. The link is Black Friday, financial.com/Black Friday. You will get a copy of my hot stock list. You can actually jump into the website and go pull it out yourself. Just grab it and take it with you. Invite into my members only session. Heads up, tomorrow, I got to send the invites out this afternoon. 10 a.m. Eastern, tomorrow, I'll be going live and giving you a live demo of how to use this. It will be recorded and it will be emailed to you. You also get a copy if you want to use an exit system. I have an end-of-day exit system. It's just a 20-day EMA, super easy if you want to use it. You're also going to get access to an extra, I do 1 to 2 coaching calls a month for free. You pay nothing. I've had marketing companies come in and tell me I'm an idiot for doing this. I'm like, why? I'm like, why would you give away a coaching call once a month for a year as part of the $397? And my answer is because you're never going to leave. If I keep giving these to you or helping you find them and you're using it, why would you ever leave? I'm like, you're probably not. If you want to understand how to trade options, I have 4 classes that I previously recorded. These are evergreen. They do not change. I can teach you how to do options. And by the way, I got 5 minutes here. You get all these bonuses. You get seasonality, stock score, watch list, covered call screener, value investor stocks, newsletters. So to be real, these other bonuses, 1164, 588, 2300. You really are getting $4,000 in bonuses for real as part of Jeanette's event. And you're getting it for $397 a year. If you got questions, fire away and let me know, because they're going to pull the mic in about T-minus 4 minutes. Question, how much learn time does this take? Not at all. You come in here, wherever you see a little play video, you click it. My job is not to inundate you and keep you in this website. My job is to tell you, hey, 2 clicks of a mouse, get on over here and grab what you need. And by the way, like I said, I can make this thing go 2 hours. When you guys log in, and by the way, welcome, welcome. Reagan is telling me you guys are hopping in. This is awesome. So we got Brandon, Jacob, Nancy, Phil, Alex, Abdul, and Diego. Very nice to have you guys. You're all going to get an email from me later this afternoon, and I'm going to be auto-registering everybody for tomorrow's live call. I'll show you how to use it. By the way, when you join, you're going to email videos that actually have how-to videos for you to do this too. Now, first thing you do, when you come in, go over here, wherever your charts are at your brokerage account, whether they're at FinViz, stock charts, wealth charts, your broker, put them over here, upload them into the website, because I have all the seasonality data. You could literally see and say, Ron, how do my stocks perform right through Christmas? I can tell you the track record. You can have an unlimited number of stocks and a limited number of stocks in your watch lists. I got the data. Give them to me. Put them in. And it's like, hey, guess what? Did you know that American Express historically is flat this time of year, but Delta does well? Darden actually does well. F5 does not. It's going to sound a little hokey, but aren't you tired of holding stocks and watching them when they go down and say, what did I miss? You missed because you didn't know. And what you didn't know can really hurt you in these situations. Knowing, is this when the big money sells to me? Is this when the big money is leaving and is exiting? And if you don't know that, listen, I can't promise you future results. No presenter here will. No one will. We can't, and it's real. But the thing is, how many times have you bought that stock and said, oh, rolled over, what did I miss? Well, you were the fish at the poker table. You just didn't know, and it ends up hurting you. What we do at Financials, we just show you raw data. You get to be the judge. I'm here to help. We have these coaching calls once a month that are completely free. And Reagan said we're now halfway already. You guys are flying in. Nolan, Leah, Kim, Raymond, Michael, Roger, welcome aboard. This link is going to stay up for today. It will not stay up when we hit number 50, which I would expect we will. You guys, they're still coming in, Reagan. They're going faster. I see. I got Vivian. Or you got Vivian? No. There's Vivian and Janet as well. If you have any questions, I want to put my email address in here. This is the only event we're doing. I'm not doing any open houses tomorrow. This is it for the whole week. My email address is carrotfinancial.com. If you have any questions, if you need PayPal, we can do PayPal too. You will all get the Trade Thirsty bonuses. But if you wait, then you're going to miss the bonuses. So you are getting my best ever member deal. You're getting all those other things I showed you with $397, over $4,000, and we sell those products separately for real for Jeanette's crazy Black Friday price. Oh, we got more. We got David. We got Gerald, Perry. I think it's Riemann. Welcome aboard. Reagan's going to keep dropping the number, and we are. There it is, 19. Gerald, we got, yeah, I saw Janet, Vivian, Carlos. Awesome. Great to have you. It's so awesome. So Jeanette's going to come in here. She's going to pull the mic. We're going to keep everybody on time. I want to thank you guys for registering for this event. We're now down to 14. Coming on in, she's going to ask you to vote for the presenters, which is really important. We want to know how you guys like us and the content that we're giving you. I love doing this event. I actually block out my own schedule at my own house. So this week is, I call it Trade Thirsty House Week. I don't even do anything for my own people. So Jeanette, thank you for having me. Great audience. And, keep going with your awesome event. Thank you.
Yes, sir. I appreciate you too. And thanks for giving us your hour and for helping me out this morning and for the bonuses and all the things that you do for me in a day, in a week, in a month, in a year. I appreciate you so much.
I appreciate it. You're awesome, Jeanette. Thank you so much.
Okay, bye. Have a good day. All right, everybody, let's get it going. I'm gonna release him as our speaker, and I'm going to take back over for a second so that I can share my screen. His link is financial.com/Black Friday together. Putting it on the screen one more time. Reagan has been posting it in the chat and in the questions box to help you guys out that are trying to take him up on the offer. It looks like they are only taking a limited number of people today. And so if you are, you're trying to get in on that train, I would say it's leaving the station soon. Someone posted the power of seasonality, didn't realize the power of seasonality. And I think that is, if you take away one thing today and you learned that, then kudos, because seasonality is the real deal, Holyfield. And a lot of people live and die by, that's the only way they trade. And this software that Ron has is the key to that castle. All right, so let's look at all you people getting ahead of me. Put a number in the questions box for me. Rank Ron from 1 to 10. And I'm just gonna have to say I'm a little biased because he's one of my stars. He's one of my star players. Shows up early, stays late. I've even had him close the webinar down for me before on a Black Friday because I had somewhere to be. He's a beast. Okay, 10s is everyone is oh Joel, thank you for saying that. All right, all 10s and 9s. He only got one thumbs down. That's okay. Well, so we take the good with the bad over here at Trade Thirsty. Financial.com/Black Friday. All right, so let's get back on track here. We've got 2 more speakers left, which means we have 2 more giveaways. And I'm excited to bring Raul Aurora on. We haven't had him on in a hot minute, but he's going to be up next. Before we do that, let's go ahead and do our next quiz. This quiz is going to be for cash, $50 from all of us here at Trade Thirsty, cash plus swag. So as we go through the day, the prizes get bigger. Final prize coming out at 3 p.m. today, and it will be that traveling monitor that I've been talking about. Okay, so here's your quiz. Get your fingers on your keyboard. First one to answer correctly is going to be my winner. Today is all about huge discounts on products around the world. What is it called? Fill in the blank. Blank Friday. Julian, you are first. I don't see. You scroll back up. Everybody knows it. There. Julian, looks like just Julian 2, Julian II. Julian, I need your physical address and I need your email address so that we can get you the swag and the cash. And I need to know if you prefer PayPal or Amazon. It'll be $50 plus a goodie bag from us here at Trade Thirsty. And the answer is, of course, black. All right, Raul, let me get you loaded up here. I'm going to make you the presenter and then the organizer so you can see and answer questions. It's a big day for me, guys and gals, because I haven't had Raul as a speaker on our show in a very long time. And so I looked at what he's teaching over there right now, and I thought it would be a great time to bring him back into the fold. And so he agreed to come speak. And Raul, are you there? Can I get a sound test from you?
Hi, Jeanette. Can you hear me?
Hey, yes, I can hear you fine. Can all my helper bees in the room give me a yes that you got sound on him? Are you able to see the boxes that you need, Raul?
Yes, I can. And do you see my screen, Jeanette? It should
Does it say velocity?
Yes, that's the
Yeah, that's what I see. All right, looks like everybody's rocking and rolling and we've got good sound. And all right, so you have 1 hour, you can take it away.
Thank you, Jeanette. It's always great to chat with you. For those of you that don't know, I met Jeanette, I want to say October 2013 at the Money Show in Las Vegas. And as soon as I met her the next day, I bought all my Alabama football gear, started my shrine to Nick Saban at home. So she made quite the impact on me.
Oh, he says roll tide, y'all. That's what it sounds like to me.
Right. And the rest, of course, as they say, is history. And Jeanette was actually very instrumental in getting us started in the business. When Vince, my business partner, and I, when we met Jeanette, we had nothing. We didn't have any clients. We had no prospects of any clients. And Jeanette was kind enough to take us under her wing and get us started in this business. So we're forever indebted to her. Jeanette, thank you. I really do mean that.
Well, I appreciate that so much.
Yeah, you mean a lot. Our relationship means a lot to me, and thank you so much for everything. It's perfect for Thanksgiving, so I'm very, very grateful to you. Let's get started. Today, I'm going to talk about one of our systems that we have here at Trading Wins. I'm going to give you a little bit of background on myself, but I'm going to spend 80% of the presentation just showing you the system. You don't have to buy anything. You can just take the system as is. I'm going to show you exactly how it works, what to look for. If you have questions, please put them in the chat. I'm happy to answer them. This is not going to be through screenshots or anything. This is going to be on live charts that we're going to use TradingView for. And there's no safety net. So questions you have, symbols you want me to look at, please put them into the chat and I'll try to get to as many as I can. My name is Raul Aurora. I created this velocity system. I've been trading independently since the year 2000. Prior to that, and this seems like a lifetime ago, I was a CPA. Actually, I still am a CPA, I just don't practice as such. After I graduated from university, joined one of the big four accounting firms, and for the first couple of months, there's not really a whole lot to do because you don't really know anything. So while you're going through that training process, there's a lot of downtime. And if you recall back in 1998, 1999, it was the dot-com boom. So my friends and I, our colleagues and I, we would sit around the computer, and this was early in the dial-up days of the internet, sit around the computer and just trade stocks. And eBay would be up $30 in a day. Amazon would be up $25 in a day. Earnings releases after hours became a bit of a party session for us. Everyone would get their drinks and we'd hang out and watch and see what happened with earnings. And I got introduced to options at the time, which was a nascent industry, not nearly what it is today. And the growth in the options industry is something that we're going to talk about during the session as well. So 98, 99, I'm learning how to trade, and it seems pretty easy, especially with options. And I managed to turn $10,000 into $1,500 pretty quickly. And I said, there's got to be a better way. So I dedicated myself, and that was right around the time where you were starting to get more information available on the internet. Google, I think, started in 98, so the search capabilities were getting a little bit better. Prior to that, you probably remember search engines like InfoSeek and Lycos and some of those ones that would give you questionable data. But this way, you didn't have to go to the library, you pick up the information, and I really just dedicated myself to learning as much as I could. Did the CPA thing for about 7 years or so, left that profession, and looked to start my own business, trading and doing real estate. And right around 2011 or so, I met my business partner, Vince, and we decided that we were doing well in our own trading. Why not see if somebody else would be interested in joining us and finding out how we're doing it and becoming teachers and coaches. And at the time, this nearly wasn't the industry that it is today, this coaching industry. So we said, okay, well, let's figure it out. And as I mentioned, 2013, we met Jeanette, and here we are. One of the things that was most important in the accounting profession was, as an auditor, I got to go into a lot of different businesses, and I got to see what makes businesses tick. Even though I'm a technician at heart, I still like to know what a business does, where they make their money. And when you're looking through financial statements, there are a lot of things that management can do to make financial statements look good, the window dressing aspect of things. But if you ever want to know what's really happening in the financial statements of a business, go to the notes. That's where generally all of the gobbledygook is used to bury the bodies. You will see things like sale leaseback transactions, circular accounting, and it's done in such a way that it looks and it passes the gap test, but it can give you a lot of clues as to the actual health of a business. So that for me was the foundation of fundamental analysis. And then when I met Vince around 2011, he introduced me to technical analysis. And if you haven't had the chance to listen to any of his stuff, I would strongly encourage you to do that, because he's a technical analysis wizard. And he talks a lot about money management as well. So all of that stuff we do in our in our mentoring and our training sessions. We'll get to that. But today I want to talk to you about the system that we are working on and that we released earlier this year. And in this business, talk generally is very, very cheap. It is about performance. And I'm going to show you, if you're, just let me know that you can see this spreadsheet that shows our trade log from this year. And this is all logged through our Microsoft Teams community on that our members have access to, pardon me. I'm going to close that up and go to Teams, and I'll show you, here are our trade ideas. So whenever we put on a trade, we will timestamp it here. In fact, we did one today, and I'm going to show you what that one was. Here's the trade from earlier today. We had a trade on SLV. It was a June 2026 45.55 call debit spread that we sold for 402. And that is this trade here that we started on the 12th of November for 205. So this was a 96% gain that we closed out today. Here's the reasoning for it. And if I take you back to earlier in the year, I beg your pardon. If I take you back to earlier in the year, we did not have a losing trade until July 1st this year. So the first half of the year, it was all green. And it wasn't just 2%, 3%. Most of these, as you can see, are option trades. So the one thing that is different in this market than we've had, say, even 5 years ago, 10 years ago, because of the variety of products that are available to trade, it's no longer about being long or short, buying or selling a certain security. It's about looking at a distribution probability, having a strategy, and then putting on a trade that takes advantage of the high probability side of the trade. And we'll talk about that as we get into the session as well. So the market has changed quite a bit. The options market has really, ever since the pandemic, when people were using it as basically a casino, a lot of people are now using it for its intended purpose, which is to hedge, which is to speculate in a safe way. And that's exactly what we're doing here, and that's exactly what we teach. So if we look at some of these trades, I want to look at this one here. There's the Mag 7. The Mag 7 is a 5x leveraged product that's available, ETP. I'm not sure why Alexa is asking questions, but the Mag 7 is a 5x leverage ETP that's traded on the LSE, the London Stock Exchange. And we started accumulating that around the 4th of April. If you recall, April 2 was Liberation Day, and we're going to look at the chart in a moment. So our thought here was that even if this starts to go down, so this was trading at about $46 before the drawdown. Remember, it's a 5x leverage. So we wanted to accumulate here. This was going to be a long-term trade. The problem that we ran into with this particular trade was that the price never went further down. It only went up. Currently trading at about 36 or so, and we're still holding some of that position from April 9th this year. So we're looking to see where we can have an asymmetric gain on asymmetric situation on a trade, where we're risking 1, making 3, risking 2, making 5. So when we do have a stop loss that's hit, we're not hurt that badly, and we live to fight another day. And not only that, we live to fight another day where we can find another asymmetric trade. So what I'm trying to say is, when you're looking at your trading, and it doesn't matter what your strategy is, remember, it's not just about being long or short in this world. You have leveraged stocks, you have inverse stocks, you have inverse leverage stocks, you've got futures, you've got currency futures, you've got cryptocurrency now. So the opportunities, and I failed to mention, you now have prediction markets that you can use to hedge some of your positions in the overall market. And the prediction markets like Polymarket and Kalshi, et cetera, they're not as efficient, in my opinion, as the equity markets are, just because of the number of participants. So there are opportunities, for example, where you will see a prediction market on the price of gold at the end of the year to be at a certain level. You can use that because that's a binary event, and you can use that to hedge an options position on GLD or on gold futures in the equity or futures market. So keep in mind that it's not just long and short. It is what's going to give you the best risk reward, I'm sorry, for the situation that you're in. Okay. So we can talk more about these individual trades. If you'd like a copy of this spreadsheet, please send us an email. We're happy to send you a copy. There's nothing to hide here. We pride ourselves on our transparency, and you can see all these things are noted in this Microsoft Teams channel. So whenever we have an update, we'll note it here. This is the previous one on SLV, the reason why we're getting in, the reason why we're getting out, and it then lands here. So if you look through this spreadsheet, you'll notice when volatility came into the market, and it looks like it was right in this area starting in September. We just closed out the SLV position. Actually, we closed and rolled. So we had the 45.55 CDS, stands for call debit spread. We had the 45.55 call debit spread for June that we purchased for 205, sold for 402, and then rolled that into the 50 and 60 call debit spread for June as well. I have high hopes for silver going forward, especially longer term. So there's the 50-60 that was open today for 288. We'll see how that goes. So that's the only open trade we currently have. So going back to our performance year to date, this is my personal account. And I took screenshots throughout the year. There's August the 13th. And remember, at this time, the market was up, the S&P was up maybe 10% or so because of the big drawdown in April. And because of the strategies that we're using, whether it's leverage funds or whether it's options or whether it's protective strategies, our return was much better than what the market was giving. So there's the 50.8. In September, I was up to 85. Later in September, 92. And finally got over 100% on the 29th of October. And then just in the last couple of weeks, we've had that pretty significant pullback and then recovery. And you can see the impact when you have some leverage positions and options on in your account. Yes, you're going to have the impact of a 3, 4, 5x return on against the market. But when there is a pullback, and we can check what the pullback was, you can see that the account has taken a bit of a hit. But we're continuing to use that probability distribution to find trades that are going to give us a higher reward and lower risk. Okay. Everyone, all the speakers that are on here, they're all smart individuals, and they're all going to tell you the same thing, that trading blind is costing you money. You need to have a strategy. You cannot be chasing entries. You cannot be second guessing exits. Because when you do that, not only are you going to miss out on good trades, you're going to have a lot of regret. And regret plays into your psychology. And we can do a whole session, a whole hour on the psychology of trading and how losses and missed trades impact you. Just know that, one, they usually ring the opening bell Monday to Friday, unless it's a holiday. So you can always get into another trade. And two, even if you want to get into a trade and you're somewhat hesitant about it, there are so many strategies out there for you to be able to speculate in a safe way. Before I mention any of that, I should have mentioned that we're not financial advisors. This is not financial advice. I don't know your personal situation. Before making any decisions about investing any of your money, please speak with your financial advisor, as they know your situation and your risk tolerance a lot better than I do. So going back to my work in the accounting field and looking at broker dealers, being exposed to what makes them tick, their computers are much faster than what you could ever have. As a retail trader, you're not going to move the markets. What you can do is follow price action, look at the fundamentals, see if there's unusual activity of any kind, look at insider buying and selling, more insider buying than selling, and then put on a strategy that works to take advantage of the small edge that you have. Think of this as, if any of you are blackjack players, think of this as a very small edge that you have that you can exploit repeatedly. So you will have situations in the market where there's a bit of an edge. And when we go back, and I'm going to show you this on IBIT, there was a risk-free strategy that was going to generate 10% a year. At the time, a 2-year bond, 3-year bond were maybe giving you 3.5% to 4%. So this was a risk-free opportunity. And once we got into that trade, that opportunity closed up pretty quickly, because when you get that spread between a bond and this risk-free trade, it was a caller. Those opportunities, again, exploited, closed, and we look for the next one. So what we're trying to do is we're not trying to compete with JP Morgan and Goldman Sachs, because we're not going to have the kind of money that they have to be able to move the markets. But especially now with AI and what's available out there in terms of tools, we can at least compete with them in finding out what it is that they're doing, maybe getting a bit of a hint as to what they're planning on doing, and then using a strategy that controls our risk. And very rarely do we put on trades where our risk is not defined from the start of the trade. And we're going to talk about that today. So we talked, again, most of the speakers here have talked about tools that work for them, and your trading style and your risk tolerance are very personal to you. So I'm generally, being a CPA by background, I'm generally risk averse. A lot of you might be risk inclined. We've got members in our group who are retired in their 70s, love risk, happy to put on all kinds of trades without having to worry about it. Can sleep at night, no worries at all. I, on the other hand, different situation in life, younger kids, I've got other responsibilities, older parents. I can't be sitting day trading. I can't commit to that. And day trading, I found out, is just, it's not for me. There just isn't that comfort level. But if it works for you, by all means, if you found that exploitable edge, continue using it. Now, let's talk about the system. Before we move to the chart, there are only 3 things you need to know. You can write these down if you'd like, or just take a screenshot or take a picture with your phone. We're going to look and scan for long and short setups. I'm going to show you how to do that. Step 2, we're going to look at support and resistance. And step 3, we're going to look at a strategy, whether you're just buying the commons, whether it's options, whether it's some other kind of strategy. So if we go back here, you can see our strategy here is just commons. There's a calendar spread. There's a buy right. There's a call debit spread. And you can see, if you're looking through this quickly, call debit spreads to the upside tend to be my preferred strategy. There's no one perfect strategy. I think there's a lot that you need to evaluate before you get into these options trades. But the call debit spread, again, fits. We talk about risk tolerance. We talk about risk profile. For me, it's the right amount of risk for the right amount of upside. So let me take you now to our system here. So we're going to start with the NASDAQ. We're going to use the Qs. You can use the futures. And I'll show you what's happening on our chart here. There's a few things. I'm going to take one of them off. I'm going to take off the 20-day simple moving average. We don't need that right now. And we don't need volume as well. So we'll close that. Okay. In fact, I'm going to close one more. I'm going to close this Lux Algo profile as well. Okay. Those are all free indicators that you can get on TradingView. If you're interested, again, send us an email or put a question here in the chat, and I can list the indicators here. So step one, we've created this ribbon, we've created these buy and sell or long and short signals on our velocity system. So let's look at this one here. Our entry, I'm going to zoom in a little bit. Our entry comes on the 9th of May. Okay, so we don't get a false entry here. We don't get a false entry here. Here's our entry. Now, if we go back, remember, there are 3 steps to the system here. So there's 1, look and scan for long and short setups. 2, support and resistance. When I get this signal here, okay, and this is live market 224 Eastern. When we get this signal here, is this a trade I want to take? My answer is maybe. I may want to start a trade here, but I don't want to go full boat. According to my management plan, when I say full boat, I want to have no more than 1 to 2% of my full account on any one trade. I want to avoid a situation where there's a flash crash or where there's a situation, an unfortunate situation like 9/11, where the market doesn't open the next day. That could cause a lot of stress. And I never want to have more than 50% of my account at risk at one time. Remember the comment I made earlier? When I get into a trade, I want to know my exact risk. It helps me sleep better at night, and it just works better with my strategy and what I'm trying to achieve. What I'm trying to achieve is I just want to beat the market. Because if I can't beat the S&P or the NASDAQ just by putting money in a very low-cost fund like QQQ or SPY, then I really shouldn't be spending time on this stuff. So going back to my return this year, we're at about 80%. And if I take you to the beginning of this year here, and let's say the beginning is right around, call it the 2nd of January. And if I hold down the shift button and take you to where we are right now, you can see the return on the NASDAQ this year is about 21%. So at my 79%, I'm certainly beating the overall market, and I'm not just beating it by a little bit, I'm beating it by quite a lot. Yes, my swings have been wilder than the overall market, but that is something I'm willing to tolerate because I'm only, instead of spending $61,900 on 100 shares of QQQ, I'm spending no more than $1,000 or $2,000 on an option position that can come close enough to me getting a good return while absolutely controlling my risk. Now, what's interesting is if I go back to, and you can't see it on this here, but that red area there, that red area is the Liberation Day area. My account was down about 7% year to date at the time. And if we look at what the NASDAQ was doing, so go back to the beginning of the year, and we go to what the low was that time, it was down 22%. So now we talk about how risk is protecting, how controlling the risk is protecting me. So the drawdown on the NASDAQ is about 22%. I'm down about 7%. I'm very happy with that. And when there's a move up, I'm making a little bit more money. Now, to be honest, probably got a little bit lucky on the MAG 7 and QQQ5 in this area here because the strategy here. So remember I'd mentioned that the MAG 7 was trading at about 36. It was actually trading at about 65. And when it got down, it was down about 90%. So I think our trade was on the 9th of April, which would have been right there. So it wasn't the absolute bottom, but boy, was it close. So there's the goal here was, okay, if it goes lower, I want to buy more. This was not a bet on any individual name. This was a bet on the American tech market. That's really honestly what it was. And if this had gone down further, I just would have bought more. But it didn't. So I'd never really had a chance to buy more and average down. There were a few chances for re-entries. There's one there. So there's another indicator that we use. On the 24th of June, that's a re-entry. There's another re-entry that happens there on the 5th of August. But let's go and again focus on this area here where we have, go back to the cues. So there's that entry. So remember we left off at, do I take this trade? It's a maybe, or we start a small position, quarter, half, whatever is comfortable for you. For me, probably quarter. I want to see, to be fully convinced that this is a legitimate long signal, I want to see a break of a previous pivot high that's clearly defined above the ribbon in the direction of the trade. So the trade direction here we're looking at is to the upside. I want to see a break of a previous pivot high. Now, this one, if I draw it in, we could debate on whether this was a clearly defined previous pivot high. And I would say I'm about 50% there, that yes, this particular bar that paints on the 2nd of May is our previous pivot high above the ribbon. Now, look, we don't get a long signal here. So the system in the background, as it's learning, as bars are forming, doesn't give us a long here. It waits till this long here. And going back to my conservatism as an accountant, I want to be even more convinced. Okay, so I want to see it take out this previous pivot high. Now, this to me is much more clearly defined. We have a higher high, we have a higher low, and then we make this high here and we roll over. Okay. So once we take out that previous pivot high, which happens, if I can get this straight, on the bar of the 24th of June, or you can go to the 25th of June if you want to be extra conservative, that is my trade right here, okay, at 540 or so. And how do I then trail that stop? Where do I get out? Where do I take profits? Okay, one easy way to take profits, or to consider where you want to take profits, is you can put on, and it's on TradingView, you can put on market maker pivots, okay? So these are lines that are painted where there are areas of support and resistance. So let's go back here and say our entry is on this bar here on the 25th of June, okay? So when I get in here at 540, I'm going to use this chandelier exit, free indicator. You can just type in chandelier exit in your TradingView indicators, and this will paint it on for you. There's nothing you need to do. I'm using the default settings, which are a 3 ATR and a 22 period look back. So I'm going to get in here at 540 and put my stop loss here at 520. Generally, for ETFs, I don't want my stop loss to be any more than 5%. I'll say that again. I don't want my stop loss to be any more than 5% from my entry. So we make that assessment, 540, 5% of that is about $27, and we're at 523. So 523, a little low, 520. So everything checks out on this trade, okay? So here's my entry at 540. In this case, I would probably consider a 540, 560 call debit spread as long as the price was less than $6 to $7, going out about 90 days to expiry. That would be my trade here. So from 540, if we're using the market maker pivots, you can see there's one there. So at 557, we take our profit. The next level is 564. We take our profit. The next level, 580. We take our profit. Now, you see, we do have a pullback. This is on that 1st of August. It was a Friday. I remember this. We were on a market chat with our pro members at the time, and the market not only gapped down, but continued dropping throughout that session. But in the spirit of trying to make everything as mechanical as possible, because traders, man, we get in our own way. And we overthink things. Is this the top? Is this the bottom? Is this is this where I should buy? Is this where I should sell? I've got a nice profit. I don't want to give it back. We want to make this as mechanical as possible. So with everything we're doing, you will be able to actually set alerts that'll go right to your phone or to your email that say, hey, it's reached this level, you need to do something. Remember, your job is to make adjustments. The stock's job is to go up if you're in a long position. There's nothing, you can't make it do anything. You can make adjustments as it's doing what it needs to do. So the key point here is we never hit our stop loss. Remember, we're trailing this with a 3 ATR, and we're trailing this with a 22 period look back. Our overall trend, we're trailing with this ribbon. But if you wait for a close below the ribbon, you're going to give back most of your profit. So we want to take our profits as the stock is moving in our direction. And we want to be mindful that if we get a close below this ATR, that is a reason to get out of that particular trade and to wait for a new one. Okay. We then hit another take profit level, 578 or so. So going back to our entry here and our first profit take level at 563, if we had the 540, 560 call debit spread, or the 550, 570, I would then roll this to the next strike $10 out. And that would be not knowing what the situation was with the options and the implied volatility and anything relating to Delta Gamma Vega. That's what I would consider doing. At this point here, again, I would do the same. Roll it out further. There's no reason for me to get out of the trade. It only looks like it's going up. Now we come right back down, but we never close below our stop loss area. We test it, but remember, it has to be a close below, not a move, but a close below that stop loss level. And as this is no big secret. Put this chandelier exit on your chart, see how it works for you, and it will provide you the kind of support that you'll be surprised at the kind of support that it provides you. Okay, there's also that Lux Algo point of control indicator. Again, if you'd like that, I can send that to you as well. That also just provides an extra level of support and resistance. So we have this move below, but not a close. And then what do? We keep going higher. If you're judging this and you're eyeballing this, which is the worst thing that you can do when you get into a trade, you really should have a plan, and your plan shouldn't be, I'll just eyeball it. Okay, you're asking for trouble. So you would have said, oh, it's rolled over. I'm gonna. The news people are saying we're in an AI bubble. That's it. Market's gonna crash. Okay, it comes down 582, hits a low of 559, about 20 points or so. So what is that? 4%. Happens fairly quickly. And if you're just eyeballing it, and if you're listening to the news, or if you're listening to the financial news, or if you're on social media, everyone has a different objective. Do not pay attention to that stuff. Remember, your job is to make adjustments. The stock's job is to go up. And that's exactly what it does. You get to this this profit take level at 585, then very quickly you get to 599. Again, you get a bit of a pullback, and we finally have our exit on, it's always a Friday. I'm not sure why, but it's always a Friday. There's that big move down on the Friday, and you finally get stopped out at 589. So let's look to see where we were. I'm just going to take the pivots off just momentarily so I can show you everything. So remember, our entry comes in around 489. That's our opening position, a little bit more risky. Here's the safe position for me, 540. And there's nothing for you to do except take profits along the way, roll your options position, and wait for either the next profit target to be hit or for a stop loss to be touched. Okay. And there's the stop loss here at 590. So a good trade overall. I've got the MAG 10 here on the right side of my screen. It's gone from what used to be FANG to then FANGMA to MAG 7 to now MAG 10. These really are the 10 companies that are holding up. I'm sorry, I'm just looking over at the screen to see if there are any questions. These really are the 10 companies that are holding up the entire market. And this guy here, and I think it was Jensen Huang that just came out recently, said if we had reported bad earnings or earnings that missed, it would have taken down the entire market. That is a little bit troubling to hear, that this entire market is being held up by a company that makes chips to develop AI. In any case, same thing here. Now, I want to show you something interesting and why we use support and resistance, okay? So the way we've designed the system here, and we talk about these trades and more in our Monday, Wednesday, Friday sessions that you'll get a chance to attend. We look at, and today the entire discussion was about gold and silver. And silver, of course, having an amazing day, gold having a pretty good day, but there are a lot of breakouts happening in some gold stocks. The way we've designed this system with the addition of support and resistance is that when you get a stop loss from your entry, now this is not a valid entry, because if we look at a previous clearly defined, remember, clearly defined previous pivot low, it's way back here somewhere. Okay, and this was before this recent exit that we had in 2025. This was our entry on NVIDIA. We have to go all the way back to 2023 for our entry on NVIDIA, okay? So again, let's use the same analysis that I've taught you. Our entry comes on the 17th of January, 2023. We want to see a break of a clearly defined previous pivot high. I'm going to move that down just a little bit. And it's a very clear breakout. So here there are a few good things happening. We've got a clear breakout. We've broken above that previous pivot high. We already know to look for long positions here. Now the final assessment is, are we within 10% for stocks? Remember, 5% for ETFs and 10% for stocks. Our entry here, our close price here, 1919. Now, recall this is prior to the split, so the prices, if you bought back in those days, you would have paid, I think it was a 10-for-1 split. So this is split adjusted, of course. So from 1919, I'm going to go to the bottom of the ribbon. So I'm going to take the lower of the ATR or the ribbon, okay? And we're at 15 and change. So 19 to 15. It's a little too much risk for me. So what I would do in that case is, can I tolerate it down to 1679? And in that case, I may be able to make a case for myself to say yes to that. It's $1.90 from where we started. So we'd be at this ATR level. So my trade would be here at the ATR level. So entry here, stop loss here. I'll put the stop loss in just so you can see it visually. And now I'm going to trail it with that same ATR. And you can see how often we get close, but we never close below. Okay, so there's our entry at 19. What's the exact number? Let's get the exact number, because precision matters in this business. 1919. Okay, you can put the market maker pivots on, use the same thing, or just trail it simply with that same trailing stop, pardon me. Now, earnings can get interesting. If I already have a nice profit built in from 1919 to 3065, I may take some off and stay in for earnings, but generally, I don't like to stay in earnings. It really is a crapshoot. And when it goes in your favor, you look like a hero. And when it doesn't go in your favor, you have the taste of regret in your mouth long after the trade has been closed out. And again, it messes with your head. You have this nice profit, you sat through earnings, and you gave that profit and more back. It's a horrible feeling. Imagine you had everything right. You had the direction right. You had the strategy right. You had the timing right. The hardest thing to do, you had the timing right, and you still didn't make money. Those are the kind of things that make you question yourself as a trader. So that's why, instead of being in that position and trying to overcome it, just don't put yourself in that position. That seems like a lot seems a lot more efficient to do it that way. So let's say you did keep a half position on, you've made some good money here, and now you got a nice gap in your favor, and look at the way the ATR trailing stop now follows that. So from 1919, that was our entry, you would finally get closed out at 42.62. Now, how many of those kind of trades would you need to make your year? I would say probably one. Maybe, two would be a really good year. But the point that I'm trying to make is you want to be as mechanical as possible. Even if you had just closed this trade out at 30, from 19 to 30, from January to May, it's a 50% gain. So let's just roughly annualize about 100% or so, maybe a little bit more, 120. And we see these kind of opportunities all the time. Okay, so if you were just following this for a longer term trend, you'd be in at 19, and the ribbon, if you're using that as your guide, you would not have had an exit until this bar here, this close below the ribbon at 118. So this was a 10 bagger, and you had to do nothing. You just got in, followed the ribbon, and it turned out to be a trend that you caught. And when you get closed out at 119, you've got, I'm sorry, not a 10 bagger, 5, so 19.6 approximately. And what did you do? You kept it as mechanical as possible. Let me make one more point, and then I'm going to show you a couple of other charts. So is this a valid short? I would say maybe, but I want to see this clearly defined previous pivot low below the ribbon. Below the ribbon. We got to go back to January. So this is not. Next trade. Here's the entry. Do we have a clearly defined previous pivot high? We do. It's right here. A major previous pivot high. I need to see it overcome this level at 149.42, call it 150. We never do that. Same thing here again. Do we take this trade, this short that comes in, the close here, 115.99. So in this case, I can say there is a pretty good previously defined, clearly defined previous pivot low, okay? And that previous pivot low comes in around 113 or so. When we break that low, and we do actually break it on this bar here, but to be more conservative, we get this close here at 110. Same thing. We put on our ATR. Now it works as resistance instead of support. And from 116, our entry here, what is it, 115.99, call it 116, we hit a low of 88. And if you're using pivot points, if you're using market maker pivots, you're probably hitting at least one or two profit levels here. So just adding that one little bit of using support and resistance. Again, now let's look at it the other way. This was May of 2025. Here's our previously defined previous pivot high. Okay, go all the way across. And I'm not even going to take that. I'm going to say this one touched it but didn't overcome it. This one did. We close below. We make our judgment call, 142. This is 128. It's just at that 10% mark. So I'm comfortable taking that trade. I would like to see it closer, because if it does get closed out, I don't want to lose 14 bucks per share, or if I have just a call option or a spread, or if I'm selling cash secured puts. If that's my strategy, by the way, that is not a strategy that I like, but a lot of people and a lot of folks in our group like it, because they don't mind owning these shares long term. And I learned this lesson the hard way with owning shares long term. When it works, and when people say, you know, if you had just bought NVIDIA, pardon me, I'm just going to open my Diet Coke here. If you had bought NVIDIA back in 2010, or if you had bought Apple, it's a better example. If you had bought Apple back in 2008 when the first iPhone came out, you would have made untold riches. And I say, that's great. But would you have known that Apple was the play at the time? Because at the same time, guess what I bought? BlackBerry. Because I had BlackBerry, I had a BlackBerry, and I said, there's no way people are going to move to virtual keyboards or touchscreen keyboards and all that stuff. And I thought BlackBerry was going to be the horse that won out in the end. I was wrong. I was completely wrong. So, but and guess what? I still hold those shares, and I hold those shares, and I look at them every once in a while in my retirement account to remind myself that when you pay, I think it was $60 per share for Research in Motion, what it was called back then, and when it goes down to $5, the pain that you feel because you fell in love with a stock is pretty significant. And like I said, I keep that in there just as a reminder. So what I'm saying is, there's nothing that's a sure thing. NVIDIA was the sure thing, but now I would argue that this top on NVIDIA, which happens around the 30th of October, was the time that people started piling into Google. And you probably have heard that their GPUs are getting as good as NVIDIA's, if not better. And I feel that there's a little bit of fragmentation now happening in that AI sector, whereas NVIDIA is no longer the only king, that there's Google now that's going to be trying to take the crown. So if I just bought NVIDIA back in 2010, yes, I would have done extremely well. And I see all those posts on Wall Street Bets that say I bought 100 shares or I bought 1,000 shares because I was a gamer and I just believed in their chips. Good. A lot of that has to do with luck. We can't count on luck. Luck certainly helps, and it always wins out over being good at something. But we want to find that small edge that we can exploit. We want to find a trade, look at that distribution, the probability distribution, see where we want to be on that probability distribution, find a trade that gets us into the fat area of that probability distribution so that we can hit a target that's the size of a mountain instead of trying to hit a target that's the size of a nickel, okay? And there are lots of those trades out there. If we go back to here, you can see we've gone across the spectrum. Corsair, Affirm. We had a great trade on the VIX. This trade was opened on Friday for 35 cents. And by Monday, we had a big move up in the overall market. We ended up selling for $1.85. We've had a trade on Google. I have regrets about this trade, that it bounced around a little bit and I didn't have a little bit more patience with it. The point of this sheet is not just to say, hey, look how great we are. We have done really well this year. The point of the sheet is to be accountable. And when I look at the sheet, it's a reminder for me, and I make notes on this stuff and make my own personal notes. It's a reminder for me when I've done things wrong in the past. The worst thing, and this is something that my parents taught me, it's okay to make a mistake. It's not okay to make that same mistake twice. And in trading, it's hard. It's hard, especially in this age of what I would call information overload, where information is coming at you in a torrent. And everyone has an opinion, and everyone has an objective. Your job as a trader is to try to block out all that noise. It's not easy. If it was, companies like Meta, Google, etc., who are in the business of engagement, wouldn't be doing as well as they do. So they're doing their job. You got to do your job in trying to block that out. Have your strategy. So we've got a couple of different strategies that we use, and depending on the markets, we will adjust them. And our members get the benefit of all those adjustments. We meet with them every Monday, Wednesday, Friday to talk about these things. Which reminds me to remind you that because it's Black Friday, we want to give you the opportunity to join us on those Monday, Wednesday, Friday chats. We're not here we are not the YOLO type of traders. Vince is in his 50s. I just turned 50. We're looking for slow, steady, methodical trading. Now, when things work in our favor, that's great. That's a bonus. But we're not looking to go all or nothing on an account. Okay, we understand. We've been through this before. We're a couple of math and psychology guys trying to figure out the markets. And we'd love for you to join us, kick the tires with us, see if it's for you. And if this is the kind of trading that looks interesting to you, where again, everything is clearly risk defined from the beginning, these kind of trades, maybe not risk defined, but these trades again have a different strategy behind them, where we're looking to accumulate instead of looking for a swing trade. What we practice also can be applied to day trading. It's just not comfortable for me. But if it works for you, you can use the same strategies. And in fact, support and resistance, always underlooked. Look at that, because you're seeing where price is actually overcoming some selling on the long side and the reverse on the short side. We send out a video analysis to you every weekday and Sunday. So Sunday to Thursday, we send those out to you, looking at or mentioning trades that we're looking at, strategies that we're looking at. We also do trade breakdowns, why things worked, why they didn't. What else do we do during those sessions? We'll do trade postmortems. We'll look at strategies, run them through the think back feature on thinkorswim and see which way things would have gone. If you haven't used thinkorswim and their think back feature, it's something I would really consider. So it's right here, it's think back, and you can run all kinds of options, strategies, and simulations. It's something that if you're unsure of how a strategy would have worked in the past, it's something that is of great benefit to you. It's benefited me greatly over the last few years. We also have that Microsoft Teams community, priority member support. We do Sunday market outlooks. We put on our watch list. You can copy them if you'd like. We show you what we're doing. As I mentioned, it's not day trading. We're not doing short-term charts. Clear, rule-based entries and exits. We want to make this as mechanical and as methodical as possible. As I mentioned, where I am in life, I cannot be tied down to a computer. I've got young children. I've got older parents. I'm in that sandwich generation. So I need something that's going to be methodical and mechanical. And we want to do this. This, for me, is a bit of a passion. I want to know what my risk is before I start. And I want to make sure that my capital is preserved first before I look for growth. Now, you can take the system that we have and you can be as aggressive with it as you want, and that's a very personal choice. And I wouldn't begrudge you if you made a lot. I would say, great, you're making lots of money, keep doing it. You have clearly found something that works, and if I'm a small part of that, that makes me very, very, very happy. You can see all these notifications coming in from Amazon and Wall Street Journal. It must be trying to sell me stuff. If you can read a chart, and we just went through this over the last hour or so, you can do this. We have our daily updates, market chats. We have a 40-hour training program that's included, private member support. It's about $3,500 for everything that we sell. I know I got to get out of here quickly. Our Black Friday price, $497 for the full year. You get everything. You also get a velocity trial. So if you have TradingView, you'll get these ribbons. You'll get everything that you can put on your chart, so you can trade exactly the way we are. You also get a kickoff session invite for 2026. We usually do that. It's a paid event in January of the year to get everyone off to a good start. And Vince's strategy, which is Victory 2.0, we're now going to 3.0 with lots of new adjustments, and that you'll get a preview of as well. So it's $497, tradingwins.com/friends like Jeanette. Jeanette, back to you.
All right, I'm back. Sorry, trying to mute the YouTube for a second. Make sure I get all this in the right place. Okay, I did post, I had a different link. I had /November 25. So I'm reposting for you in the questions box.
Oh my God, that's my fault, Jeanette. I'm so sorry. I forgot that I sent it to Philip as November 25.
Let's see.
You've got the right one in there now.
All right, it sounds like, oh, let me turn it back up. Go ahead, you there?
Yes.
Your sound is just really low now. Okay. Got it. Okay, perfect. Got it. All right, I'm gonna take the mic away from you so we can get ready for our next speaker. Thank you so much,
Thank
Raul,
you,
for
Jeanette.
spending today with us. And I'll pull out any questions that I have in here that you didn't get to and make sure that I email them over to you so you can reach out to people.
Thank you, Jeanette.
Yes, sir. All right, have a great weekend. Okay. All right, all right, all right. We are rounding out to our final speaker of the day. Make no bones about it. It's the big Johnny in the house, Johnny Seville. And I'm going to give him all the power here in just a minute. Right before I do that, I need to share my screen one more time. And there we go. All right. So it was actually, his was actually friends/friends, tradingwins.com/friends. I posted it in 2 spots for those of you who are interested in Raul's offer for today. And here we go. So we've got a drawing right now, and then we have one more final drawing for the grand prize, which is the travel monitor. Someone asked me earlier, what's a travel monitor? It's a monitor that you can basically throw in your backpack. And so when you get to where you're going, you connect it to your laptop and it makes trading, working, whatever you're doing, that much easier. Before we get to Johnny, let's do our little dance here. I need everybody to go and rank Raul for me in the, go to the questions box. That's where you should be putting any comments that you have about today. The questions box. So 1 was an and a 10 was great, and anywhere in between, any feedback. If you go negative, I'd say if you go below a 7, if you could just let me know what it was that wasn't working for you with Raul's. He hasn't been on here in a very long time, and so I'm always interested to see the good feedback. All right, and then once you get your number in there, we're gonna go ahead and do our next quiz. This quiz, one more for swag and cash. And then the final one will be for the monitor. And we'll do that one just a little bit different. And we'll do that when Johnny finishes up. All right, what color is the Hulk? It should be easy. I'm trying to get my, oh, this isn't working, is it? My computer just went. Bludgeon it. Oh, come on, Gigi. There we go. We're back. We're getting back in business. What color is the Hulk? All right, go find your answers. This machine is acting stupid on me all of a sudden. Okay. I'm all the way back to the LFGs. I can't find the answers. Let's see. Okay, scroll. The answer is green, and everybody got it. And I did that for the color of money. Let me go up and see who I got first. Dennis. I have Dennis. I don't have your last name, Dennis. Came in just as Dennis. You were first. Just so you know, you guys were right in behind. Another Johnny, a Joel, a Dale, a Benedict, an Arnold, really literally in that order. Scott, Joe, all you guys were right there in it. So for the final one, make sure you stick around. Fast fingers, get it there. You are my winner, Dennis. I need your email address and a physical address on you so I can send you the swag and the cash. If you would like PayPal or Amazon, I just need you to identify when you send me a message in the questions box. Only I'll be able to see it, and I'll grab it and make sure that you get what we've promised. And of course, the answer is green. All righty then. Sorry, Johnny, I went a little sideways on my machine. Just took over. I'm going to make you the presenter and make you the organizer. I'm so excited to hear your voice. I haven't heard it in a long time. All right, so yeah, we're just patiently waiting for Johnny to share his screen and start talking.
Yeah, well, you muted me, so you couldn't hear me.
Oh, I can hear you now.
There we go. Let's just, okay. You should see my screen.
Don't
Popping.
see a screen yet, but I'm sure it's coming. If you talk for a minute, let's make sure they can hear you, okay?
Testing, testing. 1, 2, 3, and make sure the screen is now up. Let's have a look here.
Roll Tide, Johnny, what's up?
Roll Tide indeed. Okay, let's see. How was the Turkey Day?
It's game day tomorrow, Johnny. You got to put on your Roll Tide red for me.
I will represent for you here in Australia. You know, it's funny.
That's right.
I've actually, I've been living in North America most of my life for the last almost 20 years, but I've been in Australia, as many of you know, for the last year, but I've never been invited to so many US Thanksgiving dinners as I have been in Australia this week. And I thought, this is really strange. What's going on? So it must be spreading that people want to get in on the whole Thanksgiving spirit over here.
Well, I had a great Thanksgiving, and of course, it would have been way more delightful if you had been here with us. But I'm glad that you are home and safe, and it sounds like you had plenty of invitations. You didn't need ours.
Well, looking forward to sharing with you when we get back. Right? But there's a lot to be grateful for, isn't there? And of course, before I get started, let's give a quick hand to Jeanette for organizing such a wonderful event and great speakers. And I'm excited to come here as the final speaker and share with you some great stuff on what's going on in the market right now. So again, thanks Jeanette and everyone at Trade Thirsty for all that they do. And thank you everybody for spending your Friday with me. So let's kick off. And today is all about diagnosing what on earth is going on with the market. Are we going to rally? Are we going to plummet? It's been a tumultuous last few months in the market, and these are kind of market conditions that I just love, and there is a lot to be said for the difference between chaos, as the media would put it, versus great trading opportunities. And if you take a look at the way the market's been moving, it's been a very divided view. So, but these are markets that we love and that we thrive in, and there is a strategy that I'm extremely excited to share with you today that just kills it in these kind of conditions, and we're going to be breaking it down for you right now. But before we get started on that, just quick disclaimer, this is for educational purposes only, not a recommendation to buy or sell any securities discussed. Acorn Wealth is not a registered financial advisor in a jurisdictional province. Always be aware of the risks of trading before taking any action. Any stocks discussed are for illustrative purposes only, but however, they may be stocks that I myself or Acorn Wealth and its employees and contractors hold, or instruments that we're looking to get into. But always speak to financial advisor for determining suitability to your risk profile. This is not tailored towards any one individual here. And I think that pretty much covers it. So, getting into the crux of it, the headline, if you were trading by the headlines over these last few months, you must be feeling pretty exhausted by the market. The headlines have been leading everyone around by the nose, and one day the market's surging, the next day it's plunging, and that can be enough for even some experienced traders to make them nervous. But for those who are looking at this through the right lens, with the right tools and understanding the right patterns, I wouldn't call the movements we've had in the market chaotic at all. In fact, it's been very much very rule driven. So how do we siphon through that noise to see what's really going on? And that's what today is all about.
So market turbulence should be our greatest opportunity. Market turbulence can be your greatest advantage. And so how do we do it? Well, firstly, and I'm sure some of the other previous speakers have given their viewpoints and whatnot, maybe even you've given yours. But for my benefit, throw in the chat box what you think the market's going to do next. What do you think the market's going to do following, the first week of December? Is it going to boom? Is it going to bust? Or not sure? What do you reckon? Type it into the chat box. Okay, Chris says boom. Empty field says go up. just anonymous. Yep, not sure. Boom until early January, then pull back. Not sure. Boom, boom, boom. Okay, love it. Thank you, everyone, for participating. Every time I do this, it's amazing how much it changes. I did a workshop. For some of our members last Sunday, and 90% of the audience said crash, bust. 2 days later, 70% of the audience said boom. So it's amazing how much the opinion shifts. And typically, what I do, it's about 30% calling for a meltdown, 30% rally, 40% not sure. So it's about that. We're leaning towards the boom today. I'd say about 60% boom, 30% not sure, 10% bust. So no matter what camp you're in, you're really going to appreciate what we're about to cover. Because when I say the words, what do you think the market's going to do next? That's really a poor way to ask the question. What I really should be asking is, what does your strategy tell you the market's going to do next? What do your rules tell you the market's going to do next? And that's really the more important question. So let's dive into the rules. And I'm just going to kind of jump in a little bit to what the market's doing right now, if that's okay with everybody. Do you mind if we just dive into the live charts for a moment and talk about that, guys? Yeah. Great. Okay. So let me just pull this up. So firstly, when you go and take a look at, let's have a look here. All right. So it should be popping up for you right about now. So one of the things that we have been going through, just before we go into some of these charts, what we've come out of is a bearish cycle down. This is something that I was pointing out to people over these last few months. Back in the middle of October, we warned everyone that we felt that the market had topped short term at the very least. Now, what was the reason for that? Well, the very first thing, the most important thing that I look at is, what is the pattern, right? And if you believe, as I do, that the market is not chaotic, it's organized chaos. If you believe, as JP Morgan has reported, that 80 to 90% of all of the volume in the market comes from algorithms, from smart money, from computerized trading, AI, quantitative analysis, algos. They're essentially retail traders like you and I and everybody else. We only represent 15 to 20% at most of the volume in the market. The rest is smart money. And so what moves the market? What ultimately makes something go up or down is volume. Volume controls price. So who controls the volume? Smart money, 80% of it. Algos, smart money. And how do they make decisions? Well, algorithms, smart money, they make decisions based on rules, patterns. So it is such an important thing to understand, is what are those rules doing? What system is in control? Because if that's what 80% of the volume is doing, that's what the market will do, regardless of what the news is. Wherever the algos go, wherever the volume goes, more importantly, that's where the market will go to. And we saw this in the example in the week just past, that you had these blowout earnings in NVIDIA and the market went down anyway, right? And there was a lot of analysts that said, why? What occurred here? So instead of following the news, instead of saying, reacting, we want to anticipate. We want to look at what these systems are saying. Right, so here's what the system was saying as we went into October. And you'll see why this is kind of relevant to what's going on now in just a moment. But we had this upward channel on the S&P 500. An upward channel on the S&P 500 is a bearish leading indicator. It suggests that the next break, the next move will be to the downside. Okay. And what we saw following after that is we saw the S&P, despite NVIDIA's positive earnings, break down as the upward bearish channel suggested it would. The more bearish signal in the market as we went into October, and a chart that I want you to keep in mind longer term, really, as we head into next year, is the one on the Russell. Let's not forget about the good old Russell 2000. A lot of people forget about the Russell 2000. A lot of people, when they talk about the market, they talk about the Dow, or most of the time they're talking about the S&P 500. But the S&P 500 is an extremely distorted view of the market because those top 8 companies account for about 36% of the S&P's value at the moment, which is crazy, right? So if you look at the S&P, you're mostly looking at what those top 8 companies are doing. It's not a very good reflection of what the other 492 companies are doing in the S&P. So when we if we want to see what the broader market's doing and what most participants in the market are doing, one way to look at that is looking at the Russell 2000. And the chart that we've been observing and why we went short in a lot of stocks in October, going into and for the first few weeks of November, was because you saw this upward bearish channel on the Russell as well. And so when you see an upward channel, again, the reason why I keep saying it's bearish is because it's telling you, based on what's happened in the past, what should happen in the future. That's why it's a leading indicator instead of a lagging indicator. Lagging indicators just talk about historical data. Leading indicators use historical data to tell you what's likely to happen next. And in the case of an upward channel, after you've had 1, 2, 3 touches along support, this is where roughly to a rough probability of 67%, without any other analysis or any other indicators involved, just based on the pattern on its own, that's got the a high probability, most likely probability of breaking down after that third bounce. So just knowing that in itself puts probability in your favor, and it tells us what the most likely rule-driven forecast is of what the market should do next. So when we saw that this had topped out, and was clipping out in October, this is when we started getting very defensive, at least for the short term, because that meant the market was dropping to likely around somewhere around 236 or so. And so you can actually see the measurement and the exact target from the pattern then imprinted on the chart here in the updated version as time went on. And you can see that's exactly where the Russell dropped to. right? So you had all of the volume and algorithms pushing things down, and so that was something we traded. You know, we picked some of the weakest shorts. I'm going to show you this in a moment. We even shorted the Russell 2000 itself by going long TZA, which is a triple inverted ETF. So whatever the Russell goes down by, it goes up 3 times. But then once the Russell had hit that target, as it did, that short-term bearishness, that short-term system, the pattern was over. Right? It's kind of like a car. It's run out of gas. And when that pattern comes to an end, the bearish gas tank is empty, and then the pattern resets, and we find out what the next pattern is. And this is where you go into a reset. And what we've seen since is a kind of a bullish move so far. Now this too. Let me just break down the next layer deeper. So where was the market going to go next? And where is the market likely to go next as of now? Well, one of the things that we did with our members earlier in the week, at the beginning of this week, back on Monday, Tuesday, in our trading room, is we pointed out that it's not a stock market, but it's a market of individual stocks. And so what we've got to be conscious of is that there are about 11 sectors that make up the market. And not all sectors are strong, not all stocks are equal. And so we started taking a look at what the individual sectors were saying. And so even though we've seen the S&P and the Russell have that kind of bearish plunge, if you take a look at some of the individual sectors within that, what makes up the market, you see a different story. So, for example, XLV, just delete some of these other lines here. XLV is healthcare. Now, despite the bearish breakdown in the Russell and despite the bearish breakdown in tech, can everybody see this downward channel in healthcare? Downward channel is a bullish leading indicator. A downward channel which anticipates that the sector would rally to 156. So while from October and through November, we saw the Russell and tech and all of these things go through a short-term little kind of flash crash, and certainly bearish moves across the board. What did we see the healthcare sector do? The complete opposite. So while a lot of stocks had nasty moves to the downside, the healthcare sector just went straight up, up, and away. Right, so when you start to talk about the market, it's important to just mention that it's not a stock market; it's a market of individual stocks. And so when you start to break down kind of the parts inside it, you'll find that there are certainly some areas that are stronger than others. If you look at the materials sector, that's a downward channel that's just broken out on Wednesday. This is one of another alert that we did on Tuesday, that we expected materials to break bullishly, and that we'd be looking at a target of around here, which was a 4.2% rally in the materials sector to reach its target. If we took a look at industrials, XLI, that was another one that we expected to break out, and we expect this to break out and rally to its target here, which is just broken out of today, which is also a 2.4% target. If we go back to the healthcare sector, I was looking at showing you before, this is a flag breakout. And this is one that we went long, well, we've been long for a while, many healthcare stocks. But this next target that it broke out of earlier this week gives it a upside target from its breakout of about 4.8%. So going from what we've talked about all the way through to current day, our feeling not our feeling, what our rules suggest is that from the beginning of this Thanksgiving week, we were going to see about a 4 to 5% upside move across roughly about half the sectors in the market. Some of which we've just talked about: industrials, basic materials, healthcare, technology, were our 4 sectors that we like the most from a number of reasons at the outset of this week. So short term, what do the rules say? Well, short term, we're currently in a bullish. We've been in a bullish cycle, coming out of that bearish move. What I would caution, however, moving from a short term to longer term outlook, is to keep the bigger picture in mind as well. And this is the chart that I want you to keep at the forefront of your thoughts, right? The Russell 2000 weekly. So can everyone see this? Just give me a one. By the way, just quickly, am I explaining this all clearly enough? I know I'm getting very technical, and I'm going to bring it back in just a moment to how we trade this, because this is these short-term powerful moves, as I started today by saying, right? Plunging one day, surging the next. I said that should not scare you. In fact, you should be excited by it. It should be your greatest opportunity, and it can be, right? So, but want to make sure that everyone's following along, right? So when you go back to the weekly chart, what you can see here, when we zoom out, is here was that upward channel on the daily, the one that has just played through, right? Where we had that beautiful drop down to its target, some good opportunities for shorting and making money, and we're now in this kind of upward bounce back up. So when you move away from just that short-term outlook, can everybody see this potentially much larger upward channel system that dates all the way back to 2023, November 2023? Perfectly parallel. And look at exactly where these two systems met. Right, so if we do see this 4 to 5% rally in total going into December, we're topping out maybe around here. It's going to bring us back into roughly this territory, right? Around that 248, 249, underneath this same resistance system that we broke down from. And if you zoom out even further, here's another chart that I dare say most analysts haven't pointed out. But this is what I've been doing for 20 years. We are pattern deep into pattern specialists. And if you take a look at going all the way back to 2020, right, late 2020, you'll see that you've got another kind of perfect storm of this upward channel that dates back 5 years. Resistance that goes all the way back to the end of 2021, end of 2020, beginning of 2021, a 5-year system. And so I wanted to just point out that all 3 of these systems, your daily, right, over the last 3 months, your weekly over the last 3 years, and the longer term outlook going back 5 years, all 3 of these patterns all come to the exact same meeting point this perfect storm of resistance that that is the first time in 5 years that the market has ever been at this trifecta of trouble. So, what do you think so far? Does that make sense, guys? Right. So, at the very least, at the very, very least, it is a major resistance point that you must be aware of. Berkshire Hathaway just filed their 13F, quarterly filings just recently. Warren Buffett has never been in such a large cash position in ever in history. Right, so they've been doing a lot of selling. Berkshire Hathaway have sold a lot of their stocks, a lot of their darling companies. They've been getting out of because Buffett feels like this is another .com. Now, whether he's right or not, what we are seeing from the smart money, even on the fundamental kind of smart money like Buffett and Berkshire Hathaway, is they are going into a cash position towards the end of the year. In heavy quantities, and this is one of the technical reasons of what you want to be aware of. Right now, that doesn't mean that there isn't a lot of opportunity. In fact, if what we're showing here is quite exciting to me, because this means that we're seeing powerful pockets for going long and powerful pockets for going short. Short-term, powerful, strong moves in both directions. That's exactly what the market's doing. So what we need to be able to do in a market like this is we need to be able to capture those moves. And this is where my favorite strategy comes in. My absolute favorite strategy for trading this market is called the Smart Surge system. And there's a number of really big reasons why that it just is perfectly tuned for these types of market moves. So firstly, what is a smart surge? Well, a smart surge system is something where a stock makes a very powerful move, a surge in price, coupled with unusually high volume and clear, strong momentum backed by smart money signals. Right, so it's a fairly complicated algorithm, but essentially it's the stock yelling, "Pay attention," because something big is happening behind the scenes. And usually you'll see an initial sharp move, which could be up or down, because it does work in both directions, and then another strong move in that same direction, and that's the second wave. That second wave, backed by the heavy smart money, that's the tell. That's the moment. That's the trade. That's the second we say, all right, this is where we get in. This is where the odds are now in our favor for a sustained run. So think of it as a 1-2 punch. The first surge gets it on your radar, and the second surge, with all that smart money behind it, that is the confirmation we're looking for. And when you get that confirmation, you've got a very high probability trade on your hands. All right. So this is I'm just going to bring us back a few slides for a second. So this is a fantastic example of what it looks like to the short side. Let's start there. So as I said, this can be used for longs and for shorts. And so here on the screen, you can see a recent short setup, a bearish smart surge that we had alerted to our members in this recent leg down for the market. So on the screen, you can see FFIV. And what I want to point out there is these, if you can see that red box here, that signal, 1, 2, 3, 4, 5. These are all bearish smart surge alerts. Now, these are very, very special because these do not happen often. In fact, the smart surge is incredibly rare. Out of the 8,000 stocks we scan a day on the smart surge scanner, guess how many smart surges it finds? 5 to 8. So out of 8,000 stocks, there's only 5 to 8 setups on average that are good enough, that qualify for a smart surge signal. So this is really diamonds in the rough. This is needles in a haystack. 1 in 1,000 to 1 in 2,000 stocks are good enough on a daily basis to meet this criteria, right? Because it's extremely picky. And for good reason. So as you can see in FFIV, this has occurred not just once, but 5 days in a row, saying this thing could be set to break down, to surge downwards. And this was in the middle of October that this was alerted. Okay. Then when we zoomed out to the weekly chart, the smart surge scan had also identified a bearish smart surge here as well. 1, 2 weeks in a row. And much like we talked about earlier when talking about the pattern, much like the Russell 2000, much like the some of the other systems we were talking about there, FFIV was also in showing these upward channels, bearish systems. So would have I shorted FFIV on its own just because it was a bearish channel? Some people would, some people could. It's a valid technical trade, but I wouldn't, because just the pattern on its own, while there are merits there, is not as good, not as strong, not as high probability as a smart surge on top of it. And so when I'm taking trades long or short, what I'm looking for is to have as many possible things that are in my control that increase the probability going in my favor as possible, right? Remember, trading, it's kind of like, think of it like playing a card game in Vegas, right? If you go down and sit down at the blackjack table, you have to put down money to see your cards, don't you? Makes sense, right? You have to pay, you have to put down risk before you know the probability of your hand. In trading, you don't. In trading, we get to look at our hand for free. We get to look at the cards before we decide if we want to risk any money. And this is exactly what this is doing. What we're doing is we're scanning the market for the best hand. We're scanning the market for pocket aces. Or in blackjack, I guess, we'd be looking for blackjack. Right? We're scanning for the best hand. And only trading those. So all of these things we're talking about increase probability. And these are things that we can control. We can't control the outcome, but we can control the recipe, the ingredients that we look for. And so this is why it's so special. And what you can see here is FFIV, which we had alerted to our members there, went straight down, all the way down from $304 where the entry signal was, down to our target was 250, which it hit with ease, and in fact kept on going even lower than that. So as a stock to short, beautiful move. In fact, this went straight down even when the market was going up. And this is another quality that makes it very special, that the way that the smart surge works is it's looking for stocks that don't look like the market, stocks that are marching to the beat of their own drum, stocks that are so bearish that even if the market were to continue going up or sideways, the strategy suggests that these are still weak enough to drop anyway. And the same thing with longs. looking for longs that have these bullish smart surges, that even in a bearish market or a sideways market, these are the stocks that are most likely to hold their value or potentially even rally throughout pockets of downward volatility. And another piece to this puzzle that helps make that so, that puts that probability of this whole system in our favor, is how the smart surge system incorporates tracking smart money and institutions. And in this case, when we found FFIV in our bearish smart surge scan, those 5 days in a row and those 2 weeks in a row, we went and looked at what the smart money was doing, and lo and behold, you could see why the scan had identified it. You know, in September, you had, when you look at the insiders behind this stock, you had insiders selling as much as 100% of their shares. $850,000 gone in one transaction. Right, and prior to that, you had the CEO selling, you had other directors selling. Yeah, and insider selling on its own doesn't guarantee a stock's going to go down or up. Right, there could be multiple reasons why an insider might sell or buy. However, if I'm going to put my money, or if you're going to put your hard-earned money into a company, I want to see that the insiders aren't dumping all of their shares. There's not a chance that I would put one single red penny in any stock that insiders were selling any reasonable amount of. Because it doesn't increase the odds, does it? Right? In fact, I'm going to probably look to short it, especially something like this. So this is why the smart surge is just so powerful, because it is looking for these stocks with an extremely unique story to tell that's very special. And in a market like this, where the moves to the upside and the downside have been so powerful, and in short time frames, you want, I'm sure that you want a way, and we value a way that cuts through all of that noise and finds the individual setups that could really thrive. So FFIV was one of those setups to the short side. But at the same exact time that we were alerting FFIV as a short, we were also alerting VRA as a long. Right? Because it's not a stock market, it's a market of individual stocks. And especially when it comes to the smart surge is going out there and it's looking for, regardless of what market conditions may be, where are those individual areas of strength and weakness. Okay, and so let me just show you the chart on Vera Bradley. Okay, so it should be popping up on your screen now. There you go. Everyone got that? So Vera Bradley was something that we had been tracking for a while. And much like the previous stock, it had been consolidating, going seemingly nowhere. Right? To the retail trader's view, it was a stock that was stuck and had gone through a major drop in price, looked like it was going nowhere. But as the stock appeared to go nowhere, smart money was accumulating. Algorithms were buying, and the insiders were buying. And so we've been watching this very, very closely. And in fact, right over to the right-hand side, as it went into the beginning of November, we started to see the breakout to the upside. That specific price, just as it moved, and as you can see on the chart at the bottom, a bullish smart surge was alerted. Okay. So even though we felt the market would go down. We felt this would go up anyway. And we bought call options. We held call options into that. And the smart surge suggested this was going to have a target of $3.40. And I just want to show you where the stock went to before it pulled back. $3.40 precisely, right? And if you take a look, in that very condensed short-term move, that allowed us then to buy those February $2.50 calls. And as the stock rallied on the 18th of November, that hit my sell target, as I showed you there on the chart, therefore liquidating those call options for a $4,561 profit. And you can see, you know, I mean, at the same time as going long, as I mentioned earlier, you know, we were taking profit on TZA, which was a nice little $1,000 profit on the same exact day, right? Shorting the market, going long VRA, shorting ChatGPT, shorting the tech sector and the AI sector with November $61 puts, which we'd sold with a nice little profit. But at the same time going long VRA, at the same time going long lithium, at the same time going long SEPN. So when you start to look at, you know, this kind of scenario, for us, it's not about trying to get stuck in the news and the noise of what the market's doing day to day, but much more importantly, find those individual stories, those pockets of strength, those smart surges that can just be so powerful. And these are things that can just keep on going and going. Another great example, turning the clock back earlier so you can see how far these things can indeed run, because a lot of these have only been a short period of time since we traded them. But AEVA, going back a little bit earlier into the year, gives you a better look at what the smart surge is capable of longer term. You look at AEVA, which was actually in the Wall Street Journal. I laughed at this because in July, the Wall Street Journal, it's the first time I'd seen any news on this stock in any kind of major publication, but the Wall Street Journal was talking about, in general, how some of these unknown companies had significantly outperformed the entire market, right? So you had the top 8 companies going up, and then you had the other top performers with these, you know, arguably unknown stocks. AEVA was one of the best performing stocks of the year, as Wall Street Journal pointed out. But by this point, it was too late. It usually is too late if you're reading it in the news from any perspective. What I loved about this is that the Wall Street Journal was reporting about this for the first time in July, but this is one that our smart search system had alerted in March. And that's the news that you want. That's the newspaper you should be reading. It's not what's already happened, but what could happen next. And the smart surge is arguably the best newspaper for that job. That's the news I want to see, the chart. And AEVA had been alerted by the scan 1, 2, 3, 4, 5 days in a row, and incredibly so from the very beginning, from $3 on. Right, and that was almost 1,000% move on AEVA, and after that first surge from $3 to $8, you know, where most people would sell, and most strategies would say, hey, don't chase it. It's too late. You've missed it. And in many cases, in 95% of cases, that would be the right call. In 95% of cases, a stock that's already gone up 300%, you're probably right. It's done. But not in the case of a smart surge. And in fact, not only was it not done, it was alerted as a new smart surge over here in May as it broke out a second time, 1, 2, 3 days in a row, where we had shared that as an alert as well to our members but most importantly, where the smart surge had alerted it to us in the first place. On top of that, you had the smart surge surging on the weekly chart also. On top of that, right, you had insiders loading up at the very beginning of that. Hundreds of thousands, if not millions of dollars of insider buying before that surge occurred. Right, so what this is all about is following the data, right? And I'm going to show you how we structure those trades in just a moment. But for the sake of timing, I'm going to fast track a little bit here. But it's pretty cool, hey? Right? Especially in an uncertain market. I'll show you one last example, then we can come back to others later. But in an uncertain market where you've got chop and you've got noise, I would think that the most valuable thing you could have is a strategy that finds setups that cut through that noise. Setups that are uniquely positioned to perform. And setups that are positioned to perform in a rapid way, so that whatever the headlines are next week, whatever the market does next month, is much less of a concern when the probability is that within 3 to 5 days of getting into a smart surge, the first part of the trade's already probably done. And on average, about 3 to 5 days is the average time that we expect a smart surge to hit its first profit target or stop out because it's and we'll move on to another one. So the ability for this to move, it's in such a precision and with such speed, is uniquely basically uniquely qualified for this type of market condition, where you might be concerned about what the headlines are 2 weeks away. Well, in the case of a smart surge, 2 weeks in, we're probably already up 10, 20%, where we've been able to lock in a partial profit, move our stop losses up to protect our capital. And if it stops out next, if the market changes direction, it's fine. It's still already a winner. And so you can see this in every setup. TDUP was a great example of this, where at the beginning of the year, this had been alerted by the smart surge system 1, 2, 3, 4, 5 times. And from 80 cents, it surged to $1.80. And for most people, that would be, wow, okay, it's done. Especially a company that I'd never even heard of, right? I'd never even heard of TDUP when we came up on the scan and talked about it in our trading room. But then it came up again on the smart surge on the weekly chart, 1, 2, 3 weeks in a row. We said, okay, well, maybe this isn't done. The weekly chart suggesting it's going to surge even further. And off it went from $1.50 to $2.50, right? And then it was alerted again on the daily chart, 1, 2, 3, 4, 5, 6 days in a row from $2. And it kept going and going and going. And like AEVA, this is one of the best performing stocks in the market. It went up from 80 cents to $12. Now, I didn't hold it all the way to $12, and you don't need to. Even if you were in it from 1 to 3, or even if you're in it from 2 to 4, that's still very exciting gains. More is always better, but the point is that these you just never would have found without the assistance of the smart surge system. But more impressively so, right? Forget the 600% move, forget the 1200% move. When this all began, the insiders like Noam Poransky were loading up. This is more than just a penny stock. This is more than just a small cap stock. We had the confidence to alert this, and we had the confidence to follow our system because of the presence of the smart surge system and the fact that insiders themselves were loading up on hundreds of thousands of dollars at the same exact time. And that's what the smart surges are so great at picking up on, this algorithmic accumulation. And here the insiders had bought about roughly $350,000 around that same exact time that the smart surge was going off. Now, Noam Poransky, by example, it would have turned $350,000 into roughly $4 to $5 million. And good for him or her. Publicly reported information, and the data was right there if you were looking in the right place at the right time. And that is what this does for you. One layer deeper, 400% of that move, 400% of that surge happened while the market went down 20%. So if you're looking for, if you're spending all of your time stressing about the market, let me remind you that it is not a stock market. It is a market of individual trades. And you can bet your bottom dollar that every single stock I'm holding, even when the market went down, I had about 7 or 8 longs that I held calmly without much concern at all. I did a little position size reduction, but other than that, why did I hold longs and even buy new longs if I was bearish on the market? Because they were all smart surges that I felt could perform regardless. And here, and this just shows that in a really great way. So yeah, it is crazy. It would be crazy if it wasn't something that we've just seen and have used for the better part of the last 4 years. I've been aware of this and I've studied it for over 20 years, but we only released the Smart Surge system about 4 years ago. And as crazy as it is, watching this happen over and over and over again, it's just, that's why I say it's my #1 go-to strategy. And so I hope that this is saving the best till last for you today, because the trade giving special that we have put together here for Trade Thirsty and Jeanette and for all of you is quite special as well. The Smart Surge system is a Thanksgiving and trade giving special that combines everything that we have just gone over, from the scan all the way through to the signals you're seeing on the charts. And so I'm just going to break that down here for you and how you can put this in your arsenal. And then I'll even show you a couple of recent setups as well, if that's okay with you. Just for the sensitivity of time and anyone who might need to get going on the hour, the Smart Surge program gives you access to all of this. So the first and most important thing, you need to be able to find these. Without the scan, I wouldn't trade these at all. As I said, I've been aware of this strategy for 20 years. I started trying to specialize in this about 18 years ago when Acorn first started. Acorn's been around for 18 years. We started in 2007. So we're the old dogs on the block, so to speak. And since day one, I've loved this strategy, but it was almost impossible to find them. I tried for years to develop a scan to find them, just couldn't do it. It's too complex. But technology has caught up, and so 4 years ago we were thrilled to be able to release this Smart Surge scan that for the first time had taken what I'd been wanting to do for the better part of 20 years and finally turned it into a system that could do it for me. This was a major milestone in Acorn's 20-year journey, and so the scan is a game changer. It finds those 1 in 1,000 setups that have these unique characteristics, looking at everything from institutional trading volumes, patterns, and looking at how the stock is moving on its own story, not just matching what the market's doing. All of these things that goes into these hundreds and hundreds of lines of code. So this is normally a subscription for $997 a year to access the Smart Surge scan, and is worth every penny. But this is included for you, and it's included for life. And you get it in wealth charts, trading view, think or swim, metastock, incredible charts, TradeStation, and trading indicators. Okay. On top of that, you're also having included the Smart Surge indicator for life. Right? So this is whatever you see that indication on wealth charts, trading view, think or swim, metastock, TradeStation, trading indicators. Whenever you're looking at a chart, when you see that green dot or the green bar, depending on what program you're on, that means that it's been identified by the scan for that time frame. And you can use it on multiple time frames. You can use it on daily, weekly, monthly. You could even scan for it and use it on the hourly. The only the smallest time frame I find that it is effective on is the 15. I wouldn't go any shorter than 15 minutes for the smart surge. And you don't need to. Even if you're trading on a 5-minute chart, you want smart surges that are detected on a 15-minute basis. If I'm day trading, which I don't do much at all, but if I was, and when I did in the past, I would scan on the daily for day trades to take for the next day. So it's perfectly fine to be going down to a 15-minute, even if you're trading on a shorter time frame than that. But I think for our audience today, that's going to be fine. Okay, so both of those are included for lifetime, which means you can also install it on more than one platform. If you're trading with one system and charting on another, or if you change systems in the future, you're not going to lose access to this important and valuable tool you'll have for the rest of your trading career. And on top of that, are there any engineers in the room? Anyone who likes to understand why something works? Anyone who was watching me break down the market earlier and was intrigued by the patterns and their precision and the rules? Put a 23 in the chat box if you're the kind of person that loves something that works, but you also like to understand the why behind the what. Yeah, me too. I'm a mousetrap guy. I love to put together systems. I've been doing it all my life, and so when we're building all this before we had the capability to scan for smart surges, we certainly. Well, one of our most popular courses still is our Finding Flags Advanced Breakouts course. It's so valuable because it goes through why most people go broke trading breakouts. Why, when markets get volatile, so many strategies fail. Why so many people get caught like a punch in the gut. It goes through all of that and how we strip away that noise to find the patterns and systems we really want. Now, this is a 4-module course, and it's normally $19.97. It is incredibly valuable for anyone who wants to understand the why behind the what and the basics behind these patterns. You do not need to go through it to start using Smart Surge at all. Right? Smart Surge is taking all of this and automating it. But if you want to dive deeper and into some of the patterns, this is a very complementary system to the Smart Surge program, and you get lifetime access to it. As well. So you can go through it over the holidays, go through it next year. You can do it over and over and over as many times as you want. It's yours for life as well. The one thing you will want to watch is our Smart Surge Masterclass, which is very short and precise and concise. It's taught by me at the time, recorded live. And what this is, it's a one video fast track lesson that for no matter how much experience you have in the market takes you through from complete beginner, right from where I load up the screen with an empty screen, no indicators, nothing on it. I install the indicator, right, it takes 5 seconds, and then set up the scan, run the scan, look at the 5 to 8 stocks that came up in the scan on that day, and picked out my favorite one, entry, target, stop loss, applying all of the rules that the strategy has all in one video. So it is the best way to learn everything about the Smart Surge in one sitting so that, within 20, 30 minutes, you can go into the market and start using it right away. And the really cool thing about this Smart Surge Masterclass is that I went through this whole process live, and the stock that I actually picked out as my favorite and indeed bought myself, as well as alerted to our members, was Kava. And again, a stock that I hadn't heard of at the time, but it was alerted by the Smart Surge system at $1. We bought it, I think, at a 107, roughly somewhere around there. And this thing just took off, as you can see, went all the way to $12 in the end. Right, so pretty awesome stuff. And you'll get to see that pick, of course, at the time live before it all happened. So the value in this, as you'll see, is enormous. We certainly couldn't charge what it's worth. If we were to charge even close to what it's worth, just looking at the lifetime access to the Smart Surge indicator, that's and the scanner, you think of it, $997 a year. If you were subscribing to that you're saving. On top of that, instant on-demand access to getting started, that quick start guide. You also get 3 months access to your own personal coaching concierge. So you want a WhatsApp screen share, talk to them on the phone, all of that. You got your own dedicated coach for 3 months to help onboarding for any questions you have. If you don't want to talk to anyone, that's fine too. But if you want some extra hand holding and want to hit the ground running, they can be there at your side for anything you require. I can't give you financial advice or tax advice or legal advice, but outside of that, these guys have been with me for 15, 20 years, some of them, and that's all included. Normally, when we do an offer on this, like we did about 2 months ago, for new members especially, we'll do a promotion where we'll package all of this as a new member bonus for only $14.97. But for TradeGiving and a special Thanksgiving Black Friday event, we're bringing back one of the most popular offers we've ever done in the history of Acorn, which is where you will get all of this included for only $3.97. And that is a heck of a Black Friday TradeGiving package. I hope you agree. So the link, I'll just put it in the chat box here for you. acornwealthcorp.com /TradeGiving. Now, in the spirit of TradeGiving, we're going to go one better. You got it, Om. If you get started now, while we are live in the TradeGiving event, because trading is all about executing, right? You see a great trade that meets all the rules, pull the trigger. And I hope you can see, and I'm going to show you some more reasons why in a second, why you should pull the trigger on this. It's much like a great trade. This is one of the best trades you'll ever make because it's a $397 investment one time that should pay for itself many, many times over for the rest of your trading career. Whether you use other systems or you're involved in other groups, doesn't matter. This is something that you can add to your arsenal that should give ongoing value, right? That your other systems should complement. And so if you do take action, we're going to be throwing in an extra special bonus, which is 3 months of our live trading room sessions, first and foremost, every Tuesday and Thursday, which is run from 4 to 5 p.m. Pacific or 7 to 8 p.m. Eastern is our live trading room. And that's where we run our scans, analyze the market, and pick out our favorite trade setups with entries, exits, targets, what the insiders are doing, what we expect the market to do. All of these things that I talked about throughout today are all done live every Tuesday and Thursday. So every Tuesday and Thursday from 4 to 5 p.m. Pacific, 7 to 8 Eastern, and we record those and send them out immediately after. So you'll never miss a beat. And let's say that you don't have time to watch the recording. Not a problem, right? Let's say you work a full-time job, 12 hours a day. Not a problem. All right, so we also take those recordings and break them down into chapters so you can jump in and watch a specific section of the recording at the click of a button. We also break it down into written format, so everything we cover, all of the trade ideas are all broken down into a written report as well. It's emailed to you. So yeah, there's really no reason why you would never have your fingers on the pulse with what's going on in the market from a smart money perspective. And that's intentionally designed that way, right? And on top of that, we also send out our favorite trade alerts, and we're going to be including 3 months access to our Insider Smart Surge trade alerts as well as an additional bonus. So all of that is included if you get started there at acornwealthcorp.com /TradeGiving. And the trade alerts is something where we send out, myself and the other head coach, Greg, we send out our top 5 setups at the beginning of every week. And also we send out other videos throughout the week. And in that, we'll pick out our favorite longs, favorite shorts. It's an executive summary. So it's only five or so minutes long, 5 to 10 minutes long max. And we'll go over exactly what our expectations are in the market based on the rules and 5 favorite trades to trade it. Okay. And so that's where all of these setups that I've been talking about earlier come from. So to take advantage of that, all you need to do is just go to acornwealthcorp.com/TradeGiving. Yeah, you're very welcome. Thanks. Love it. Thanks for showing us. Question, is the scanner an indicator loaded on, sorry, let me just read this properly. Is the scanner an indicator loaded on my computer or on your host? Depends on what program you are on. Drop the link in here, please. Let me just see. I've dropped it in the chat, but I will pop it in the, I'll message you directly with it as well. There you go. Hopefully that appeared for everybody. So it should be in the chat now as well. Or the Q&A, I should say, rather. Let me just get my, sorry guys, the GoToWebinars scrolled me all the way to the very beginning of today's event. And I can't see your questions now. Let me just get the, let's see if I can scroll back down. Okay, while I do that, so I'm flying blind here. I can't, the GoToWebinars hidden the chat on me. All right. So one thing I wanted to just quickly show you is.
I can see the questions.
Thanks, Jeanette. Yeah, there's no little toggle for me to drag down to the bottom.
Okay. Okay, you got hosted on your server. You got that one.
Yeah, so it is hosted in, so depending on what program. So if you're on Wealth Charts, for example, we turn it on through Wealth Charts. We permission your Wealth Charts account so that it'll immediately just pop up in your Wealth Charts user. If you're on TradingView, you let us know what your TradingView user is, and we permission it on the back end, and boom, it'll pop up in TradingView. So so depending on what platform you have, we'll give you the instructions on how to set it up.
Okay, someone's saying their order isn't working properly online. They need a phone number. Is there someone they could call?
Absolutely. Just shoot an email to. Yeah, I'm slowly scrolling down. Hopefully that'll pop up.
I know it did that to me earlier, and I had to move it into put it back into the grid and then bring it back out, and then it finally let me scroll. It was a pain.
Yeah, it's I'm scrolling, but it's just, oh, okay, I'm finally to the bottom. That took 5 minutes. There we go. If you just pop your phone number and email into the chat box, I'll have one of our team get in touch with you as soon as we shut down here in a few minutes and get you all set up if you're having a problem ordering online. Okay. Okay, I'm back. I've got the questions now again. Thanks, Jeanette. Thanks for jumping into my rescue there.
Yeah, I got it.
And so I just wanted to talk very briefly about the trade management side of this, because there was a question about what kind of win to loss ratio do we expect, or success percentage. Let me tell you why that is the least important thing you should ask. I don't mean to challenge you, by the way, head on like that, but it is so important to understand that trading does not rely on simply just how much you win versus you lose. In fact, there is a competition that in fact, do you mind if I just take a moment here? I know it's that TradeGiving weekend. Mind if I answer this question?
Go ahead. Go ahead.
I just want to be respectful of poor Jeanette's time. She's been here all day, and she's keeping it keep trucking for you guys. I just want to share something really, really fascinating, if I may. So let me just pull this up. There is a competition that TradingView runs every few months, and they call it the Leap. How many people have heard about this competition called the Leap? So it's a fascinating window into the reality of retail trading. Every 3 months, 60,000 traders join this competition. These aren't novices. These are people in the TradingView community that are educated traders using technical analysis who should know what they're doing. You know, they all compete for prizes, and the results are sobering. Out of 60,000 traders, I believe it's something like 95% of them don't even make 1%, right? 60,000 people, only 3,828 managed to achieve a profit of more than 1%. And that's in roughly a month. In a month, right? Isn't that crazy? 95% of 60,000 educated and aspiring traders can't even make 1% in a month. That's representative of what most people's experience is in the market. I'm sure everyone's been there. Maybe you're there right now. And if you are, you know, this is why when you look into that data and you look at who the best traders out of 60,000 were, the 5th place getter, okay, yeah, they got it right 93% of the time. Out of 14 trades, 13 were profitable and only 1 loser. Okay, I get it. They made 8.3%. Good for them. But now look at what happens when you go to the 4th place. The 4th place, the 4th best person out of 60,000 got it right 63% of the time. 15 winners, 9 losers. Look at what they did well. Average winning trade, $1,400. Average losing trade, $124. So even though they only got it right 60% of the time, when they got it right, they made $1,400. When they got it wrong, they only lost 124. Great risk reward. What about the next person? 64% correct. Right? Average win, let's just call it 1,000. Average loss, 238. So that's a risk reward ratio of roughly 4 to 1. Right? Divided into 4.5 to 1, 4 to 1. So they got a great risk reward ratio, even though they're getting it right 60% of the time. Well, what's even more fascinating is if you look at the 2nd place, the 2nd best trader out of 60,000 people over 47 trades, only got it right 38% of the time. In other words, got it wrong most of the time, but they had great risk reward. $1,600 was their average win. 193 was their average loss. So let's call this an 8 to 1 risk reward ratio. If you just divide it by 2, 8 to 1 risk reward ratio. And with an 8 to 1 risk reward ratio, they got it wrong 62% of the time and beat 59,998 people over a high number of trades. So isn't that amazing? And so when you look at the habits of the most successful traders in the world, it's not about just having a high win ratio. That's just one piece. And this is one of the highest probability patterns that we offer. We do expect the smart surge to be correct, depending on market direction, conditions. Well, obviously, any past returns not a future guarantee, as I said earlier. But we expect a win-to-loss ratio of roughly 70%. I've seen it as high as 85%. But that on its own means nothing. What you also need is risk management, great risk-reward ratios. So why this is a system that really works, right? This is why this is a system, not just an indicator, a system, not just a scan, is because the system is built to hit all of those things: probability, profitability, risk-reward ratios, and predictability, being able to find it. And so here you can see that come full circle on the chart. Thursday, this is the two trades we took recently, XFOR, TLS, right? Just quickly, XFOR, great example, 1, 2, 3, 4, 5 days in a row. And we alerted that to our members, hey, if this breaks out, as you can see, the system alerted, if it's above 350, this should shoot up to at least $4.50 with a max target of here. And because we had that system allowed us to pre-program before we even got into the trade where our entry was, where our target was, and where our stop loss was. So before we've even got a single red penny in the trade, we've already defined our risk and our reward and our probability from the pattern. Now we're trading with a system. And so if you take a look at things like those results I showed you from TradingView, that's only possible when you have a set of rules you can just go out there and do over and over and over and over and over and over again. And that's what this is. Right, so as that stock rallied 1, 2, 3, 4 days, it took 4 days to go from the entry to the preset target. And while I was sleeping, because I'm in Australia, I'm asleep when the market's open. So all of my trades are programmed to be automatic. And I woke up one morning and saw that it had hit the target 4 days after entering for a $6,538 profit. So is this worth $397? Well, to me, in this trade alone, it's worth 20 times that in one trade. And this is now something you've got for the rest of your life. In fact, this is a great example of one that I've got programmed in right now. So after hitting that first target and profiting on that $6,000 or whatever it was over 4 days, we were out, and then I saw on the weekly chart just recently, it was alerted again. 1, 2, 3, 4 weeks in a row. And we looked at the system, looked at the rules, and you could see here, it's not quite ready to get in, is it? At this time, this is in the middle of November. This is what the chart looked like. So what we did is on that day, I programmed in my trade. This is still live right now, pending. Maybe even triggered today, I wouldn't know. I haven't checked yet, but XFOI, you can see, is pre-programmed in my brokerage account, where this was at $3.54, pre-programmed to buy this, 2,000 shares, if it goes above $4.56. Pre-programmed to buy it between $4.56 and $4.59. Don't pay more than that. If it jumps up too high, forget about it. Pre-programmed that if it pulls back to $3.93, to sell it. So I've got my risk management defined. I'm risking 60 cents, and pre-programmed that if it rallies to $6.93, to then sell it as well. So everything from my entry to my stop loss to my profit management and target is all pre-programmed 3 weeks before it may trigger. And that is a system. 60 cents of risk for a $2.40 reward. You know what that is? That is a 4-to-1 risk reward ratio. Much like I was showing you with the most profitable trader in the trading traders in the competition. Do you see what I mean? You can see this is all coming together as a system. TLS was the same thing. Beautiful smart surge, beautiful rally. We made some great money on that between those two, even just over the first days. It was great. All from the smart surge scan. And so what this ends up looking like, you know, smart surge, you'll love it. But what this ends up looking like when you are in a portfolio of smart surges is a little bit like this. So this is a screenshot I took a few weeks back, or however long ago it was, but there's when I was in TLS. So you can see that every stock in my portfolio says 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 stocks in showing the screenshot. That may have even been more further down. Every single one is programmed in with an entry, a target, a stop loss. And so when things go in the right way, and smart surges, generally we're expecting those first couple of days, 3 to 4 days, boom, out of the gate. And in an uncertain market, what that allows us to do immediately, very quickly, when it goes in the right direction, like this one, we had 2,000 shares. I bought that at $6.03, right? $6, $6.03. It was at $6.74 within those first few days. Okay, what am I going to do? Well, you can see my original stop loss was at $5.73. So I had a 30-cent risk. My target was at 7.43. So I had a $1.50 reward roughly for a 30-cent risk. So a 5-to-1 risk reward ratio. Aha, there comes the system again. Risk management again. And as it popped and went up that first 12%, took some partial profits, right? Sold from a 2,000 shares, sold 800 shares. Now I'm down to 1,200. So I've locked in a profit of 12% almost immediately. And then I've moved my stop loss up. Look, 619. So I've gone from 60 underneath my entry. My stop loss is now above what I paid for it. So I've taken a profit. I've taken a win already. And with the remaining 2/3 of the shares, I've moved my stop loss above what I paid for it. So if it stops out, it's still a win. And if it keeps going, it's an even bigger win. And that's a great position to be in and that's what smart surge is, why they're so powerful. Because if your stock can succeed at that first level in those first few days, this allows you to protect your capital, and regardless of what the market may do or that stock may do next. And as I said, the first period of that trade may be that it stops out, and that's a great thing too. Because if I bought one of those stocks that isn't going to pan out, one of those few that's going to be a failed trade, I don't want to wait 3 months to find out. I'd prefer to know in those first 3 to 5 days about that too, so I can move my capital over into something that into the next one, something positioned to make me money. So there you go. Pretty awesome. In your scan, is it showing any new trades? Absolutely. We just recommend. In fact, if by jumping in right now, with that TradeGiving bonus that I mentioned, as long as you take action here in the live session, we just published our December. Once a month, I do this thing called Johnny Rockets. Johnny Rockets favorite longs for the month ahead. And that's a big bonus we just gave all of our members. You'll get it too. I just published it 2 days ago with all my favorite longs. And there are some beauties in there. RLMD was a recent one we had shared, which I'm still in. But the RLMD, as you'll see in the Johnny Rockets report, that was a smart surge here back in August at 76 cents. I'd taken profit on it recently. And just got back in this week, but that one looks good. We've also got some powerful short squeeze setups in that Johnny Rockets list that also have smart surge signals on them as well, and insider buying. Heavy short squeeze, huge insider buying, and smart surge. These are really special. So yeah, on top of everything that you're getting, you're also going to get a very special Johnny Rockets watch list, which we just published to our members just a couple of days ago. And those are looking really, really good. So another reason to take action on the link on the screen, acornwealthcorp.com/TradeGiving. Okay, I think I've probably talked enough, but I mean I could sit here and talk all day long if you let me. But of course, for that you can jump in, and you'll be with me every Tuesday, Thursday, and I'll be sending out a special Thanksgiving weekend report for the week ahead on top of those trade watch lists that I just mentioned. Okay, Thomas,
Go ahead.
Go ahead.
I said, Johnny, I'm here. So I don't know if you're wrapping up or taking another question.
Oh, yeah. Let me just have a look. To Thomas, I've got your email. Great, Deborah. Okay, so Thomas, I'll have someone reach out to help you get set up. Thomas, yep. What can we have? Sorry, Jay. Can have someone reach out and help you get set up as well. And are those both requests to do it over PayPal, or just to set up over the phone? Okay, and Deborah, I believe you requested first, so I'll make sure that you're first in line, just out of respect to that, and Jay right away afterwards. Okay.
All right. Okay, I've been trying to grab some of these and send them to you too, Johnny, the people that are having trouble placing their order online. So I've put them, I've slacked them to you.
Wonderful.
All right,
I
I'll tell you
am
what I'm gonna
seeing-
do.
And I am
What?
seeing the registrations come through, by the way. So John M, Dale F, Nadine, welcome on board. Benedict, Brian, welcome on board. Gallagher, welcome on board. BH, welcome on board. So and I'll and we'll help anyone having an issue in just a moment. Sorry, go ahead, Jeanette.
Okay, I was just gonna take back over for a second, do my final drawing, and then if you want, if the questions are still coming in, I can turn it back over to you. Unless
please
you just
go.
want to call it.
Oh, absolutely. Yep.
Okay, all right, well, let me do that then. I'm gonna take the power back real quick and you can just hang out. I'm doing that now. All right, everybody, while you're over there trying to make your purchases for Johnny, Johnny, this is my due diligence to close it out. So close your eyes and your ears. Pretend you're gone. Okay, everybody, there's John's offer. It is acornwealthcorp.com/trade-giving. He's been posting it and repeating it. And this is the part where I need you to rank him. And I love my regulars that are in here. They already know to do it. Go put some numbers for me in the questions box, 1 to 10. 1 means he needs a butt kicking, and 10 means he's out the park, baby, out the park. Now, as you put your numbers in there, if you're new to Trade Thirsty, you're going to start receiving daily video content from our list of trading experts. Those emails will come from Trade Thirsty. They're in my house. My family works for me. My sister actually sends those emails out every day. She vets them, looks at the content, makes sure it's going to be good and fresh for all the people that are on our list. And that's also how you're going to find out about events like this. So we hope that you will join us on our journey to becoming better traders. And we're going to do our final drawing before I give it back to Johnny. Today's grand prize is going to be the 18.5-inch travel monitor that I bought to give away today. We've got a stock buyback newsletter from Financial, and we have access to my NASDAQ Warrior class, totally on demand futures training. Plus, bonus number 3 is going to be extra swag. We'll send you a t-shirt, mouse pad, pins, a hat, and a laminated trade tracker. So we're going to do all that by spinning the wheel. And what I've done is I've gone back through over the last couple of hours. And if you followed along, you were asking questions, you responded to anything, I grabbed all the list of people that have put a question in the chat box today. I threw them into this fun little wheel of names and said, this is how we're going to randomize it. And I'm going to pop it over there real quick, and then we'll see who our winner is. Let me go back to my share, which of course is always tricky. Here we go. Stop share. Wheel of names, where are you? All right, here we go. 3, 2, 1. If the person is not present, if they've left, we will give it to someone else. Ninka was so close. All right, Nin, if you are in the room, please let me know that you're in the room. We're gonna give it a 5, 4, 3, 2, 1 countdown. If it's not claimed, we'll spin again. I'm looking. We're getting a lot of 10s. We're getting a lot of 10s, Johnny. Good for you, buddy. Nin Ka, are you in the room? If you're not, we're going to spin again. 5, 4, 3, 2, 1. All right. And then what's the left? Well, let's do it again. Get you a sip of water, Johnny. I think they're getting fired up over here.
I do. I ran to the fridge and grabbed it.
All right. This is totally randomized, y'all. You did win. Are you in the room? Narayan. We're going to give you a countdown. You got to tell us you're still here. Okay. Is in the room. Second question. Are you stateside? If you're not stateside, that's my disclaimer for all mailings. I'll give you some digital stuff, but I can't be shipping to you. All right, New York, baby, that's a winner. Okay, all right. Put your mailing address and your email in the questions box for me, and we'll reach out. All right, this was fun, guys. All right, I'm gonna give you back the power, Johnny. One more time. Wait, before this is also closing out stuff I have to do. Let's do that. And now let's go back to this. This is for everybody who was here with us all day today, asking for a list of all the links. Take a quick screenshot of that because it's about to disappear as I give the power back to Johnny. And we hope that we'll see you on the next one. You guys stay involved, stay educated, and stay right here with my man Johnny because he will not leave until the final question gets answered.
Beautiful.
All right, Johnny, I'm going to turn it back over to you. And then I'm going to go get a beer. Is that okay?
Roll Tide roll.
Roll Tide roll. All right, you won't hear from me anymore. It's all you, baby. I'm leaving the room.
Beautiful. Well, yeah, I'll stop the recording here, and I'm happy to take some more questions.
You can let it roll. I'm streaming live on YouTube too, so I'd like to get, if you're going to keep asking questions, I'd like to capture it.
Beauty. People ask about. Let's have a look here. Johnny got timed out. Oh no, I'm here. All right. So
You
let me
can
just
share your screen, Johnny, if you want.
So people asking about. All right, okay. Thanks for all the setups today. You're welcome. I thought that was directed at me. I'm in Jamaica. Could someone from Johnny's team call? Yes, I think Jeanette, you were passing that over to our team already. It looks like I was going to send that to Colin. I saw that he already had it. I'm like, wow, what efficiency we've got going on today. All right. Results. Yeah, look, I mean, I love this strategy. I love this strategy. What my results are, it will differ from what your results might be. Some people like to trade options. Some people don't like to trade options. Some people like to go to trade stock. Others don't. I trade a little bit of options, but I do have a larger account size. So I usually prefer stock, especially if I'm going long. And if I'm going short, typically if I'm short, I'll mostly trade options if I'm short. But I'd probably guesstimate I'm 80% long. I'm a long bias, but just because there's more money to be made to the long side, even in bearish markets. Even in bearish markets, you get some of the most powerful and aggressive short squeezes and short covering rallies. In fact, the most fantastic rallies you see are often in bear markets because of that phenomena. And just remember, look, it's not a matter of what the market's going to do tomorrow or next week. The market will crash again. It's not a matter of if, it's a matter of when. The market will rally again. It's not a matter of if, it's a matter of when. So what matters is not what the market will do tomorrow. What matters is, do you have the right tools to be able to go with that volatility and profit from it? So, I mean, everyone's going to have a different level of comfort and risk, but I'm quite happy to share some of the results from my portfolio this year. This is a screenshot. I don't have all my portfolios up. I manage a few different ones because I like to separate out my trading, but here's the ones I got handy. This is one of our trading accounts. So this is mostly stock and in Interactive Brokers. I took that screenshot in July, from January 1st to July 26th. As you can see, compared to the S&P 500, the S&P is green. So our portfolio 80% compared to the S&P 9.36. In my personal retirement account, self-managed IRA, self-managed RSP is what it's actually in Canada. We did 54% over that same time frame, going long, stock only, no options. Fast forward to 23rd of September, that account was up to 60.99% for the year. October 66.75, and here I just took the screenshot while Jeanette was talking. So as of today, the time-weighted return from my retirement account, my self-managed account, which is again swing trading / investing. It's not trading, day trading, not buying and selling every day. As of today's close, up 93% for the year, which compared to the S&P 500, outperforming it by a substantial factor. Now, if I was doing more options or things like that, of course that could be more. But this is I've only got one options position in that portfolio currently, and the majority of all of those are stock and cash, and almost all longs. So I mean, that's what I've done with the system and our trade ideas this year. But of course, but past performance doesn't guarantee future results, and individual results may vary. You might be better than me. You might be more aggressive. That's fine too. But for transparency's sake, I have no issues talking about trades I'm in, and also trades that don't work out. Talking about failures too. You'll see me do all of it in Trading Room, because ultimately, if you're for long-term success, it's not just about how the winners go. It's also about how you manage the losers. And in the most profitable trading strategies in the world, even some of the ones I showed you today from TradingView, some of the most profitable strategies in the world are only right 50% of the time, right? So when you've got a strategy that has high probability and good risk management and all of those kinds of things together, now you're really cooking with dynamite. Although I'm not using that phrase correctly. I'll show you another trade I'm in right now, ILMN. This one I just bought at the beginning of the week. You'll also see it in the Johnny Rockets list if you get started today. And there you go, ILMN. You can see this beautiful smart surge, 1, 2, 3, 4 days in a row, right? So I've got my stop loss on this at 124.93. We just moved it up, so you can see my risk on this trade is 2.66% stop loss, a 2.66% stop loss. My target, which is, I believe, is at 152.73. Just have to lower that a little bit. My target at 152.73, which is where the smart surge system target is therefore represents, that's the first target. It could go higher. But so the first target that's programmed in right now automatically represents an 18% potential profit. And so you can see at this point in the stage in the trade, this now is offering a 7-to-1 risk-reward ratio from entry price to and stop to target. Right. So in every setup that I do, and every setup I talk about, you won't just see me talk about the smart surge. You won't just see me talk about the insiders. You'll see me talk about everything from the risk management all the way through to why I'm going stock versus options or vice versa, because it's more than just sharing a hot fad or a hot stock tip. This is about creating value and systems that last a lifetime. And that's, of course, where Acorns got its name. From little acorns, big trees grow. And the best time to plant an acorn is 15 years ago, but the next best time to plant an acorn is today. So no matter what systems you're using right now, I believe that no matter what other indicators or programs you may have been involved in, this is something that can truly beneficial absolutely everyone as an addition to what you're doing, or you may find that, hey, this is something that you really like and start trading exclusively, as many of our clients do. So there we go. Am I in Canada? I usually am. I will be flying back to Alberta, in fact, where we normally live in Canada, in just a few weeks. So it'll be a white Christmas for me. But I'm in Queensland, Australia, right now. But I'm a Calgarian when I'm in Canada. All right. I want Johnny's subscription. Yeah, well, you got it. You've got the best version of it. The Thanksgiving special, acornwealthcorp.com/TradeGiving. All right. So I just wanted to share a few of those little things in the overtime, as Jeanette's graciously given us. And there's the link on the screen. All right. Johnny just purchased the package. When should I receive the email? Almost immediately. It should come within about 2 to 3 minutes. So if for any reason, let me tell you what to do. When you get your email, the welcome username and password, log into the members alerts, log into the members portal, go to, if you want to catch up on everything that that I've talked about, all the stocks, market conditions, and the sectors. We did a really, really, really awesome trading room on Tuesday. Go and watch the Tuesday trading room recording, because in it there is all of our new trade ideas. There's a watch list, the TradeGiving Thanksgiving watch list for December's Johnny Rockets list. There's a link you can click in that recording, which will copy my entire watch list straight to your computer. You can download it. If you're on TradingView, you can import it with a click of a button. So you don't have to do any manual labor at all. So yeah, watch the Tuesday trading recording, because it covers everything. And also we dive into each of the sectors in the market, where we expect each of them to go, which are the stronger sectors, which ones we would avoid like the plague, expectations of the market going into December and 2026, favorite trades to trade it. It's an end of the year thing we do, and so this is a really great time to be an Acorn member. So if you're signing up today, and I see many of you are, just go straight into that members portal, click on trading room recordings, and go to the Tuesday trading room recording and watch that. That will bring you up to speed on everything regarding the current market conditions and all of our favorite setups. So a great way to hit the ground running with the Smart Surge. What is the link to TOS? Sorry, is the question, does it work in TOS? If you're asking about if it works in Thinkorswim, it does. So when you get your welcome pack, simply reply to that welcome pack with the program you want to get, program or programs you want to be set up on. And in the case of Thinkorswim, it's really easy. We send you the link to put into your Thinkorswim, which will permission your indicator. And there's a video specifically on how to set it up with Thinkorswim and use it. So no matter what platform you're on, there is a special welcome pack specific to that platform to make it super, super easy. Someone asked me about my thoughts on Tesla, I believe, and so I'm happy to take those two questions as well. So firstly, Tesla. Not a fan. Let me just have it. Yeah, I'm not a huge fan of Tesla as a chart. That's not anything to do with Musk or the car or anything like that. But as you can see, we've actually been analyzing Tesla. That we've been talking about it in our trading room, and we saw this as a rising wedge. Right, if you just complete those lines, they point towards each other. A rising wedge is a bearish pattern, much like an upward channel is, and much like an upward channel, we expect after 3 touches, 1, 2, 3, that this is then time for a breakdown. And so after those 3 touches, the rule of 3, breakdown, it did. And so that breakdown has then rallied back into the resistance zone. So for me, I'd be a pass. Now that's not to say it doesn't go up. Maybe it does. It's just, but the most important thing is not what I think will happen. It's what do my rules tell me will happen. What do my rules tell me to do? So from my perspective, it's rallying into resistance. So it doesn't have all of the perfect things I'd look for in a long, but so too, it doesn't have all the perfect things I'd look for in a short. So I wouldn't short it either, because it's not a perfect storm for a long or a short. So to me, it's just a pass, right? Because that's something we're really big on. It's not about, when I look at a chart, don't ask yourself, what should you do with it? The first question you should ask is, should you do anything at all? Again, there's only 8 out of 8,000 stock today that are good enough for a smart surge. So just think about that. Think about how much noise is in the market that is not a high probability trade. And that's what we're trying to help you here with, is giving you the tools, strategy, and insight to find quality over quantity. Amazon was another question. Amazon was actually another one of the setups. Well, I mean, we talk about these all the time, but Amazon was something that we had warned was a short, and because it had overextended, and also it was part of it was the weakest sector. Tech was the weakest sector. In September through October and November. The tech sector had the heaviest levels of insider selling than any sector in the market. Again, you'll see me talk about that in the trading room recording that I've been suggesting is a great place to start to get caught up on live events. But then you throw in the pattern, and you can see that you've also got this upward channel. Now, would I short Amazon? No. But what we did do is we shorted chat. I mentioned this to you. Now, so why did we short chat? And for chat, I bought puts, right? I bought $61 and $60 puts on chat. And why? Because chat, which is the AI and technology ETF, was this beautiful little head and shoulder, but more importantly, had a short-term smart surge. 1, 2, 3, 4, 5 days in a row, and dropped from whatever $63 down to 55. So traded puts on that for kind of short in and out, and that's rallying to resistance as well. So we'll see if that breaks through next week or not. But that'll be a key leading indicator, of course, of the overall health of these types of stocks. This is also one we discussed in our trading room as well a few weeks ago. So, and you saw that in some of those trade results I was showing you. Let me show you one that I lost money on. So, but I haven't lost money on it yet. This is a winner. Okay, hello. For some reason, I thought that had stopped out today. No, okay, so this is actually not an example of a loser. This one's a winner. This is one that we're still holding puts in. Okay, hello. Head and shoulders, not a smart surge though, but one we had alerted at 112, and I hold the $100 March puts or something like that. I can't remember which strike price. This is an example of one I lost money on though. Now, this is one that originally when we alerted this, it was at 114, and I got really greedy. I broke my own rules. And I shorted the stock with 4 times more than I would normally, which meant that the amount I stood to risk if it didn't work was 4 times more as well. So I was breaking my risk management rules, knowingly so. Got greedy, and so I thought, oh dear, I'm not willing to lose that much on one trade, so I'm going to put the stop loss really tight. And I put the stop loss really tight, and I got stopped out almost instantly. And in fact, I talked about it in our trading room the very next day about how I'd broken my own rules and what I did about it. So I gave myself a rap on the knuckles and said, that's why you got your rules, Johnny boy. And I got back in. And I got back in with the correct amount of position sizing. And this has been a profitable trade, and then profit on both the puts and the stock short that we hold now. But this started off as a loser for one reason, that I had broken the risk management rules, and that's why it's so important to have a system that holds you accountable. Yeah. All right. Just got my order. Great. I just now need to put it in wealth charts. Fantastic. Just reply back that you are on wealth charts, and our team will get you started. Deborah, I'm guessing that's you, but I don't see your name in the chat box. If you haven't received your email, what I'm guessing is that maybe you're on AOL, or maybe you're on something like that. There's about 5% of email addresses need to be manually approved with the system, because they just they got weird things going on in their back end. But okay. All righty. I'll leave you with one more TradeGiving setup. How about that? This one is just to finish things off. Here's another setup. This is from our Smart Surge Scan, UPS. Now we're not in UPS yet, and it hasn't broken through the key resistance we're looking for yet. You'll see the trade setup discussed in exactly what we're looking for it to go from a wait to triggering a yes from our Smart Surge rule standpoint. But UPS, United Parcel Service, this is one that's on our watch list for December, Johnny Rocket's watch list. And we found it from the Smart Surge. You can see 1, 2, 3, 4 signals. But what's really interesting about this one specifically is if you go back and take a look at the weekly chart, all the way back to March of 2020, you can see that the last time it hit this level, it began its a rally to here, 102, and then when it cleared 102, we saw a rally to 163. So you can actually see, this is algorithmic. This is where smart money sits and algorithms buy. Right? This isn't people. This is systems, it's algorithms, it's what we track every single day and what every one of our systems and indicators is built on. And so where did this rally from? Same price to the same place. Same algorithm on repeat. Boom, boom. So the next stage of this that we're waiting and watching for is if this does break to the next level, this may be something that we get into for a rally to at least 120. And from there, if it breaks that, we could see move to even 162. But before we get ahead of ourselves, I thought you might enjoy that because it's fascinating because a lot of analysts, a lot of people don't go back and look at what where these patterns and systems have been, as far back in this case as 2019, 2020. And absolutely, it is still relevant. And so these are the kinds of things that with the scan, it finds for us, these little diamonds in the rough and or those needles in the haystack, or as I like to call them, Smart Surge systems. So I've enjoyed my extra time. As I said, I could keep talking even longer, but is this a one time? Yeah, yes. This gets you absolutely everything. The Smart Surge scanner for life. The Smart Surge indicator for life. 3 months of your own personal one-on-one coaching for you to use at your own discretion. They will reach out and introduce themselves, and they're there for you to use as much or as little as you like. Some people love jumping on the phone and getting help, and others like to do it on their own, and that's fine too. Whatever is your style, whatever floats your boat, as they say. It is there, and if you need it, and people love our support, it's great. They care a lot. You got the Advanced Flags Masterclass, and that is included for life as well. All of that is for life. So Smart Surge program, no annual fees for that, no monthly fees for that, nothing at all. It's yours for life. All of those things there, all for $397. And as a bonus, if you're starting in the live event right now, or if you've already joined in the last half an hour or so, we're including on top of that 3 months access to our trading room, 3 months access to our live member alerts and insider alerts, which is an additional $597, $600 in value. The alerts and trading room are normally $197 per month. We're giving those to you for 3 months complimentary, which is plenty of time and plenty of ideas and plenty of alerts for you to see how much you can leap forward result-wise or confidence-wise and knowledge-wise, having us at your back. Beyond that, you may not need the alerts and trading room at all. You might want to just go it on your own, and that's fine too. In fact, that's the education and things that are involved are that good that you could do that if you wanted to. And if you decide that you really value having the extra support and alerts from us, the other great thing about this is you get grandfathered in at our legacy pricing, our Acorn Friends and Family rate. So if you continue on, instead of paying $197 a month, it's only $397 a quarter, or $97 a month for alerts only. So you get a substantial discount on the ongoing alerts if it's something you decide to continue with beyond 3 months, and that's completely up to you. All right. So yes, watching for a long on UPS, but the full details of what I'm watching and what we're looking for to occur will be covered in the video I mentioned, the Tuesdays trading room reporting. How do you determine when to exit a trade? All covered in the material. So there are very specific rules that we use. That it is not guesswork; it is rule driven, right? As any strategy should be. If it's teachable, it should be programmable, and there really is no reason anymore these days, especially with all the technology that we have, that you'd have to sit around waiting, watching the screen to figure out when to sell. You know, that these are things that we can program and automate, and the exit and stop loss rules, all of that is covered in our onboarding material. Okay. Benedict, email to customer support. There's email support, phone support, WhatsApp support. We can even jump on a Zoom session and share screens with you and see what you're seeing and help you that way. Whatever works for you, we've got it all. Probably got too much of it. All right. Wonderful. Great as always. You're very welcome. Well, guys and girls, I've thoroughly enjoyed this, and I hope you have too. And for all of our new members just joining, welcome on board. And of course, Jeanette, I hope it's gone by now to crack that cold beer. I'll continue with my hot tea or cold tea now. But it's been a thrill. Happy Thanksgiving, happy Black Friday, and hope you snag yourself a great deal today, whether you join us or not. It's been a wonderful day, and I can't wait to see many of you on the inside. With that, happy trading and enjoy your weekend ahead. Cheers.